Morning. Sorry, didn't realize my mic was on. It is June 14th. I was just banging on it, seeing what was causing it. June 14th, we're going to be streaming stocks, options, futures, and looking at some technical analysis. Listen to Jerome Powell. Maybe a court hearing here or there. So yeah, sub up, like up, comment down. Happy Money sticks around. Follow us on Twitter at HappyMoneyYT. And jump on our Discord server. Link for those are in the description. And Discord is pinned in the comments. Sorry, my mic got unplugged and then I plugged it back in. I forgot that I think it just automatically goes to on when I plug it in. I plugged it in and then I was watching my levels and I just started banging on stuff to see like the kind of feedback I get, I guess. And I wasn't thinking, oh yeah, I'm streaming. So you guys are hearing the feedback, all bangs and pops. Sorry. Nickel's up 12% pre-market. Yeah, this chart, it did look good. Good rally. I like Run's chart a lot too. Kind of late to the game here on that retest, but this is a longer term breakout, looks like me. Good morning, John. Morning, Hugh. Doing good. Really well rested. I think I slept all night, which is crazy. I'm usually up at some point during the night, but I think I actually slept from when I closed my eyes and didn't open them up till it's time to wake up in the morning. So yeah, feel good, feel rested. You guys said there's an 8K on barbecue. We've got Powell today. We've got a court hearing. If you guys have a link for that, if you could please share it. I closed that tab down in hopes that my Chrome will not lag out. I have the paste. I have my MX Arctic paste. I just need to do it on the CPU. I'm not too confident that'll be the issue, but last time I looked at it, there was a little bit of a burn spot on it. It was pretty small, but yeah, what the guy was saying on the TD show, like how Microsoft is throttling Chrome. That's a very interesting thought. I've not considered that before, so maybe I'll try another browser and see if there's any merit. Morning, David. Morning, Ace. Morning, DIY. Another barba coding day. Morning, Aware. Morning, Cameron. 10K just shows declining revenue of Bed Bath & Beyond, resulting in losses. Oh, is that like, that's their 10K, that's their earnings in? Right? So that's it. We got their earnings. Morning, Molava. You can't send links on YouTube's chat. You can on Twitter. You can always put them in our Discord too. I'm showing barbecue's down 4%. Potentially in pre-market. So basically they released their earnings. Is that the right understanding? Beyond's still holding up, look at that. Oh, yeah, it looks like E-Trade's saying it's down 8.75% pre-market. DD is saying it's down 4%. Or no. Yeah, 4%. The Germans, they always say it's down 9%. Germans are saying it's down 7.5, so it looks like we're going to be having a little gap down here on barbecue. Thanks, thanks, David. 10K. Yeah, this is the earnings, right? Quarterly. Is it different since they're in chapter 11, or is it? Yeah, this is totally different. This is just a normal 10K. Or no, this does have financial statements. Talking Horse deadline is passed. Bid deadline is 18th at 12 p.m. Interesting. Auction, if applicable, June 21st. Did they have to release their financial statements now that they're getting bids and stuff? Notice of successful bidder as soon as reasonably practicable after the conclusion of the auction. As soon as reasonably practicable. Practicable. Don't get me started on practicable this morning. Practicable. Practicable. That's fun to say. Francisco.
Practicable.
Practicable. As soon as reasonably practicable. After the conclusion of the auction. Sale objection deadline June 26th. That's 2 Mondays. Sale hearing June 27th. Tuesday. And they have financial statements in here, right? Dip credit. Yeah, we'll have to look through this. I mean, I don't know if there's much new in here other than maybe their financial statements that we didn't know about. Okay. Or 27 pages. Keenan, I don't know how I missed it or when. Are you in here, Keenan? This 2 days ago, you gave me a fatty C-note tip. I don't know if that was during stream or like off of stream, but if you're here, let me know. Says love ya, bud, break the rules. I don't know what that was in reference to, but cheers, man. Thank you. Hello, GDM. Good morning. I'm assuming we have a bit of a gap down. Looks like on barbecue from that 10K. Oh, let's see. Oh yeah, I forgot we had a PPI this morning. Okay, let's see. Payments and financing cost me. Talking about on the 10K, Seaman. Is it much new or much out of expectations though? Like they're in chapter 11 for a reason. I guess people that were expecting them to be cash flow positive are disappointed. I don't know if that's even in there. 9:25, we got 5 minutes to open. Practicable. Thank you guys for your thumbs ups, your likes. Pre-market, that's awesome. Got 12 likes. We're going to be listening to Powell today. He's at 2:30. Bad decisions at 2. Court hearings at 11, which we'll try and listen to also. Or barbecue. Reasonably practicable. Reasonably. AGRX is our biggest pre-market gapper. The zip pick was Wisa. I know you like this one, Tree. Oh, that's true. It wouldn't be showing up on this 10K. It'd be for next earnings. If we get next earnings. But it still could be a lot better with how many stores they closed down and everything from the last earnings, right? Ballard Power Shares? I don't know what that is. I think my levels from yesterday. Try and be patient this morning. Shouldn't be a whole lot of crazy moves before Powell. Might have kind of a melt up actually. $10K. Exactly what they told us. Well, that's good then. No surprises. GME is now slightly red on the open. So I'm excited for GME to do something crazy now. We've got the 3 white knights. Great technical pattern there. And we're at that breakout zone, so. Look at the volume yesterday. Solid increase in volume. 17 million. Wow. So, beyond play. Here. Maybe. It looks like we're gonna get a gap down on barbecue. I don't know if we'll sell off or not. Maybe just rally from our gap down. Looks like it's gonna open up down 6.5%. Says it's at 19.99. Not sure if this is true though. Powder music? No, I think that's good at my level. Yawn. Good morning. And I might shut it off here in a bit just to kind of focus. Let's see, where's barbecue? Yeah, barbecue did gap down 8%. So market's open. Got Nikola with a gap up 13%. Chart still looks nice. Buys coming down a little bit. I'd like run to kind of fill this gap. Maybe, and then I might look for a long on that thing. Visa is up 34%. Buy selling off here. Barbecue bouncing up from its gap down. Nikola 14%. For a little gap fill and then a rally on Nikola maybe. Press. Press's chart looks nice. I like that divergence in that gap. Wait a minute, not a divergence? Not a divergence, never mind. Weird, it looks like it is. Oh, it's lower. Still looks pretty good though. Barbecue at 20 cents. Gap down probably from that 10K. GME kind of selling off. With the SPY, it's down 3%. Now my short calls, remember I legged into that, my short calls are up 50%. The long calls are down 40%. So if I was still really bullish, I could buy back those short calls. But since it's weekly, I'm just going to leave it. Toyota's up 5%. SoFi 3. Thing's been ripping. Beyond is kind of flat. Coins down 1%. Dish is up 1%. Tootsie Roll's flat. The bullish, yeah. Yeah, I mean, nothing's changed for me. I guess I could look more into that. They're filing, but doesn't sound like anything new's come out. There's not a whole lot, like, there's a lot of documents and stuff coming out, but to me it's not, there's not much to look in unless there's, I guess, bigger news. Waking up a bit. It could be a very slow day until 2. Nikola. GME down 2.25. Beyond down 2. Now my short calls on Beyond are up 27%. My long calls, they're up 21% today. My long calls are down 6%. So I legged into Beyond also. WTG, recognize that ticker. Yeah, WTG is halted. Big gap up this morning. Ooh, reverse split squeezer maybe, huh? Yes, China. I don't know if I've seen many Chinese stocks that have reverse split. They figured out our trick. Barbecue 1960, it's down 8.25. See if we hold yesterday's level in 25 or so. Bet is up 7.5. GME down to 26.18, down 2.5. After 2 and after 2:30, all this, I mean, you know, this could all change. This could all flip crazy green. Morning shakeout. I mean, this could be a good time to go long on some of these plays, really. Like GME. Might be a nice opportunity here. Or any other ones that have had a big rally the last few days or week that have now just have a kind of a red open. Firm down 6.5. Microvision down 16. Confluent down 8.5. Cinemark's down 5%. AI's down 3.5. Barbecue down 8.5. 1956. GME 2.5. 26.33. GME might be finding support there. Little bounce. Buy's kind of wicking also. Excuse me. Beyond down 1.5. German economy minister says we have to make the energy infrastructure more resilient. Getty's down 4.5. Weiss is holding up pretty well. Pretty good. Not bad so far, 31%. Buy a little green candle in here. Little inverse head and shoulders there on the 1 minute. Above VWAP. Yeah, I guess no gaps to fill on SPY. In 60 barbecue, 8.25. Nicola at $1, just under 10%. SoFi is ripping 6.5. Open doors up 4. SoFi looks really strong though. $10. 7%. Still holding some top. Yeah. I got a little inverse head and shoulders there on the hourly. Need to kind of break out of this channel. $19.60 on barbecue. SoFi up 6 still. You got a little bounce with this move on SPY. Climbing up. Pre-market high was 437.85. It's at 437.18. We're making a cup here yesterday. Doing that. Yeah, new high of the day there on SPY. Above an inverse head and shoulders right here from yesterday. And now I think we're seeing a cup, so retesting that high. Looking for maybe a short entry. Wait for some confirmation. GME up 0.92. Thanks, Cameron. Appreciate it, man. Ooh, SPY's breaking through that high. We'll see. Hearing is today, yeah. I want to grab this short right here even. That's the high on SPY, but futures actually went higher. So I might just watch for the futures high. Since futures, I think, kind of lead. GME's now green. That's the thing, trading. Weeble. I wish Weeble would get the futures charts. I need to just stop looking at Weeble. 20 Archer. Even SPY, like it trades on the futures. Well, looks like we might not be getting a cup there. Get it to reject here pretty soon. MBST up 9.5. There's a gap up there at $2. Visa's actually running a little bit. There's Nikola, yep. All at 14%. Pretty big gap there now. Durka moving TRKA 9%. It's actually, yeah, it's bouncing right on that support. Not bad. Might be a nice trade there on Turka. Wow, looks like it's just consolidating up here. Probably about to keep ripping. Yep. New high of the day there on SPY. We're off. Bought into the wrong stock. Yeah, Carvana's had quite the move. Buy still ripping there. Yeah. Yeah, close my short, I guess. It's a good idea. You know, just consolidating with a big range. Futures are getting close to their highs now. I don't want to watch, see if SPY will reverse when the futures kind of hit a top. Barbecue down 9.5. 1834. Flash some water on it. Wake up. Workhorse is up 5%. Might be building a little head and shoulders up here. Head shoulder. I don't know, with that dwindling volume, just consolidating really. But yeah, do need to see it break 25, I think higher than 2460. GME down 2.4. Barbecue down 9.4. Like to see some support here on barbecue. Okay. Grab the short. We'll see. Might close a VWAP. WISA moving up. Have that head and shoulders now. Kind of breaking out of this channel. It's a little steep channel made this morning. Got that inverted hammer on the 5-minute. And the futures actually hit right on the, pretty much right on this downward trend. This was that wick. So stayed in line. Me down 2.6. .4. Yon is down 3.3. Palantir is pretty much flat. Long time lurker. Yes, you are a long time lurker. 5,000? All you have to do is hold. That's all. That's your only job. Donero. All you have to do for AMC to hit 5,000, it just needs you to commit to holding. Gotta see a barbecue bounce here. Chops up 3-3. VWAP so high. Well, there's a move to VWAP. And it's over. Probably should put a stop on these and let them ride wherever. Probably not gonna get a huge move before like 130 or 145. I mean, really 2, but market will probably start moving before then a little bit. But probably to the upside. That's usually what we see, I feel like. I think we usually melt up into these days. Nice. I mean, all I have to do is nothing and I can have $5,000 a share. It's glorious. Yeah, I just got stopped out on that. That's fine. IEP, yeah, down 4.8. Rally might be coming to an end for now. All these small bodies, they add up to something. Back West is up 1.25. Beyond's down 3.5. Coin's up almost 2. Dish is flat. True opinion. 1.5%. SPY's moving back up there, so it got its bounce off VWAP. Looks like that's all liquidity it needed. Didn't even quite get it. Third bounce of barbecue in 5 trading days. Yeah, off of this level. We shall see. I mean, for them releasing what I think was basically their earnings, not too bad of a reaction. That's an easy target for them to just dump the price. Read some of this here. It says, in conjunction with the company's new strategic focus areas, the company executed plans to rebalance our merchandise assortment to align with customer preference by leading with national brand inventory and introducing new emerging direct-to-consumer brands. Consequently, we announced the exiting of a third of our owned brands. including the discontinuation of a third of of our 9 labels, Haven, Wild Sage, and Studio 3B. We also expect to reduce the breadth and depth of inventory across our 6 remaining owned brands, Simply Essential, Nest Well, Our Table, Squared Away, H for Happy, and Everhome. We've continued to create a more focused portfolio, including through the exit of unprofitable businesses such as Harman, Decorist, and Canada operations. On September 26, we announced Decorist, the e-design platform we acquired in 2017, would wind down existing projects by October 12th. On January 30th, we announced plans to close all of our Harman beauty product stores. I thought Harman was like furniture. Was Harman or like home theater? Is that a different Harman? Discount health and beauty. Huh. Harman face values. Making up another store. What time is GME meeting? Is it today? No. The shareholder meeting? We're gonna have a lot of stuff to listen to if that's today. No, it's tomorrow. June 15th. Always. Always tomorrow. Even the scheduled meetings are always tomorrow. On February 10th, BBB Canada Limited made an application with the Ontario Superior Court of Justice, the Canadian court. Look at all these wicks on SPY, just no conviction. That's financial position realignment. The description of the company's business contained herein reflects the company's operations of its businesses prior to the filing of the Chapter 11 cases on April 23rd. As a result of the filing of Chapter 11 cases, the company no longer has operations other than those relating to the wind down of its businesses and completion of the Chapter 11 process. The company focused on its financial position with the following efforts prior to the filing of the Chapter 11 cases. New high there on SPY. Good thing I stopped out of that play. Had a nice entry though. And the move happened, it was just a tiny move. Tiny little bop to be wop. We're in Powell melt up. Barbecue 1930. I'd see a big bounce here. Or a big flush. LPTV up 3.5. WISA started going again. The pre-market high was 2480 on WISA. It's at 19 right now. I wasn't thinking about extended hours. SPY just climbed back up to extended hours. Which, yeah, I guess that's reflected on the futures. There it is. There's the breakout on SPY. Wow. That's not quite a new high on the futures. That's right at the high on futures. From 614, 435. Why would that be shown here? What? Maybe that's in the morning. Yeah, that's AM. GME's been selling off with this, kind of interesting. Down 3.8, down 4% on GME. Highs kind of breaking highs. That's a new high on the futures. That's a yearly high on the futures. We did it again. Barbecue. Barbecue did break that level. Oh, wicked out of there though with some volume. Hit 1877. At 1940 now. Leju. 14% green. Yeah, I forgot. Monday is off from Juneteenth, bank holiday. That new holiday. In years past, UONE has rallied up into Juneteenth. But maybe that's what this rally was and now it's over. I don't know. Keep an eye on Urban One. There's a lot of volume on it today. Maybe it'll get a pump. Traded this the last few Junes. See this one? Up to $24. This one went up to 13. Usually the runs start by now though, so this was the first one, first time we found it. 2020. Up to $54. Might get a little action. Barbecue 1920, it's down 10%. Looks like it is gonna break through that level. Dang, dude. $17.90 is the next level I have here. If it doesn't hold that 1920-ish. Alright, volume is a little stronger on barbecue. We might just be repeating the same thing here. On the SPY. Coins up 1.5. And profit taken on IEP, it's down 8.7. Volume is probably pretty big on IEP today too, yeah. So look for bottoming at some point, but this could, you know, this could come down and kind of chill out for who knows how long. At this point though, it's bearish. Most likely gonna get an engulfing candle today. So I'm not rushing in to enter a long or dip by this at this point. Might be setting up a head and shoulders here also on the SPY. Wait to see if that right shoulder forms. We just kind of do this same move. Take the long on the break. Yeah, IEP down 9.25. GME down 2.75. Barbecue down 9.97. That looks like it might want to hold up above there. Got some good volume around that level, so might see a pop. FOMC impact on SPY, it's gonna be huge. As far as which direction after today, don't know. Depends on what he says. I'm assuming they're going to pause. And then it just depends on the words he says, the words he uses. If the market interprets it as ending or pause, he confirms, you know, he's not going to confirm anything. But if he indicates they're going to continue next month, or they're going to pause indefinitely, yeah, it all depends on his words. But when it's coming, it's going to just be crazy volatile. Big ups, big downs. Yep, we're getting Powell. J Powell. Pow. 9% for pause. Yeah, he'll stick with that, I'm assuming. They've still never deviated from that, the Fed funds futures. MC's down 1.8. Almost to 5,000 down row. Got to hold harder. Worry. Netherlands. So the interest rate hike decisions at 2, and then Powell speaks at 2:30. Like it might be wanting to break out of this channel again. Make another move up. You may climb back up a little bit to VWAP. Busting through VWAP now. Barbecue 1910. Yeah, this is looking like it's gonna flush. There's some volume on SPY. make another leg up. Stick in this channel. Barbecue. And hard to hold. Berm is down 9%. Palantir down 0.7. SoFi's up 4. Nirvana's flat. Tesla's up 0.5%. This thing is just ready to come tumbling down. Look like a breakout of the channel to the upside. Little retest on it, maybe. Yeah, it's still bullish. Neo's up 1%. A nice RSI divergence here. Kind of at that resistance though. So might fill the gap and then look for a retest. Similar to what's going on with Run. Oh, really, Spy? Really? CCL's up 1.5. This thing's doubled since April. AMD's up 1.4. Got an RSI divergence on AMD. Weakening signal. Nvidia's up 1.5. Pops up 4. Yeah, barbecue's melting down. It's melting. Down 11%. 1901. Look for 1790 maybe. Maybe we'll get some bullish news in the meeting today. That would be neat. There goes SPY to the upside maybe. Breaking out of this range. No. Still consolidating. Beyond's down 3.7. Coin is up 1.7. Need coin over 55. Got a lot of time though. Okay, looks like SPY's gonna melt up again. There it is. There's the break. Look for another pattern like this. See if it repeats. Yeah, we will, Seaman. It's in 40 minutes. Mad that Star Wars not chosen for the entire company. That's interesting. Yeah, because who picks that? It's is it Barbecue's management? Is it the creditors? You got 438.55 as a resistance up there. That's from a long time ago. Back in April. If we're making a little head and shoulders here. Yeah, looks like we're kind of breaking out of that channel. This steep, aggressive channel. Got a head, here's a shoulder. Now this buy has stitches. That's a good point, Cameron. That's funny. Yeah, I mean, how does he know though? He doesn't know what else they have going on. So there's nothing else going on that he knows of. I don't know how I could be upset. EU antitrust lawsuit against Google must break their ad business. Could be getting this larger head and shoulders still too. Shoulder, shoulder, head. Did we get VWAP so high? Probably get a bounce on VWAP. Hey, lords. So you think he knows the bidders and the interest? Barbecue, little bounce there. Back to VWAP. Not really respecting that support though. I moved to VWAP, bounced off it a bit. Here's the 4.5% list. It's coming off the NASDAQ 100. Maybe some rebalancing on it. Yeah, it's maybe the same same pattern here going on. Not sure, but bounced off VWAP there. Didn't make shoulders. GME above VWAP, still down 2%. Nicola consolidating 14.3. That head and shoulders on WISA. Durga coming down. Coming up on 10:30. Guys, for your support and joining me this morning in the stock market adventures. Got 24 likes on the stream. I appreciate it. We have the barbecue hearing coming up in 30 minutes. Then interest rate at 2. Powell, Powell live at 2:30. Be very mellow before then. Wish looks nice. BIS down 22% now. I was building the head and shoulders here, just looking for a neckline break. GME moving up a little bit. 1.6. They wants to continue to get a bull flag. Palantir. It's pretty flat. IEP, I think it's bounced a little bit there. Pretty big sell-off today on IEP though. 6.5%. %93 of CEOs report they're preparing for a recession over the next 12 to 18 months. The typical annual U.S. mortgage payment is 39.9% of the median American's household income. Typical U.S. millennial makes between about $52,000 and $62,000 a year. T-Mobile and Google Cloud joined forces on 5G advanced network solutions. A last Beatles song featuring the voice of late member John Lennon will be released this year thanks to the use of artificial intelligence, said Paul McCartney. That's pretty cool. 71% of men are working full-time currently. In 1980, the number was 85%. German economy minister on need to carry on filling gas stocks. The crisis is not yet behind us. Barbecue kind of just consolidating at the low here. 1920 down 10%. Seems like it kind of wants to hold that as support, even though we did kind of break through it. SP 500 Q1 2023 buybacks again tick up as sector expenditures shift. Buybacks tax reduced operating earnings by 0.45%. Anheuser-Busch Bud Light has lost its top spot in the U.S. beer market to Constellation Brands Modelo. To Modelo? Dude, I had some Modelos the other day. I haven't had those in so long. They were disgusting. They tasted like an ashtray. I felt like I was smoking a drink. It really felt like smoking, like chewing on cigarette butts and sniffing ashtrays. Really weird. Maybe the person that gave them to me smoked. No, I don't know. It tasted like that though. United States PPI month over month was negative 0.3, expected was negative 0.1. Oh wow, it actually wasn't that close to expectations. NATO's Stoltenberg has NATO's not seen any changes in Russian posture that requires change in NATO nuclear posture. Binance's Cyprus unit has applied to deregister as crypto assets service provider in Cyprus. Beyond bounced up to VWAP there. Why am I a vagina, John? Stock rally will end soon, recession will hit, and the Fed won't hike interest rates again, said Jeremy Siegel. Microsoft has projected that open AI products and other AI products will add $10 billion in revenue. Schwab had earnings. Unchanged. Logitech's down 12. Whoa. From earnings. CEO stepping down. $17 ago. Might be a nice cash secured put candidate. I'm moving up there. Amazon is using generative AI to summarize product reviews. Yeah, Modelo's top selling. I had no idea it was that popular. Wild. The bar stopped serving it? That's awesome. I guess if no one asked for it, reason to supply it. High's about to make a new high. IV's still really low on Logitech. New high of the day, they're on SPY. IEP down 7.3. Apron's down 8 now. Oh yeah, this one I got out of. Good. Did I hear Beyond is on Reg Show? Yeah, the borrow fee's up a lot. My borrow desk doesn't show. Where are the options to show like close price and stuff now? They don't have that anymore? The borrow fee on Beyond Meat's at 100%. Started going up on 5/15. Right after earnings. Ripped up and peaked 5/19. Why is that? They had earnings and then the borrow fee just went crazy. From 27% up to 134%. A lot of people wanted to short it after that earnings, maybe. Available shares went down a bunch right then also. Right after earnings. Yeah, this thing's kind of squeezing. Barbacoa and Icon tag teaming you. I mean, you could close it. Ace, you don't have to just keep holding. Unless you are going to try and hold it in the long term or something. Then you should put it with the rest of your long-term stocks and not trade it, not look at it. Or take this opportunity to learn covered calls. Start doing that. Yeah. Barbecues. Kind of holding that area. It's below it, sort of, which isn't great, but I refuse. For suckers to efficiently manage your account. SMX, new all-time low. Kind of a double top here on SPY, maybe? I think we'll see a bounce on barbecue today. US expects series of visits with China in both directions in period ahead. US is for de-risking with China, not decoupling. Goldman Sachs CEO says there will be pain ahead for commercial real estate. CPI increased 1.1% over the last year, the 11th consecutive decline in the year-over-year rate of change, the lowest print since December 2020. CPI peaked at 11.7% in March 2022. Little PPI chart. Into Ulta. Back in it. Didn't have a big move already. Yeah. I mean, Looks good. He's a slow mover, but yeah, could be inclined to a gap fill. Don't really have any resistance. Oh, we do have a little peak over here at 451. But after that, not anything really to that gap. Could take time though. Gaps don't have to fill. And they don't have to fill fast. This would have been a hard one to find an entry. Using my techniques, it would have been... I mean, it would have been not until yesterday, really. GME climbing up there. 2670, it's only down 1% now. Barbecue down 10.8. Ooh. 25% of college graduates don't make more than the typical high school grad. Hey, Damien. Half of the world's biggest companies are downsizing office space amid hybrid working. Sonos reducing workforce by 7%. France is trying to convince Elon Musk to build Tesla's next gigafactory in the country. Blinken to visit China on June 18th. U.S. Treasuries rise after May PPI cools more than estimated. Electric cars will reverse demand for transportation fuels by 2027. Leju, 25%. Visa sold off. Head and Shoulders playing out. Got an engulfing candle there on SPY. Oh, yeah, I'm in there already. We're starting early. I don't know why there's a drop on it. They did release a 10K or 10Q, 10K. So I think it was had some of their financials on it. But it wasn't. I don't know. I didn't read through it. I don't think there's much surprises though. Works it hot. I'm serving hot dogs. Hate the name of AMC. Microvast holding up. Overstock rallying. 8%. This is Stoka's barbecue? Overstock's bid for Bed Bath & Beyond assets could pay off over the long term. Or if this is still just from barbecue hype. I like how Overstock's rallying because of it and barbecue selling off. I don't know if this... I don't know why Overstock's moving. Shoot it. A lot of people in there today. I guess we don't usually just see all of them. Yeah, I saw that they're pushing back, pushing that back. We talked about that. I read that yesterday. Am I repeating the same little pattern? I don't know. There's an RSI divergence there on the 5-minute too. Price action though. What a show. Looks like they're trying to start on time today. Court time. $14 price target. The analysts just move their price based on momentum and supports and resistances, and yeah, so dumb. Yeah, there you go, 14. That's the next resistance. And when it starts to sell off, company sucks. Price target's $4. But they do help push the market. Overstock 7%. Change their price over their calls and puts are striked. Perfect. Now I was thinking about being a congressman and trading full time, but being an analyst is kind of enticing also when you put it that way, Cameron. It's still looking like an intraday bull flag here. See though, MACD did flip bearish. Got that engulfing candle. Could be set up a head and shoulders here also. VWAP's high though. So without a break of VWAP, it's pretty solid bullish still. Truly amazing. Easy, guys. I will yield back my time. I might just raise my hand now. I vote nay on the congressional trading ban. And I yield back. No, guys isn't in there. Overstock going again, 9%. You know, that range needs to break out of, which looks like it's doing it. How's that Sukov's house? The new CEO of GME. SoFi. 4.8 on SoFi. GME's down 2. Yeah, that VWAP is right up there. On SPY. Instead of starting late and not showing anything, they're like, we should just start recording, start the stream on time, or start it early. So it's like we're early, but then not really start until quarter past. Unless I'm just out of audio. No one's talking. It's muted. Nicola, nice bull flag. Overstock, same deal. I'm moving down a little bit. See if we break VWAP here. There have been cases where someone's stalker reports a break-in or crime happening at the place they're stalking. The wicks on the SPY. Kind of knew it coming into it. There wouldn't be probably not big moves until our main event today. TO's down 13%. Recording affects SPY.
Okay, good morning. It is Wednesday, June 14th, 2023.
Well, I'll turn down.
This is the United States Bankruptcy Court for the District of New Jersey. And we are here on the case of Bed Bath and Beyond, Inc., 23-13359.
I'll just keep adjusting audio.
On the notice of amended agenda that was sent out, it looks like yesterday, right around midnight.
A little late.
Yeah.
Sorry about that, Your Honor.
Yeah, 00230. Okay, so why don't we get appearances as you speak, because we have a lot of people appearing on the matter, either here or on Zoom. So please go ahead.
Ross Fiedler of Kirkland and Ellis on behalf of the debtors. I'm joined in the courtroom by my colleagues, Ms. Geyer and Ms. Acuna.
Okay, morning. You want to go through the agenda?
Oh, yes.
Yeah.
Thank you, Your Honor. Your Honor, before we go through the agenda, I'd just like to thank the court for accommodating our schedule and adjourning the hearing to today. We really appreciate the flexibility. Would also like to thank the court for, entering some of the orders we've submitted on a consensual basis to avoid the need for a hearing. So we really appreciate that.
No problem. I consider it my job, so I tried to do my job correctly. That's
Thank
it.
you.
Thank
So, yeah, turning to the revised agenda that we filed last night at docket number 717, you'll note we're only going forward today on the DIP motion on a final basis, the Alex Partners retention application, and an assumption and assignment motion of certain leases to World Market.
Right.
We did adjourn the final cash management order to the June 27th hearing and a assumption and assignment motion of certain leases to Burlington to the July omnibus hearing. As you'll see reflected on the agenda, these matters are largely going forward consensually and uncontested. And we'll get to some of the slim issues that remain, but we are going forward on a consensual DIP order other than one issue with the Texas taxing authorities. And that's in large part to, all the work that's been done by the advisors in this room and the advisors on the phone. So the debtors are very grateful for all the work that's been done to get us to where we are today.
All right, so just for me to be clear on it, I did see the objections of the Texas taxing authorities in Maricopa County and the latest red line that showed the changes that dealt specifically with Texas, but I didn't see something that dealt specifically with Maricopa. But I understood what you were just saying is that you have actually resolved all those issues.
Well, we're actually not fully resolved on that language. We've been working in good faith over the past, 2 weeks with them to get to a resolved language in the order. But we will address that when we go through the changes that are in the order.
Okay.
And I believe the entities that are referenced in the footnote account for Maricopa, but to the extent they don't, we'll make sure that they're in there.
Okay.
So, Your Honor, turning to agenda item 1, which is the final DIP order. As Your Honor is aware, the interim order was entered at docket number 76 after the first day hearing. And at the first day hearing, we entered into the record the declarations of Holly Etlin and David Kurtz in support of the DIP motion at docket numbers 36 and 37. Late last night, we filed the revised form of order at docket 716, which attaches the approved budget at Exhibit B. This morning, though, we filed a further revised order at docket number 718. And to the extent Your Honor doesn't have the red line, I have a few extra here, and I'm glad
I printed it out here. We don't have a color printer, so it's really a black line, but that's
Okay. All right, as long as you have it. So I know we got the order to you quite late, so I'm happy to walk through the changes from the interim order to the proposed final order. But as I said, that form of order reflects a consensual resolution between the UCC, the DIP lenders, and the debtors.
yeah. And I will say I'm very appreciative of the efforts to get to that point, and I'm sure it was not easy at all. So, I mean, I think, when you say walk through the changes, I get a number of the changes were right, reflecting that it's a final order temporarily and all that. So you want to, I would say, using your, discretion as to what is the substantive, more kind of substantive amendments and how they might affect parties, particularly, parties that still have objections outstanding.
Of course, I'll just hit the material changes. So,
and if someone thinks that you did not address a substantive change, they certainly have the opportunity to be heard on it.
Certainly, Your Honor. So the first change is, and I'll just preview this in section G, which are the debtor stipulations. There's some revised language in here to reflect the transition of the agent role into the pre-petition credit agreement from the revolving agent to 6th Street, which is the FILO agent. And just to reflect that transition, I imagine Mr. Hillman for the DIP lenders may want to speak to that, but just previewing that change up front. Turning to paragraph 10, which deals with the reserves. As Your Honor will recall, as part of the interim DIP order, we negotiated with the DIP lenders 3 reserves in an amount of $36 million. That was the priority claims reserve, the Warren reserve, and the wind down reserve. In connection with the final DIP order, the DIP lenders have agreed that these reserves will be released and funded no later than 10 days after entry of the final order. Previously had been upon the expiration of the challenge period. And for that agreement to release the funds earlier than expected and all the other changes in the DIP order, the challenge period will expire upon either the earlier of the release of those funds or July 4th, which was the previous date of the challenge period.
As to parties, other than the, I understood the changes to indicate that the committee challenge is resolved by this, the terms of the stipulation.
Correct. The committee and all of its members have waived its right to bring a challenge, but that challenge period is applying to third parties who get requisite standing.
And I'm sorry, I'm going to interrupt you one more time. Is that when you
Yep.
when you referred to like paragraph 10, and if you could just give me the page number as well, because it's
Certainly.
I see I have it. Page 42, but just going forward.
Okay. Yeah. But sticking with paragraph 10, additionally, the DIP lenders have agreed that the priority claims reserve and the wind down reserve may be collapsed such that we have 16 million available to be distributed in accordance with the DIP order. And so that provides more flexibility for the debtors to release the funds as they see fit in accordance with the order. There's also an agreement that any excess funds in the Warren reserves, to the extent all allowed Warren claims have been paid, will be released to the debtors and unencumbered and to be used in accordance with the DIP order.
Okay.
The last point is there was a reduction in the priority claims reserve by $5 million. This was agreed to between the DIP lenders and the debtors, simply to reflect an increase in the run rate of expenses to administer the cases and the anticipated sales in connection with the wind down. Turning now to the crux of the order, which is the negotiated settlement that was reached between the FILO, the UCC, and the debtors. This begins at paragraph 47, which just give me a moment.
SPY still moving up there, new high on SPY.
Page 103 of the red line. So here in paragraph 47, we've agreed to the inclusion of essentially a marshaling agreement. The concept here is the DIP lenders and the pre-petition secured lenders have agreed to look first to the DIP collateral and the pre-petition collateral as a source of recovery other than certain proceeds of certain specified claims and causes of action, which are laid out in paragraph 60. And so paragraph 60 is really the meat of the settlement between the DIP lenders, the UCC, and the debtors, and that begins on page 115 of the red line. And so this deals with the application of proceeds of collateral as between the FILO and the estate for the benefit of the general unsecured creditor pool. So if Your Honor recalls, at the interim hearing, we made reference to, at the first day hearing, we made reference to certain make-whole amounts that were payable under the pre-petition credit docs to the FILO lenders. And that make-whole served as the bedrock for the negotiated settlement between the UCC and the FILO lenders. And so just to summarize the settlement at a high level, there are 2 constructs for the sharing of collateral proceeds as between the FILO and the estate. And that is on page 116. Basically, the first threshold, which we call the initial sharing threshold, there's not going to be any sharing of collateral proceeds as between the FILO and the general unsecured creditors until 2 things happen. First, the ABL obligations are paid off in full. And second, the FILO lenders must recover $515 million in cash plus interest on account of the FILO secured obligations and the DIP obligations. And a portion of that goes to the make-whole amount I referenced earlier. So once those two conditions are met, then 100% of the proceeds of the collateral will go to the FILO, except with respect to certain proceeds of claims and cause of action that are delineated in paragraph 60. So those include avoidance actions, shipping and price gouging claims, and certain other litigation claims that I won't really get into, but I'll refer to those as the specified recovery baskets. So with respect to the proceeds of those baskets, there'll be an allocation split between the FILO and the general unsecured creditors as to each basket. And so, for example, 100% of the proceeds of avoidance actions will go to the estate for the benefit of the general unsecured creditors, whereas 80% of the shipping and price gouging claims proceeds will go to the FILO, with the 20% going to the estate for the benefit of the general unsecured creditors.
And so who would be bringing those claims?
So those are all estate claims, and so those are claims that the debtors would bring, for example, against some of the shipping containers litigation that has been ongoing, or avoidance actions and the like.
Right. I was thinking about the avoidance actions in particular, and I also saw there's a very quick timeline on the on getting a plan confirmed even, and I'm not sure. I guess I was just asking about, in a way, the timing and who is bringing all these kinds of claims, which look like they might take some time to resolve.
Yeah, certainly. And I think we actually got a modest extension to the confirmation timeline. But during the cases, those claims would obviously be brought by the debtors' estates, and then will be determined in connection with any plan negotiation.
Well, it just seems like you guys have quite a bit on your plate, and to also, on top of that, bring litigation with, within the next couple of months, seems to make the plate, even fuller, or perhaps
Understood.
flowing.
And these are what we see as valid claims and cause of action that will, serve as a big recovery for the estate for the benefit of all creditors. And so we are focused on pursuing those claims. So that's the initial sharing threshold. For the second sharing threshold, there are two conditions. Once the debtors' estates have recovered at least 25 million of proceeds from those specified recovery baskets that I just mentioned, and the FILO lenders have recovered $550 million on account of the DIP obligations and FILO secured obligations, then there will be a new sharing construct. Basically, 80% of the DIP collateral and pre-petition collateral will be allocated to the FILO lenders, with 20% being allocated to the estate for the benefit of the general unsecured creditors. There will also be a new allocation split with respect to those specified recovery baskets that are more favorable to the estate than they were in the first initial sharing threshold.
And so when you use those two numbers, the 515 and the 550 million, it says plus interest and fees. So does that mean the 515 or 550 includes payments on account of principal, interest, and fees? Or
yeah, that's right, Your Honor.
Is that plus after the 515 and the 550?
Oh, that's additional on top of the principal amount, which I believe was 475, and so plus the fees.
So in other words, if on the second threshold, if there was, I'm sorry.
Yeah, so it's actually 475, which is the initial principal amount, And then you have the new money advanced under the DIP, which gets us to 515 plus additional interest and fees.
All right, but interest and fees are being paid on that.
You guys hear
Currently?
anything that's bearish or just almost sell
I
off here
believe
on
they are,
barbecue?
yes, Your Honor.
But I'm just trying to get a handle on what that plus is. Then is what I'm asking. Is that a big number, or is that a
I don't believe it's a big number, Your Honor. I think it's the intention of the settlement is the 515, which is the
mooning.
475 plus the principal, and then a portion of the make-whole is settled as part of that.
Okay.
So that's, the crux of the settlement that was reached between the DIP lenders, the UCC, and the debtors. There are additional provisions, the professionals for the committee, the DIP lenders, and the debtors will remain coordinated on, the allocation of proceeds of the sales. And also in exchange for these agreements, as you mentioned earlier, Your Honor, the committee has agreed to waive the challenge period and has agreed that the debtor stipulations are binding on the committee and its members. Additionally, as shown in paragraph 46 and 48, which is back on page 101, I believe. Yeah. The committee and its members have, consented to the standard provisions around 506C and 552. And so that's generally the settlement with the committee and the FILO. There are additional changes to the order which reflect reservation of rights language that we agreed to with Chubb, Arch Insurance, American Greetings Corporation, and Community Capital Bank, which are highlighted in paragraphs 63 through 66. So that's the balance. I mean, we do have outstanding the Texas Taxing Authority's objection. I understand Mr. Hillman may want to be heard.
Thanks, Ace. Appreciate it,
some
buddy.
of the changes to the order. So I'm happy to proceed however you'd like. If you want to address the taxing authorities now, or if you'd like to go through the changes with Mr. Hillman.
Well, Mr. Herman's changes relate to different provisions. They relate to Texas and Maricopa, or other things.
I think we can isolate Texas for after. I would just like to supplement the record of what you heard.
Okay, so then I think it makes sense for you to go now. Yeah.
And the committee would like to address the same matters after Mr. Hillman, but before Texas.
Okay.
Judge, may I be heard?
I'm not sure who that is, but
Judge, it's Adam Speen of Davis Polk on behalf of JP Morgan. We also would like to speak with respect to the DIP order, and happy to go after Mr. Hillman and before the Texas taxing authorities.
Right. Who do you represent, Mr. Speen?
JP Morgan Chase Bank, Your Honor,
Oh,
in its capacity as the pre-petition administrative agent.
Okay.
Good morning, Your Honor.
They already made their presence known. Yep.
Great. Good morning, Your Honor. For the record, David Hillman, Proskauer Rose. I'm here today on behalf of 6th Street Specialty Lending as the DIP agent and the FILO agent. It's a pleasure to be back before you, Your Honor.
Yeah, I don't know about that JP guy.
So I think you've made some comments from the bench recognizing that this wasn't easy. You're looking at a 109-page final DIP order, which is the product of intense, hard-fought negotiations which reflect a balance, a compromise. We didn't get everything we wanted. What we wanted from the beginning, the FILO lenders, the DIP agent, was a DIP order that looked exactly like the interim DIP order. We didn't get that. The debtors didn't get everything they wanted, and the committee didn't get everything they wanted. But together, from the day the creditors committee was formed, we have engaged in ongoing, constructive, at times tense negotiations. And I think Your Honor has witnessed this from the sidelines because we kept on adjourning hearings. We weren't done. And so I think what Mr. Fiedler did on behalf of the company to walk through this DIP order was an excellent roadmap, the top of the waves. But I think it's also important to recognize that the words on the page are what matter and not the descriptions of counsel in describing there, because every word, every comma was carefully negotiated here. So why don't I start backwards on some of the issues that I think Your Honor had some questions about, so that I can clear up any
You're low there on
misunderstandings. You asked
barbecue.
about the paragraph 60 and the economic sharing that the DIP lenders and FILO lenders have agreed to with the company and its creditors to, in effect, share some collateral value before we are indefeasibly paid in full.
Right.
And you asked questions specifically about 515 and plus interest and fees. And so 515 does represent, as you heard, 475 of principal pre-petition plus 40 million of the new money DIP. That's your 515. On top of that, before there's any sharing, are interest and fees. And the interest and fees are set forth for the DIP in the DIP credit agreement. And for the pre-petition, there's a provision providing for the payment of continuing interest as adequate protection. So you asked a question, what's the size of the number and is it being paid currently? It is being paid currently. There's no way I can possibly answer the quantum, but it's a negotiated interest rate that hasn't changed from the pre-petition documents or from the DIP loan. Nothing has changed on the interest rate. There are a number of fees, including legal fees. Those have been paid in due course. We follow the procedures that have been set forth in the DIP order for getting fees. So yes, there's an additional quantum. It's unknown, but it's being paid currently.
Well, that was really where I was headed, because I guess I had two questions, right? And I think you answered them both. Is because the 515, right, when it says, and I'm in 60B. So really my questions were kind of two in maybe combined into one. It said 515 in cash in respect of principal plus interest on such principal amount plus fees. And, you know, I believe that every word was carefully negotiated and everyone thought about them completely, and everyone is clear on what they mean as between the principal parties. But I guess as to me and maybe some other parties, when you say in respect of principal plus interest on such principal amount, arguably you could read that to say 515 includes interest as well as principal and fees, or it could be the way I understood it was said. To what it meant was that it's really 515 is principal, and then plus on top of the 515 interest and fees. That's number one.
Right. Well, this
right?
This discussion has now made crystal clear that there is no longer an ambiguity, because the record of today's hearing makes clear it is 515 million plus an incremental of interest to be determined, plus an additional incremental amount of fees, also an amount of to be determined. So the precise threshold sharing is 515 plus an indeterminate amount at this moment in time.
But which is currently accruing and being paid.
Correct.
So, and that was really the second, I guess both of them are somewhat substantive, but the second substantive part of it that I was asking about was I was just trying to see how, in addition to being clear, how high of a threshold the debtor had to reach to get to these sharings. And I wanted to be sure everybody was on the same page.
Everyone is on the same page. It's akin to saying, what's the payoff of the DIP? Well, it depends on the day you pay it off, because interest will accrue and fees will accrue. So we pegged a number and there are incremental costs associated. So I appreciate the opportunity to clarify any
Great.
perceived ambiguity. So the other point worthy of a quick flyover, which you heard from the debtor, is this notion of some language as it relates to the successor agent being 6th Street and the right to credit bid, which is in page 39. This one's pretty easy. There's carefully negotiated language as between the FILO lenders, who I represent, and the ABL lenders, who Mr. Speen represents, who will presumably make some comments in a bit. From our perspective, there's been a positive development in the case in that the ABL lenders have, for all intents and purposes, been paid, right? Their debt's been satisfied. They have some contingent exposure on account of LCs that's been cash collateralized. And what the finance lawyers have is very specific definitions, including discharge of revolving obligations. And so I think there's some reservations of rights is exactly what that means. For us, it's pretty clear. They've been paid. We intend to become the agent for the facility. Mr. Speen will explain to the court that JPM is in the process of resigning, and I believe he's going to confirm that will happen this week. And we intend potentially to credit bid. There's a bid deadline on Friday, and we added some language in paragraph 39 that talks about our ability to
What
credit
page are you
bid.
on? I'm sorry.
I have the red line. It's 91.
Yeah, I'm on the red line.
Yeah,
also.
91. It's what I would describe as some inter-lender provisions in paragraph 39.
Mhm.
And so those reflect language that we've agreed to with the ABL lenders. And I don't expect there to be any issues when you have, for all intents and purposes, a lender, admittedly a senior lender, right? We're the last out lender. For all intents and purposes, they've been paid off, but there's ministerial plumbing that has to happen for someone to declare that that has actually happened. We believe that's happened. And if for some reason down the road, JPM or Davis Polk feels differently, they know where this court is. They know how to find you. There's just some language in there that I wanted to highlight for your honor's attention. You asked a question about plan confirmation that has been accelerated. And the goal is the professional fees and the fees of administering a case are burdensome and wind up impairing the recovery of all stakeholders. So the company, the creditors, the DIP lender, the FILO lenders have all agreed, let's move forward with all deliberate speed. And lastly, you asked about claims and causes of action. The good news is we have reached this economic settlement on how to whack up, allocate, share the proceeds of, I guess I would call them softer assets, these litigation type claims. Those claims will proceed in due course. I don't think there's a time clock for someone to file an action by tomorrow, next week. So your honor was concerned about how many balls can this company actually juggle at one time, because there are a number. I'm not aware of any impending statutes of limitations, and I think we will all work collectively to figure out what's the best path to maximize the assets so that we can maximize the recovery for not only the FILO lenders and the DIP lenders, but I think from the committee's perspective for all stakeholders. So before I yield the podium, I want to make sure I'm responsive to any questions that you may have about the DIP order or any things I've said to date.
Well, that did respond to the questions, and I guess I will note that I'm glad to hear that the ABL lenders have been substantially paid in full for whatever, except for those other items that might remain, and I'm glad that you're considering credit bidding. So
Yes.
that's those are good things. And then this is a question that I had from last time, and it goes to the budget, and I know I didn't ask this there, but it said in the budget that was provided, it says like about 2/3 or 3/4 of the way down under after professional fee, DIP flows and other RX flows. We were going to determine what RX flows means.
Yes. The good news is I get to phone a friend here where I have Mr. Fiedler behind me, who I think last time was able to phone a friend. I believe it was other restructuring costs and expenses that weren't precisely the debtor's professional fees. I think one of the items in there may be the claims and noticing agent. I'll defer to the debtor for anything else that may be within that line item. But I can tell you that another reason why it took us time to get here is the budget's complicated. there are, significant amounts at issue. And from our perspective as a DIP lender, we wanted to make sure we're not paying 1 penny more than is necessary to get the job done and to monetize these assets. So from my perspective, there's healthy checks and balances as to what's in here, because the last thing we want to do as a DIP lender or as a pre-petition lender is see more money on the budget than is necessary. So if that gives Your Honor some comfort, I can tell you that that process has taken place and that the budget does also represent a negotiated compromise.
No, like you said, it ends up being a pretty big number, and it looks like a $45 million number in total on the budget, and then but the anticipation here under this budget, when would that first threshold be met? Do you have that or no?
That's a very important question. The short answer is no, in part because there are variables we don't know yet. There are asset sales for which there will be competitive bidding and an auction. So I don't think anybody wants to prejudge, especially on the public record, what people, the company, the lenders, the creditors committee expect to be recovered. And then to put that into a spreadsheet and say, okay, look, by week 17, here's what we expect. We would like everyone's expectations to be exceeded. And I would hate to put a chill on market competition.
Absolutely. I understand that completely. I was just asked, was it anticipated within this budget period?
Oh, well, I think the short answer to that is no, because there are also, I describe them as soft assets, right? Some litigation claims that will need to, there is already pending litigation claims. I think you made reference to the price gouging complaint that's been filed. So it's going to take a consolidated, concerted effort from the professionals on this side of the courtroom to get every asset monetized and to keep paying down the senior most creditors first. So there's wood to chop.
Right. No, and maybe you got me thinking very positively with saying the ABL lender was pretty much paid in full.
Well, they're the first out
early on.
They were the first ones to get paid. So now we're into the FILO.
Okay.
I have no doubt that Mr. Speen will take issue with whether it's been, quote, paid in full. It's a defined term, capital letters, 15 paragraphs of what it means. Yeah. I'm just trying to give you a sense that they've been paid. There's cash collateral backstopping their LCs. We're trying to do our best to make them as irrelevant as they could possibly be at this point in the case.
Right. Yeah. I thought I said, substantially.
Yes.
Those things. So
I heard that.
Why don't we let Mr. Speen?
Thank you very much, Your Honor.
Thank you, Mr. Herman.
Thank you, Your Honor. May I be heard?
Yes, of course.
Thank you. For the record, again, Adam Speen of Davis Polk and Wardwell, on behalf of JP Morgan Chase Bank as the pre-petition agent. I want to state just unequivocally at the outset, we are supportive of the entry of the DIP order, and we support the relief requested. And I agree with Mr. Hillman that this is sort of an easy issue in the grand scheme of things that we wanted to discuss with Your Honor very briefly. I think this can be brief. Just by way of background, to repeat what Mr. Hillman said, after entry of the interim order in April, as the company liquidated our collateral and sold its inventory and collected its pre-petition AR, our facility has been periodically repaid on a weekly basis. And as of Friday, and we confirmed this just yesterday morning with JP Morgan's operations team, as of Friday, the last payment we received, the entirety of the ABL loans have been repaid, and all of the letters of credit outstanding have now been fully cash collateralized. It took a little bit of time to confirm that because some of the letters of credit are issued in CAD, Canadian dollars, but we've now confirmed that. Under the credit agreement, as Mr. Hillman alluded to, once the discharge of revolving obligations has occurred, JP Morgan is obligated to resign as administrative agent. And we intend to do that, Your Honor. The issue is the discharge of revolving obligations has three components. It includes the discharge of the loans, which have been repaid, the cash collateralization of the LCs, which has occurred. And then the last component is to confirm that all other obligations have been satisfied in a manner satisfactory to us. And that includes banking service obligations. JP Morgan serves as the treasury services manager for the company. So we do intraday wires and sweeps for the company. And sometimes that can result in overdraft obligations and cash management obligations being outstanding. There's also professional fee obligations. So, in fact, we just got off a call with JP Morgan about an hour ago, and we are hard at work confirming that all of these remaining obligations, the third bucket of obligations, are going to be satisfied in very short order. Normally, when you do these agent transitions, it takes sometimes weeks, but we're working at warp speed to accommodate 6th Street. And so we're hopeful that we can get out of the picture and resign, by the end of the week. So I've agreed ahead of this hearing to state on the record, I'll just read this for your honor's benefit. On behalf of JP Morgan, we can confirm that JP Morgan will use commercially reasonable efforts to confirm that the discharge of revolving obligations has occurred and resign as agent prior to the end of the week, which we hope to do, and then be out of the picture. Just one wrinkle, Your Honor, and this is a bit of a late-breaking development. It occurred after the DIP order was filed and arises out of our conversation with JP Morgan this morning. The letters of credit, as I said, have now been fully cash collateralized, and some of the letters of credit are long dated. And it may be the case that in the future they're drawn and the letter of credit issuer has a reimbursement. There's a reimbursement obligation out of the LC cash collateral account to that letter of credit issuer. The letter of credit issuer is JP Morgan. So what we'd like to do is remain as agent under the facility solely for the purposes of administering that LC cash collateral account. I'm told that 6th Street is okay with this. I understand, I received an email not long ago from Ms. Geyer that Kirkland is okay with this. So if your honor would allow me, I'd like to just read into the record language that I think will appear in a future iteration of the DIP order once it's submitted to your honor.
Well, has this language been seen by the other parties, or is it just?
Yeah, Your Honor, apologies if I misspoke. It has been seen by Proskauer, and they've confirmed that they're okay with it. It's been seen by Kirkland and Ellis. And so for the benefit of all parties in interest, I wanted to read it into the record just to confirm no issues.
Okay, does anyone have any objection to that, or no objection? So go ahead, please.
Sure. So it begins, Your Honor, notwithstanding anything herein or in the pre-petition credit documents, clause X, JP Morgan Chase Bank NA shall remain as agent under the pre-petition credit agreement solely with respect to the administration of all accounts holding cash collateral that cash collateralizes outstanding letters of credit issued under the pre-petition credit agreement. And clause Y, nothing herein shall release any liens granted under or in connection with the pre-petition credit agreement. So again, Your Honor, that just confirms that we'll stay as agent solely for the purpose of drawing money out of the cash collateral account if and when LCs are drawn in the ordinary course. And that's it, Your Honor.
Mr. Herman is rising, is coming to the podium.
Yes.
So
Thank you, Your Honor. David Hellman, Proskauer. I was aware of the reservation or the statement that Mr. Speen would make on the record. At the end of the day, you heard everything that we've heard. We're planning on credit bidding on Friday. They've been paid in full. We're not planning on going through the agent, the ABL agent, for us to do what we need to do to protect and preserve the value of the assets. And if there's an issue that we have to deal with later in life, we'll deal with it. But I think we should put a fork in this issue and now move on.
no, the fork would be, in other words, to just leave it that Mr. Speen read what he read, and you're,
Thank
may
you.
or may not be okay with it, but you're going to deal with it and it'll get resolved, just like these other things have gotten resolved.
I have nothing further.
All right. Mr. Speen, did you hear that?
Yeah, I just want to confirm, because this is an important point for JP Morgan. There's almost $100 million in an LC cash collateral account. We just want to make sure over time that's administered properly. So to be clear, we have no issues with whatever rights 6th Street has to credit bid. We don't want to interfere with those rights. They have whatever rights they have, and they'll likely credit bid. But I just want to confirm that it is our understanding that 6th Street is supportive of JP Morgan remaining as agent solely for the purposes of the LC. I don't think that was a dispute. I just want to confirm that Mr. Hillman agrees.
1 second.
There we go.
David Hillman, Roscoe Rose, DIP lender, Philo
Confirmed.
There we go.
He confirmed it.
Okay, thank you, Your Honor. That's all for me.
All right. So, all right. Yes, sir. Please just state your name and who you represent for the record.
Certainly, Your Honor. Robert Feinstein, Pachulski, Stang, Zeal, and Jones. We are proposed counsel for the Official Creditors Committee. I'm joined by my partners, Brad Sandler and Paul Laboff, who are in the courtroom. So, Your Honor, first of all, it's a pleasure to appear in front of you. And I do want to provide some perspective of the committee on the landscape as when the committee was formed and the settlement that was reached and the rationale behind it. As I know, on May 31st, Mr. Sandler announced at a hearing that the committee had reached an agreement in principle with the lenders, but didn't disclose it because there was still wood to chop to document that, to get the debtor on board. So there really hasn't been visibility until the filing of the order on a number of the points of resolution that Mr. Fiedler described and Mr. Hillman described. But I do want to provide for the court and to unsecured creditors who are listening the work done by the committee, perspective of the committee. So with that, Your Honor, I just, will note that the case was filed on April 23rd. There was a first day hearing on April 24th, and the committee was not appointed until May 5th. And then we were hired as proposed counsel to the committee on May 8th, which is just a little over a month ago. So while Mr. Sandler and I listened to the first day hearing, we obviously couldn't appear and be heard. So the parties before the court at the first day were essentially the debtor, the secured lenders, and the U.S. trustee. So things happened on the first day that affected the committee's role in the case, or ability to negotiate in the case, and specifically, Your Honor, granted a roll-up of $200 million of debt at the first day hearing. That included two make-whole claims that are within the secured debt of the Philo lenders. These were controversial from the committee's perspective because the roll-up in particular took a pre-petition debt claim of $200 million that only had recourse to certain designated items of collateral, made it a post-petition super priority claim, but more importantly, granted a blanket lien on all the unencumbered assets for the benefit of the secured lender. And that was something the committee, once was formed, was very concerned about, because those unencumbered assets, in our view, should have been made available to pay general unsecured creditors and the estate, and not given to the secured lender, who was already getting fees and the like for the loan. The 5-to-1 roll-up, again, basically granted them a $200 million lien on unencumbered assets. And, part of the committee's immediate investigation was, are there unencumbered assets? And you can see listed in the sharing paragraphs in paragraph 60, the categories of what we believe are valuable litigation claims that the lenders did not have a lien on pre-petition. Basically, the UCC provides that if you are a lender and you want to get a lien on a cause of action, it has to be specifically described in the UCC filing. And here we did our investigation. There were no references to any litigation claims. So, before the petition date, there were, in our view, very valuable causes of action out there that didn't belong to the lenders. So when the lenders were granted a lien on those on the first day, we had two choices, which was either to litigate that or to settle it. Litigating it would have involved conceivably moving for reconsideration of the interim order. We couldn't appeal it because it was an interlocutory order. We could appeal the final order if it was unchanged, but we did much better, which is that we engaged immediately in negotiations with the secured lenders to basically claw back the roll-up, or the blanket lien on the rolled up debt, because now you can see that once the principal is recovered, and that's the $515 million, that's $475 million of pre-petition debt, $40 million of new funds. Everything above that, from 510 to, I believe it's 585 million, are make-whole claims and the like that are treated differently than principal under our settlement. So basically, unless and until the lenders get to 515 million, they're going to recover out of their hard collateral. But once they hit 515 plus the interest on the 515, then you see that the sharing formula kicks in. And that, so from 515 to 550, there's a certain set of formulas. And then after that, the formula changes. So you can see that the secured lenders have made concessions to allow significant portions of the recoveries from those formerly unencumbered assets to be received by the estate for distribution to general creditors. So, you know, and it was very concerning to us that, you know, on the first day of the case, Your Honor, because there was no representative of unsecured creditors, didn't have the benefit of a full record, of an evidentiary record. And this is why we thought the first day roll-up was very controversial, in that really nobody had the wherewithal, the ability to articulate to the court that there are significant unencumbered assets that were being leaned up that day without notice to, you know, most of the parties in the case. So fortunately, we were able to fix that. You know, we worked intensively to try to basically dig ourselves out of a hole where, you know, all the assets were leaned on the first day, and we got to the resolution that we did. So, and that took a tremendous amount of hard work and negotiation with our counterparties. We're very pleased that we got there. And I won't repeat Mr. Fiedler's accurate recitation of the settlement. I do want to highlight a couple of things. And that is, you know, aside from the make-whole and the roll-up, another big issue for the committee was the surcharge waiver. And we wanted to be sure before agreeing to a surcharge waiver that the budget, the DIP budget, was robust, and we wanted to be sure that all expected administrative expenses in the case were going to be paid. Because if there were any administrative expenses that were not included in the budget, and the lender got a surcharge waiver, then basically the rest of the unsecured creditors would have to bear those costs, and that didn't seem appropriate. So we did a larger settlement than typically you see in a DIP order, in that we waived our challenge period in exchange for these concessions to share in the proceeds of these previously unencumbered assets. We also dealt, I think, in an appropriate way with the make-whole claims, which we had potential challenges to. You can see that those claims are only going to be paid once we're in a sharing mode, once the 515 is recovered. So a couple of other small points that somebody said before, the words of the order matter. The committee has waived the challenge period. The committee has supported the surcharge waiver. Not its members. We don't represent the members, so we really can't speak for them. And the order talks about the committee and not members because we can't bind them. I don't expect, you know, that the committee is going to come out of left field, because the committee was kept fully apprised. And to be clear, it's a 7-person committee. It includes vendors, landlords, and importantly, the indenture trustee for the unsecured notes. So all those parties were intimately involved in our analysis, in our negotiations, and kept fully apprised. So the benefits of the settlement should be clear, Your Honor, but to be clear, we are eliminating a lot of the friction costs in the case. We didn't have a big contested DIP hearing. We agreed beyond the typical DIP issues to share in these recoveries from the various litigation claims. To address Your Honor's point before, there's no intention to start and finish these litigations before confirmation. The best we can do is investigate them. We could start litigation, but litigation is going to have to be pursued post-confirmation by a liquidation trust or the estate or what have you. But we do think there are valuable claims out there in a number of varieties of them. So, you know, while we're then getting to share in these assets, we're also cutting down on the administrative cost of the estate, because there's not going to be any fighting. So, you know, this will maximize the recoveries by the estate and will eliminate the burn, if you will. Our next step after entry of the order, if Your Honor enters it today, will be to turn to working on a plan. We've had some preliminary discussions with the lenders and with the debtors. We still have some wood to chop, but we think it would be in everybody's best interest to get a consensual plan on file as quickly as possible, move to confirmation, and then again, cut down further on the administrative expense of secured lenders counsel, the committee counsel, debtors counsel, and just have one entity, whether it's a trust or the estate, pursue these claims for the benefit of the remaining creditors. So it's a lot that we've accomplished in 4 weeks. But the committee is very pleased with the outcome and supports entry of the order. Happy to answer any questions Your Honor may have.
No, I just want to repeat that I'm very appreciative of the efforts and that how much hard work had to go into it. And, the issues that you raise are certainly important and significant ones. And I think that, as is almost always the case, a negotiated resolution is better than litigation in a lot of ways. And, there's some exceptions to that rule, but I think in this particular case, with the expedited timeframe and the situation where it was really important to get things moving quickly and get the going out of business sales and administration funded, which is what you did, and then the committee did its job. I think it's a prime example of the process working, and I appreciate it.
Thank you, Your Honor. Thanks very much.
Your Honor, may I be heard?
Yes.
Good afternoon, Your Honor. Daniel Stoltz, Genova Burns, co-counsel to the Ad hoc Committee of Bondholders. I'd like to introduce Your Honor to Andrew Glenn, my co-counsel, who wants to say some words on behalf of our clients.
Okay, sure.
Thank you, Your Honor. Andrew Glenn, Ager, Bergman, and Fuentes on behalf of the unsecured bond committee, ad hoc bond committee. Your Honor, we filed our 2019. We have around 150 bonds, 150 million bonds in our group. That number is growing. We are in touch with many other holders. The bonds in this case are widely held by retail holders, which is somewhat unusual. We filed a reservation of rights with the court earlier this week. We had reached out to the creditors committee to try to get involved in the negotiations and discussions about this resolution, particularly after it was announced at the last hearing that the committee had reached a quote unquote case settlement. Now, we're appreciative of the committee doing its job. We understand it has a job to do, but that does not excuse us from being excluded from the process. The bonds in this case in toto are $1 billion. They're the largest economic stakeholder. And so, we got this settlement last night when we asked Mr. Sussberg and Kirkland, and they graciously provided it as soon as it was available. The committee has not communicated with us at all beyond one phone call where they refused to include us in the settlement, give us any details about the settlement. So we heard about it just last night. The provision that's most concerning to us at this point is paragraph 60. Paragraph 60 provides that the challenge period is now cut off for everybody on the earlier, I believe, of 10 days after Your Honor enters the order, or I believe the prior challenge cutoff date of around July 4th. The settlement that Your Honor is being asked to approve in the DIP order may be perfectly fine. It may be a fair and reasonable settlement. But beyond the podium presentation by my colleague, we don't really have any details about why this is a good deal for the estate. So what I would respectfully request, Your Honor, is that parties in interest be given 30 days to review the settlement to have a new challenge period set. And I think the reasoning for that is as follows. Okay, first, if this were a 1919 settlement, you couldn't do it on that kind of notice. It would be a longer notice period traditionally. Number two, and what's concerning to me, is that the committee has an obligation, a covenant in this DIP order to oppose anyone else from challenging the settlement or challenging the liens and claims. So we're kind of boxed out. If the committee would come meet with us and talk to us about this, share their reasoning and more of their work product, maybe we could get comfortable very quickly with this. Maybe not, I don't know. But if parties in interest need to review the settlement on their own and replicate some of the committee's work, unfortunately, then I don't think it's fair as a matter of due process for the court to approve that today. If the period is going to be 10 days, that's a practical impossibility for anybody to do anything. The committee's been at this for the better part of, I believe, 45 days or so. 10 days is just not enough. So, we're not here to get in the way of the company having access to its DIP. That's fine. Challenge periods in these cases are routinely extended by courts for cause shown. And here, I think it's really a matter of due process for parties in interest to have a realistic, meaningful opportunity to examine the fairness of the settlement, because we agree that the litigation in this case is the most valuable asset of this estate from the perspective of the general unsecured creditors. And here we have an announcement, the night before the hearing of most of what that settlement is going to be. And the practical reality is we are sharing a lot of that settlement with the lenders who got a very, very rich roll up at the beginning of the case. So that's my request, Your Honor. I'm happy to answer any questions.
Well, I guess I'd like to hear from the other parties as to the debtor and the committees and the lenders' position on that request.
Thank you, Your Honor. Let me begin. Robert Feinstein, Pachelsky Stang for the committee. A couple of important facts, Your Honor. The indentured trustee for the notes that are held by Mr. Glenn's group is on the committee and was privy to all of the analysis of unencumbered assets, the negotiations back and forth throughout the process. The committee represents in total almost, I think, about $1.5 billion of liabilities, and $1 billion of that is the indentured trustee for these notes. So they were fully apprised. Mr. Glenn did approach us at a time when we were still negotiating. It was just inappropriate to disclose to him the status of privileged negotiations between us and the lenders and the debtor. And importantly, Mr. Glenn's group are not restricted, so far as I know. The committee has confidentiality obligation. We have a fiduciary obligation to all the creditors, including Mr. Glenn's group, which we think we fulfilled. Mr. Glenn does not have a fiduciary duty. I mean, he has his own group of note holders that hold, maybe it's 10% of the notes or so forth. So it's the way the system works is that the committees are given confidential information and have a fiduciary duty to represent all the creditors. Again, with the indentured trustee on board with the settlement, we think we fully fulfilled that obligation. There are dates and deadlines to get a final DIP order entered. I think that deadline will be blown if we defer entry of this order for a month while Mr. Glenn.
I don't think that's what he was saying. I think he was saying he just wants an extension of the deadline to challenge. He did. Maybe I'm wrong.
I'm not sure. If it's the extension of the challenge period, I'll leave that up to Mr. Hillman to address. If it's deferring entry of this order, we think that would poorly serve the interests of the unsecured creditors.
To be clear, Judge, it's only the challenge period. That's it.
Okay, then I'm going to leave that to Mr. Hillman. I will address this one point, which is we did agree with the lenders to oppose other people seeking to bring a challenge because we fully vetted this and we compromised our challenges in exchange for very valuable consideration, sharing the very same assets Mr. Glenn was concerned about being leaned up. So,
but Mr. Feinstein, when just so now that it's clear that he's just asking for an extension of the challenge period, are you saying the committee has no position on that, or
that's up to Mr. Hillman? These are the secured lenders are the beneficiaries of the challenge period. It's not my place to grant an extension. That's between Mr. Glenn and Mr. Hillman. So I'm going to sit down.
All right.
Judge has to do some judging.
For the record, David Hillman, Proscar Rose, Council of 6th Street as DIP agent and Philo agent. This first time I've heard a request for an extension of the challenge period. I saw there was a reservation of rights filed. So I'll start with the headline and then work backwards. Under no circumstances would we agree to a further extension of the challenge period. It is part of the negotiated bargain that was struck. That's the headline.
Can we just go through it and just tell me where, because it sounded like there was a couple of dates that were said and what.
I want to walk Your Honor through all of that, and you heard briefly from Mr. Fiedler on this. So are you in the red line?
I'm in the red line, yeah.
Give me a second. Let me just flip to the red line. Um, If you allow me to just introduce one defined term, which will then help us with the challenge period, I think that will be an easier way to do it. I believe it's paragraph 10. I'm just getting it to there myself. Paragraph 10. Page starts on 39 of the red line. I'm now in the red line at page 42. So it's 10C. Let me know when you're at 10C, page 42.
I'm there.
Okay, so 10 calendar days after entry of this final order, defined term, the reserve release date, all funds in the priority claim reserve and the wind down reserve shall be released to the debtors, free and clear of the DIP liens, pre-petition liens, and adequate protection liens. And then it goes on to say that the liens are collapsed such that the 15 million can be used by the debtors without regard to allocation as set forth in 10B. I know we're building to the challenge period, but this is an important predicate. We were not prepared to release the funds in this provision, and the debtors and the creditors committee were advocating for a release of these funds. You may recall I stood before you at the first day hearing and we talked about the funds that we were setting aside in these reserves, and they were always subject to, and I'm trying to find the language here.
Thank you,
It's all
Ace.
struck. If you
That
look
gifted
at page
membership.
40, 41,
Jeff Baxter, get to
you
chat.
can see a
Thank
lot
Papa
of
Ace.
redlining there, which was 10C and 10D and 10E. Rather than read you the red line, I'll tell you in substance what it said. If a party obtained standing and brought a challenge, we would revoke the funds in these reserves. We weren't going to give these funds and release them from our liens until we knew we were free and clear of a challenge. The committee insisted that we yield on this point in order for us to get to a deal. As you can imagine from the position of the DIP lender and pre-petition lender, imagine we give, whether it was 36 million or $16 million, and then it turns out we are embroiled in litigation. So we were prepared to give on this important negotiated compromise with a caveat, and that's the definition of reserve release date, that we'll wait 10 days. So now, if you go to the challenge period, which I believe is paragraph 43, and on the red line, it starts at page 95. Let me know when you're there. 43.
$95.
Yep. And so you can see the change to the timing of the challenge period, which appears on page, it's a carryover, 95 to 96. The challenge period by no later than, it says, the earlier of the reserve release date. So roughly 10 days from today, June 25th, or July 4th, which was the original, I guess it was 75 days from the filing of the case. That's not a new date. That's just hardwiring what the original order said. So the request from the lenders was to shorten the challenge period by 10 days in exchange for something meaningful to the creditors committee and to the estate, freeing these reserves. It is unfair to isolate one quid pro quo within a larger bargain, but those were the two inextricably tied together. So if there were any extension, we would say, I'm not authorized to say this, but I would certainly recommend that we're not going to release funds until that challenge period expired. And I think if I said that, that's going to pull one thread that's going to cause, I think, I don't want to prejudge things, this carefully negotiated settlement to collapse. I also want to point out a couple of other pieces to give Your Honor some, again, big picture perspective. The day the creditors committee was formed, can you help me out? When were you formed?
It's May 5th.
May 5th, either May 5th or May 6th. We provided, actually may have come from my colleagues at Davis Polk, a care package with all of the claims, all of the credit agreements, and a detailed perfection memo, not just dropping UCCs, but a memo that was prepared to enable the reader to understand very specifically how and to what extent we were fully perfected on all of those assets. So we gave them that care package. And so there's 10 days left on the clock. No one's asked us for any of our perfection documents. We've given it to the estate fiduciary. And I think when you think about fundamental fairness, I think it's important to take into consideration as an important factor what you heard from Mr. Feinstein, and that is the indenture trustee is on the committee. So estate fiduciaries charged not with looking out for their own pecuniary interests, both on the debtor side and on the committee side, have determined the deal is in the best interest of creditors, and a small group of interested stakeholders seek something that will upset that carefully calibrated compromise. So small relative to the size of the committee and creditors writ large. So it's a relative term.
Is it small?
I think
comparison to creditors which writ large?
I was referring to, I think I heard
small in how many there are, maybe, but I mean,
I only
the
meant
number is huge.
I only meant relative to the entire unsecured creditor class represented by the committee as a court-appointed fiduciary. I was making a comparison of an ad hoc group and its members relative to the size of an estate fiduciary. I'm sorry if I used a term that brought us down the
I don't
detour.
need to be sorry. I was just trying to understand what you were saying because
Yeah.
I didn't.
Relative size.
I have a hard time with $1 billion being small.
No, relative size. And
I'm a
there,
public servant. I don't.
no, I'm a kid from Queens, so I can relate, trust me. What I meant was relative size and to the committee. So.
All right.
Your Honor, may I be heard briefly?
Wait a minute. I'm sorry. That was Mr. Speen again. Go ahead.
Yeah, Your Honor, very briefly, Adam Speen, again, of Davis Polk and Wardwell on behalf of JP Morgan Chase. We are pre-petition secured creditors, so we do have an interest in this dispute. Just to be clear, Your Honor, I'm scratching my head hearing Mr. Glenn speak, because fundamentally what he's talking about is prosecuting estate causes of action, not bondholder causes of action, estate causes of action. And the estate, who is the holder of these causes of action, has made a business judgment to settle them in connection with this dip order. And the only other fiduciary in these estates, the UCC, has signed off on that settlement. They're the only other potentially appropriate plaintiff in this action, and they've agreed to settle. The bondholders cannot be plaintiffs here. And so I'm confused as to why this is being raised at all. The bondholders have had almost 2 months to approach us and to approach 6th Street if they wanted more information. They have not done so. The challenge period here is appropriate. It's customary. And from our perspective, there should and can be no changes just in light of the circumstances and the settlement in this dip order. Thank you, Your Honor.
Well, then what was the purpose of giving in the challenge period parties other than the committee the purpose to the ability to potentially make a challenge? Doesn't it apply to other parties?
It does. Certainly, Your Honor. They have 2 months to come to us, ask questions. We can provide information, just as we did when the committee was impaneled. We provided, as Mr. Hillman said, a care package of all the perfection documents we had at our fingertips and provided that immediately. They can raise a challenge, file a standing motion, but there has to be finality, and that's why the challenge period has an expiration date. It's appropriate. It's been 2 months. Given the pace of these cases and the likelihood that we could be, at a confirmation stage in very short order, there's just no reason to have more delay here. And so we support the estate fiduciaries, the debtors, the UCC. We defer to their business judgment And it's just a surprise to us that this is coming out of the blue at this hour.
Okay, thank you.
Your
Your
Honor,
Honor, if we're moving on to the next matter, I'd ask to be heard on behalf of the Texas taxing authorities.
Wait, I don't know who's speaking now, but
This is Joshua
I'd like-
Bach with Ansel Grimm and Aaron, Your Honor. I'm not sure if we're advancing on to the next issue or if we're still addressing the bondholders' concern.
we're still addressing the bondholder matter, so
Thank
sorry
you.
about that.
Your Honor, for the record, Ross Fiedler of Kirkland and Ellis on behalf of the debtors. I just want to echo the same comments that Mr. Speen and Mr. Hillman made, which is this is a good deal for the debtors, and the negotiation point that the DIP lenders will release and fund these critical reserves no later than 10 days after entry of the order was a heavily negotiated point. And to strip out one point from the overall settlement is just not appropriate. I will say the challenge period hasn't expired. There's 10 days from when these reserves are funded for the bondholders to file their standing motion. And that's a lifetime in the restructuring community. So they have that right. Also, it's quite an expensive proposition to extend the challenge period. You know, there is a provision in the DIP order which says, you know, the ABL indemnity reserve will be increased to $5 million if there's a valid challenge filed. And so that is obviously something the estate wants to avoid. But, you know, at the same time, the bondholders have their rights for the next 10 days to bring a challenge if that's in their interest to do so.
But what if they're made, if I consider an extension, I'm not saying I'm granting an extension, what if they're tied into, you know, that point in 10C and that the reserve release date is moved to the extended, if any, challenge period?
Well, the issue is this was a heavily negotiated point, and those funds that are going to be put in the reserves are critical for the debtors' estates, and
But
it was
they're already in
negotiated.
the reserve, right?
Say that again, Your Honor?
They're not already in the reserve?
Well, they'll be released from the reserve by the DIP lenders upon the order, the final order being entered, and no later than 10 days after the order's entered.
But they could be, the funds in the reserve could be used, right? Or no, they're not, they couldn't be used until the release date?
That's correct.
Okay. Your colleague was,
No, good afternoon, Your Honor. I'm Lee Geyer from Kirkland Ellis on behalf of the debtors. Just wanted to remind and sort of bring attention to the court from where we were at the first day hearing to where we are today with this agreement. The original provision required that only upon no challenge being filed would those reserves actually be released to the debtors, and that is the critical funding to ensure that we can reach a plan confirmation process. So we are still in that same position, except you know, the UCC pushed for this point as well. These critical reserves being released to the debtor so that we have those funds and they are not wrapped up in that process is absolutely essential to
okay.
pushing forward on these cases. And frankly, I don't know what happens to the rest of the settlement when this provision changes. At the end of the day, Your Honor, of course, you will do what you think you must do. I think we would have to go back. I'm assuming that we'd have to go back, you know, and discuss and sort of figure out the path forward, because it is such an important part to have those funds reserved and released. Those funds are, you know, just to remind Your Honor, those are at this point $31 million of important funding for employees, priority and administrative claims, and to fund the wind down of the estates.
Right. But
And maybe
it's not being released anyway for 10 days under the settlement. Right? So
you are correct, Your Honor. We will not be utilizing those funds necessarily during that time period, or we certainly won't be using them for the next 10 days. And I will say we will be working
right in his hand.
with the ad hoc group to answer all their questions. I think all of us will be working with them to share information and get their support of this settlement. I think it is a very good deal, and I think they'll come to see that. And you heard from counsel, he doesn't necessarily oppose it. He just hasn't had a chance to review, and we have 10 days here to use to see if there actually is an issue at all.
Okay, thank you. Mr. Herman's coming back,
Yeah, David Hellman for the record.
and then Mr. Glenn wants to speak, so why don't we-
Sure. I just want to be clear, a fine point on a change that we walked through on page 10.
on page,
Sorry, page 40, paragraph 10. The current deal, you're right, Your Honor. 10 days passes regardless of what's happened, the reserves are released. That's the current deal. The prior deal, which is reflected in red line, says the funds are forfeited. They come back to the DIP lender if there is a challenge. That's not part of this deal. So what the creditors committee and company negotiated for is an assurance that on the 10th day after, if Your Honor approves this order, on the 10th day after that moment, these reserves get released from our liens, as it says in this
even if
paragraph.
a challenge is filed,
That's what this document says, Your Honor. Correct.
even if a challenge is filed.
Correct. The prior deal, the interim order, did not say that. And I think that is a very important give that I wanted to highlight. And thank you.
All right.
Your Honor, may I just make one quick point, Your Honor? It's Adam Shapeen again from Davis Polk.
Oh, okay,
Yeah, Your Honor, just very, very briefly, I just want to emphasize that the challenge period in the final DIP order is no different than the challenge period that was approved in the interim order. We're not shortening the challenge period. The July 4th is the 60-day period that was agreed to previously. Now that we have a settlement.
75 though. It was 75, sir.
With 75?
Yeah. So it is
Well-
shorter. That's what Mr. Herman just told me, I thought.
David Hillman for the record. Just so we can avoid any ambiguity. Paragraph 43 includes the challenge period. Paragraph 43 is on page. Starts on page 95. It used to say, it says no later than the reserve release date, which is 10 days from today, effectively June 25th or July 4th. The July 4th date was always the same outside date. We just took words and converted it into a date certain. Do you have any questions about that, Your Honor?
That's the point I was making, Your Honor. July 4th is the same as the 60 days after date that was in the interim order. And so it.
Wait a minute, just let me catch up with you, okay? By no later than 60 days following the date of formation of the committee, which was May 5th, as I understand it, and that would take it
July 4th.
to July 4th, or 75 days following the entry of the interim order if no committee is appointed.
That clause is superfluous because a committee was appointed.
Exactly.
Right. Okay.
Exactly. So my point, Your Honor, is that we're not shortening the period at all. And if there were no settlement before Your Honor and Mr. Glenn stood up and asked for an extension, he's articulated no cause for the extension. And this was the period that was approved at the interim order phase. And he's had 2 months to do his work, and to come at the last minute to ask for an extension without cause is mystifying. But now there's certainly no cause, because we have 2 estate fiduciaries saying that they've done the work and there's no challenge that's viable. And so they've decided to settle the actions on behalf of the estate. So that's the only point I wanted to make, Your Honor. And with that, I'll go on mute.
Okay, Mr. Glenn?
Thank you, Your Honor. Just a couple clarifying points. We signed an NDA with the debtor, I believe a couple weeks ago. We asked for information regarding the lenders and challenge issues, and we were told that we were not going to get that. We have tried to communicate with our indenture trustee on the committee. The indenture trustee has been completely unresponsive. But I want to make something very clear, okay? Ms. Geyer is correct. It could be very well that we think this is a great settlement. We don't know because we don't have the information. And what we're now being told is, yes, you had until July 4th, but now it's 10 days. There's been no proffer about when the company actually needs the money to pay the bills from that reserve. So we don't know if the company is going to suffer any prejudice if the reserves can't be released until the challenge period actually ends. And look, I understand people have their fiduciary duties, but they have fiduciary duties to the stakeholders. And the people with the money on the line deserve a due process. The bankruptcy code provides that we are a party in interest. And we were told you can't get the information, you can't participate in the settlements. And now the committee has an obligation to block us from trying to do the right thing if we determine, not because we're going to bring direct claims, that someone would have to bring estate claims. And I understand it's an unusual construct, and I hope we don't have to do it. But at the end of the day, the bondholders have $1 billion on the line here. We have a planned settlement, okay, with the most valuable asset here. A, we deserve an explanation. B, we deserve due process. And I haven't heard anything that indicates that we shouldn't get those fundamental things. So, I'm happy to answer any questions. We're happy to move as quickly as Your Honor will give us. I asked for 30 days. We'll accept July 4th if Your Honor is not inclined to give us the full 30 days, but we would like some period of time. No one else has to get that period of time. I'm the only one right now raising this objection. If they make me or client group satisfied, then we'll consent and it'll be over. But I'm not comfortable being in the position where a settlement is announced the day before hearing, very little information is provided, and there's a very compressed time frame within which we can get the information that we need to do our fiduciary duties to our clients to figure out whether this is the right thing to do. I don't think that's a big ask. Thank you very much.
All right. I think Mr. Feinstein, you want to, we need to.
For the record, Robert Feinstein, I can make a constructive suggestion.
Okay.
There are 10 days left in the challenge period. We were unable to talk to Mr. Glenn when we were in the midst of negotiations because it was all 408 discussions. The terms are now disclosed. The committee, including the indenture trustee for that $1 billion bond issuance that Mr. Glenn's clients hold, fully supports the settlement as being in the best interest of creditors in the estate. Right. So my constructive suggestion is this, Your Honor, let's leave it at the 10 days. And I know I just heard really for the first time that Mr. Glenn has an NDA with the estate. If we can have an NDA with the committee, we will show him our lien perfection memo because we did the analysis. I've already noted for the record that all of these litigation claims that are part of the sharing formula were unencumbered on the petition date before the roll-up. There's no dispute as to that. And Mr. Glenn probably understands the UCC as well, that there's no lien on those assets on the petition date, but a lien was granted in the roll-up. So we can meet with Mr. Glenn now that this is public and we're not bound by 408 discussions on a settlement that hadn't been concluded, and we'll give him a download and he can make a judgment whether to seek an extension of the 10-day period that's baked into the order, risking the reserves, and we'll impress upon him the importance of having those reserves available to the estate. Because again, one of our big concerns was administrative solvency.
I was looking for the right to make to request an extension of the challenge period.
I'm working from memory that there's an extension for cause shown provision in there. There's not. Okay.
That's why I couldn't find it.
Okay. Well, what can I tell you? We will give him a hurry up education in 10 days, and hopefully he'll come to the conclusion that the indenture trustee for his $1 billion bond issuance did, with the benefit of being a fiduciary on the creditors committee, being a fiduciary to the note holders as an indenture trustee, and explain the judgment that was reached and why this is a very favorable deal for unsecured creditors who would otherwise get wiped out. And again, if he impacts the release of the reserves, we've got a big problem in the bankruptcy case. So I hope in the next 10 days we can impress upon him all the benefits of the settlement, the results of our lien search and so forth. And I guess he can draw his conclusions from there. But we're happy to provide that now that this is public. We couldn't before.
When is our next hearing date on I know there's one on the 21st, which is just a week away.
June 27th, Your Honor.
27th?
Yeah.
Oh, it's not, that got moved again, right? That's the 20th.
Yeah, it's a sale hearing date on the 27th.
Okay, so, what I'm gonna do is I'm going to give, I'm gonna include that they can request an extension of the challenge date for cause for a period through July 4th by no later than June 25th. And I'll deal with it on the 27th if need be. But I'm basing that on the representations that were made, that now that there are non-disclosure agreements in place or will be in place and information will be provided, I will grant an extension of that date for the challenge for cause shown, but not beyond the July 4th date in any event, so that everybody has a chance, and the bondholders can, I would say, further examine this, because I know it's true that this deal was just presented today, but the bondholders did have representation on the committee, and for whatever reason, the information was, as I understand it, because of the fiduciary obligations and lack of an NDA at the moment with the committee, was not disclosed. Well, now there's going to be an NDA, and the disclosure is going to come. So you have 10 days to try to go through that information, and if there is not, if the bondholders are not satisfied, they can ask for an extension on June 25th by short letter as to why, for cause, why they need more time, not just that an extension will be granted. And, sure.
For the record, David Hillman, Proskauer Rose. You asked me, you asked the courtroom, was there a for cause extension? I said there wasn't. In the DIP order, in the challenge period, paragraph 43 on page 96 of the red line. Let me know when you're at that page.
96, you said?
Yeah, 96 of the red line.
Mhm.
Do you see there's some red line in the middle toward the bottom? Right after the red line, it says, the filing of a motion seeking standing to file a challenge before the expiration of the challenges, which attaches a proposed challenge, shall extend with that party for 2 days until after the court deals with the standing motion. And so the question I ask, there is already a provision dealing with a party in interest who wants to do something before the challenge period. Can the existing language, which is part of the negotiated deal, which admittedly is a heavier burden than what you've just described, I would ask you to allow the parties to at least have what's already embedded in the order, as opposed to simply a letter quote for cause. That's a request that will allow at least the parties to go back to their respective clients and say nothing changed in the order, and it gives Mr. Glenn the opportunity to do, there's an escape hatch that's already built into the order. Admittedly, you have to, put your money where your mouth is and come up with a motion for standing and attach the proposed challenge. That's my request to Your Honor, to stick with the four corners.
But if the answer is that they don't have the information to make a challenge, then what happens?
And I think what I've heard, and I won't belabor the record, I will respect Your Honor's ruling. What I heard was there will be full cooperation from the committee to share the information. And I would ask that the committee could make that happen in the next 24 and 48 hours, so that there's at least 8 days on the clock and they have the information.
Yeah,
Your Honor,
subject to a confidentiality agreement with the committee, we're fine with that.
Okay,
Your Honor, I will live with that for July 4th, but 10 days is to have a motion ready in 10 days to extend. And I'm not sure what Mr. Hillman's looking for in that motion. I don't see the difference between a letter and motion. If the cause is I need more time and more information, a short letter versus a motion, I don't understand why, as the party with a 10-day period has to be put to that higher burden. July 4th, I understand that was the challenge period to begin with, but since we're compressing the time, I think there should be some relaxation, and we should go with Your Honor's suggestion.
I would beg for the court's indulgence. Let's take up the Texas Taxing Authority. Maybe there'll be an opportunity after that discussion to take a 5-minute recess. And I think what I will go back to our clients with is July 4th with the language that's in the DIP order of filing a motion, seeking standing, attaching the proposed challenge, which is far more than a letter saying, I need some more time versus 10 days. I would like to ask the clients that question.
okay,
And I think that if that gives us an opportunity to at least take a breath to evaluate next steps. Is that acceptable?
that's acceptable to me,
Thank you, Your Honor.
absolutely.
So, Your Honor, for the record, Ross Fiedler of Kirkland and Ellis on behalf of debtors. Next is the Texas Taxing Authority's objection.
Right,
Your Honor, we deal with this on many cases, and most often we get to a resolution. So I'm really hoping we can get there today. We've been in discussions with their lawyers for the past week or two on language. But the crux of the objection is, the taxing authorities assert $5 million worth of pre-petition tax claims that are secured by the debtor's tangible property in Texas. They argue that the DIP motion fails to demonstrate that the authorities are adequately protected to the extent the motion seeks to prime their liens through the DIP liens and the adequate protection liens. So further, they've asked that the debtors establish a segregated account to reserve funds for any collateral subject to their liens. So the debtors and the DIP lenders don't necessarily disagree, but I'll let Mr. Hillman speak to that. We agree that they hold, secured tax claims against the estate. What the amount is still undetermined. In the last week, we've received a breakout of their claims for both estimated 2023 and backdated taxes from 2022, and I think 2 years before. So there needs to be a reconciliation process to determine what their actual claim amount is. But that's besides the point, because the authorities are already protected by what is in the DIP order currently. First, the DIP budget already provides for the payment of these sort of tax claims. And the taxes order that we got at the first day hearing gives the debtors the authority to make those payments. But more importantly, we already have reserve accounts, as we've discussed, that cover these sorts of tax claims. We have a priority claims reserve and a warn reserve and a wind down reserve. And as we discussed, the priority claims reserve is going to be collapsed with the warn reserve such that you have $26 million worth of value to be distributed to claim holders with allowed claims, such as the Texas taxing authorities. So there's no need for an additional reserve. We already have the reserves in place, and we've agreed that the Texas taxing authorities liens, to the extent there's any shortfall in the DIP budget, will attach to the reserves. And so we already have the segregated reserve, and there's no reason to establish what is now going to be a fourth reserve just because a party is requesting it. So,
all right.
Good afternoon, Your Honor. Joshua Bachner with Ansel Gurman Aaron on behalf of the Texas Taxing Authorities, if I may be heard.
Yes, of course.
Thank you, Your Honor. With me is Ms. Tara Gunemeyer, who has an application for Pro Hoc Vice admission pending, and with your permission, she'll address the issue.
Yeah, I absolutely. There's no concern about that.
Thank you.
Good afternoon, Your Honor. Chair Grundemeyer, on behalf of the Texas Taxing Authorities, appreciate you allowing me to appear via Zoom from Texas.
No problem at all. And ProHoc
Sure.
for today. You already have the application.
Thank you, Your Honor. The Texas Taxing Authorities filed their objection at docket number 283. Some of the representations are correct. Some of them I would like to explain a little bit further. The Texas Taxing Authorities liens, is correct. They are senior secured tax liens. They prime all other lien holders pursuant to the Texas Tax Code. So they are the number one creditor to be paid. And to have the Texas tax liens to be paid from a priority reserve that is for priority tax claims, administrative claims that don't even address the secure tax claims. The secure tax claims are not priority tax claims. They're not administrative claims. So arguably, the secure tax claims don't even belong in this reserve. Number two, how do my clients know that there's going to be enough money left after you pay the warrant claims, whatever those amounts are going to be, whatever the other priority claims are going to be, whatever the other administrative claims are going to be, there's going to be enough money left to pay my clients' senior secured tax claims. You heard on the record today that the ABL has been paid. A creditor that has a lien behind the tax liens has been paid. The FILO liens are going to get paid. And I don't understand how it is equitable that you allow a senior secured tax claim to have to attach the sale proceeds in a general nature, just sitting in the debtor's coffers that can be spent on admin expenses and other claims without those funds being reserved for the taxing entities. I think that section 363 is clear that if a secured creditor objects to the use of their cash collateral, they have to be adequately protected. And I think to adequately protect the tax claims, a reserve should be set aside just for the ad valorem tax entities in Texas. This reserve is not an absolute. It doesn't say that the claims are going to be allowed in this amount. It allows for a reconciliation. It's not a cap, but it's also not an allowance of the claims. The debtors have their opportunity to do a reconciliation as long as they need to. But those funds will be reserved for the tax entity so that we can ensure that there's enough money to pay the taxes.
Okay, and so you're saying that you're not adequately protected because you're not sure that that there's sufficient funds in between the budget and these reserves, which they're granting you a lien on to pay the $5 million?
That's correct. I understand that these taxes are in the budget, but Your Honor, where is that money? Is it being spent on other fees, on other expenses, professional fees?
Okay.
Your Honor, if I may.
Yes.
Just a few points. On the first point about the priority claims reserve, I mean, if you look at the language, which was heavily negotiated, it includes Chapter 11 administrative expense claims, priority, and other claims. So there's no saying that the secured tax claims of the Texas taxing authorities don't fit squarely within that definition. The second point I'd make is we have represented that the DIP budget accounts for the payment of these sort of claims. Obviously, we need to go through the reconciliation process, but whatever shortfall there is, we've already agreed to grant to attach their liens with the same priority as before to the reserves, which will be unencumbered by any other lien. And so they have first dibs on those reserves, and there's no reason to put more money at stake for a separate reserve than what has already been reserved for by the DIP lenders and the debtors.
And how much is in the priority claims reserve?
We have 10 million.
Okay. All right.
Your Honor, if I may, of that 10 million, just for the tax claims alone, it's about $5.4 million for just the Texas tax claims.
This is half of that. Yep.
Well,
right.
Subject to the reconciliation. I mean, we just received breakouts, and part of the tax claims are for estimated 2023 tax claims, which still need to be worked through with our financial advisor. And that process is undergoing right now. But we imagine that number is going to be slightly lower.
Well, All right, well, I understand the position of the Texas taxing authorities and I think the provisions that have been made here in paragraph 61 do in fact provide adequate protection and segregate the funds in some respects. The adequate protection is in the form of several forms. It's in the budget to pay claims like this. It's in the priority claims reserve, and that does include secured claims as just represented on the record. And then there's also the lien that attaches to not only the priority claims reserve, but the Warren Act reserve, which is another, I'm not sure exactly how many millions are in the Warren Act reserve, but
16.
it says it right here.
16, so it's 26 in total.
So it's 26 million and change. To me, that's adequate protection while the claims get reconciled.
Thank you, Your
Your
Honor.
Honor, Your Honor, if I can just talk about paragraph 61 at your indulgence. If you look at towards the end of that paragraph, and it says the Texas tax liens shall be paid by the debtors and shall attach to the priority claim reserve and warrant reserve to the extent of any shortfall. So I think that's unclear. Are the debtors going to pay the tax claims from sale proceeds, and to the extent of any shortfall from any sale proceeds, then are the taxes being paid from the reserve? Number one, that's number one. And number two,
If there's any shortfall in the DIP budget for the purported claims that the Texas taxing authorities are asserting, then the liens will attach with the same priority as before to the reserves, which again, 26 million far exceeds what we think is going to be a claim in between 2 and 5 million.
So Ms. Grunmeyer, I think he's saying, and maybe if it requires a little bit of tweaking to the language, he is saying that it's going to be paid within the budget, but to the extent there's any shortfall in the budget, it attaches to the priority claim reserve and the Warren reserve in the same priority.
thank you, Your Honor. And so from what I heard, the representation made by the debtors council that the tax claims will be paid first from these reserves.
I'm not sure he said that. I don't think he said that. He said it's going to be paid in the same order and the priority in which you have the lien. I didn't think he said it paid first.
Perhaps I misunderstood, but I believe they were.
Did you say that, sir?
No, you accurately represented, and I think the language stands on its own.
Yeah. So I mean, but I understand what Ms. Grunmeyer is saying is that can you just change the words to say that shall be paid by the debtors in accordance with the budget, and to the extent there's any shortfall in that in payment to Texas, its lien shall attach to priority claims reserve to the extent of the shortfall?
Yeah, that works, Your Honor. That's the intention of the language. So we'll add that. Yeah.
I think it kind of says that anyway.
Yeah.
I understand Ms. Glenmeyer's position. I think those are just by way of clarification, really.
So, Your Honor, I believe that was the last issue on the DIP order. So unless you
Well,
have
I know they're not 5 million, but what about Maricopa County?
They are accounted for in this language. I believe in the footnote, their entities should be accounted for.
I know you said I didn't see that particularly, but I might not have caught it. I know you said that earlier. But
let me collect on our side and just make sure that they're accounted for in this footnote. But if they're not, we'll make sure they're included.
okay. So you were talking about
Footnote 16.
Yeah, I didn't read all those counties, to be honest with you. So,
Neither did I. They got to be in there somehow, but we'll make sure they're in there, Your Honor.
Searching
All right.
for.
Well, I think certainly what's good for the $5 million Texas claim is good for the Maricopa County $49 or so thousand claim.
That's right, Your Honor. Yep.
Your Honor, just looking through the definitions, I don't think Maricopa County is included.
I'm sorry, Mr. Mayor?
I was looking through the definitions of the counties, and I don't believe Maricopa County is included in the footnote. Not that I represent Maricopa County, but
You're in the government general protection mode. I understand.
indeed.
Yeah, but it's, you know what? They can do a search, and if it's not there, then they got to put it in. That's it. Very
Okay.
simple.
Thank you, Your Honor. So unless, I believe we had one more issue
We have
on
one
the,
item left from the DIP financing cash collateral. Mr. Herman was going to talk to his client about a recommendation, and then we certainly have to give Mr. Allen a right to be heard.
Your Honor, David Hillman, Proskauer. It's 5 to 12. I think
5 to 1 I have.
oh, you're right, 5 to 1. We don't need a long break, but I would appreciate the court's indulgence for a 15-minute break. And then we can knock on your chamber's door and reconvene, and I can tell you where I've landed with the clients and take it from there.
Absolutely.
So that
Not a
brings
problem
us,
for me. But I think we should finish what we have here, right?
That's where you're going.
We should finish what we have on the agenda, and then just leave that one item for a little later.
great, Your Honor, that was going to be my suggestion. So thank you.
There you go.
So if we move then to agenda item 2, this is the Alex Partners retention application. It's to retain AP Services LLC to designate Holly Etlin as the Chief Restructuring and Chief Financial Officer effective as of the petition date. The application was filed at docket number 350. A supplemental declaration was filed in support of the application at docket number 621. So at this time, I'd like to submit Ms. Etlin's declaration into evidence.
Any objections? Anyone wish to cross-examine the declaration? The witness making the declaration? Having heard no response, I will admit it into evidence.
Thank you, Your Honor. So, Your Honor, we have submitted a consensual form of order to your chambers that's incorporated comments we've received from the United States trustee. I believe we're fully resolved. So unless you have any questions, we respectfully request entry of the order.
No, I saw that was the representation. I'll ask Ms. Steele if she wishes to be heard.
Yes, Your Honor. Thank you. Good afternoon. Fran Steele on behalf of the U.S. trustee. No, Your Honor, the U.S. trustee and counsel did agree to the form of order. And with that, the U.S. trustee has no objection.
All right. Well, I'm not going to interfere with the parties' positions on this, and you know, there's certainly a necessary party to get this restructuring concluded, or this reorganization concluded as quickly as possible, and I'll approve the application.
Thank you, Your Honor. The final item on the agenda is going to be handled by my colleague, Ms. Acuna, which is the world market assumption and assignment motion.
Okay. Thank you.
Good afternoon, Your Honor. Olivia Cunha of Kirkland and Ellis on behalf of the debtors.
Good afternoon.
And I will note that my ProHawk application is pending and just wanted to request permission to proceed.
You have that permission.
Okay, great. So the final item on today's agenda is the debtor's motion to assume and assign certain unexpired leases. And that motion was filed at docket number 428. And pursuant to this motion, the debtors were seeking authority to assume and assign 10 unexpired leases to World Market LLC. But as reflected in the revised proposed order that was filed on Monday at docket number 705, we're adjourning the motion with respect to one of the leases identified as store number 6383 So pursuant to the revised proposed order, the debtors are seeking to assume and assign 9 leases to World Market LLC. We did receive other informal comments from certain parties, and all of these comments have been addressed in the revised proposed form of order. So unless Your Honor has any questions, the debtors respectfully request that the court enter the revised proposed form of order filed at docket number 705.
Right, this one is the leases that really World Market is agreeing to pay the cure costs, and it's not really any consideration, any separate consideration being provided for the assumption and assignment.
That's correct, Your Honor. They're currently the sublessees in
All right,
each of
does
these
anyone wish
stores.
to be heard on this application? Having heard no response, again, this seems like a very appropriate exercise of the debtor's business judgment, and has also been vetted by the committee and the banks, and I'll approve the motion.
Great. Thank you, Your Honor, and thank you to the World Market Council for their help in this process.
Okay, thank you. All right, so Mr. Glenn, I think you heard that Mr. Herman is going to talk to his client about the date that we've been discussing, and I guess I don't know if he's already out discussing, but and then I don't know if it makes sense for then Mr. Herman and Mr. Glenn to speak, and whether you need to get anyone else involved before you come back to me, or you just want to come back to me. But why don't you propose that? Why doesn't someone propose that to Mr. Herman? And you'll let us know when you need us to come back.
Great. Thank you, Your Honor.
Thank you.
Thank you.
Thank you. Thank you, Your Honor.
Wants to stay on the line.
Love Liato as well. So looking forward to those second half of our program. But before then, it's time for upvote, downvote, not endorsements, not recommendations. we'll kind of continue what we've been doing. We'll go through all of them. And again, for the second straight day, all 4 of these names have sort of a singular news story connecting them. We'll go through that. We'll talk about sort of the nuance of that particular update. In this case, I believe it's from Piper. And then we'll do our best to narrow them down. But again, there's never a right or wrong answer. Again, not endorsements, not recommendations. We'll just kind of go through some reasoning as to how we narrowed them down.
Right, so we'll kick things off here with Chipotle, which, as you can see, of these 4 restaurant stocks, it's actually the only name that is making a move lower today. But Chipotle shares have had quite a nice year. They've fared what has been I would say, difficult space to navigate in terms of the restaurant stocks fairly well. Now, Piper did assume coverage on Chipotle with a neutral rating and a $2,075 price target, which would imply some upside, but considering we're looking at a relatively more expensive stock trading at just around $2,062 right now, that only implies, about $13 of upside. They said that the big move in shares creates struggles with the current entry point, especially given the overall backdrop right now for the economy. Chipotle is one of those names, though, that almost has a cult-like following. People that love Chipotle are very loyal. The company has highlighted the fact that their loyalty program has had a nice pickup over the last several years. And they've also highlighted recently how they're trying more ways to be contactless. They have ghost kitchens. They're still testing out so many features. And Chipotle is somewhat of the leader, I think, in terms of a lot of restaurant technology. They have also pioneered the fact that you can see your food being made in front of you. They were one of the first to do so, and they've done it very well. So Chipotle, for that reason, has outperformed this group. But this analyst now taking a pause, just given the fact that shares are up over 49% on the year.
And it's funny, when there's so much optimism kind of brewing in the market, new bull market, new highs seemingly every day, 50% rallies year to date, neutral seems bearish, does it not? So I think that's always quite interesting, but maybe prudent from this analyst at Piper. But they're not alone in just looking at Chipotle. The same analyst basically taking a look at the entire restaurant space, a sort of fast, convenient market. Another name they looked at here, Jenny, of which Chipotle, of course, of these 4 is the only one lower on the session. The next one, though, is Starbucks. And I remember talking about this one with Tom White, I believe it was earlier this week. And I was just surprised to see the stock below $100. It's now since reclaimed that. But you look away and some of these names just make really big moves. It just happened to be that Starbucks was to the downside over the last month.
It is, and this name is up about 0.8% now on this session, but it's not seeing the same degree of performance, at least on a year-to-date basis, compared to, say, Chipotle. But this Piper analyst did assume coverage also with that neutral rating, so not so optimistic on Starbucks, and a $107 price target, obviously implying about $7 of upside from where we're currently trading. And I was looking at the broader picture in Starbucks because this name has not caught the love from the street this year, and it does seem like at least we are seeing analysts still skew more optimistically. Actually, of the 17 analysts covering Starbucks, there are 11 that lean more bullish, 6 are indifferent or neutral, and there are no sells still in this name. But the average price target among these analysts is about $117 a share, which is a little bit more optimistic than Piper Sandler today, but again, not implying some huge upside. But I will say that, Alex, months ago we discussed the fact that Starbucks did have these Oleato line of drinks, which is basically just coffee added with olive oil. I tried one today because they are finally now in the Chicago market, and I am extremely mixed on that. But conveniently, I rarely ever drink Starbucks or coffee, and I did try it ahead of the show today. So right now, I'm mixed on the Oleato drinks. I had to give my update because I covered this when we first got news that they were not being received very well by consumers.
See, this seems to be the maybe next iteration in the combining some sort of a fat source with coffee. I mean, the big kind of trend.
And all right, I couldn't hear the end of that hearing. We'll talk about that once they're done here. Buys coming back down. It's at VWAP. I was drawing a little inverse cup and handle there for you guys. I don't know if you saw it.
Maybe not going to be doing that again, but you're not much of a coffee drinker to begin with, Jenny, from what I understand. So maybe we got to get some insight on someone who's drinking the beans on a regular basis here. But next one on the list is something I know that you also feel a little bit more of a closer tie to, I guess, and that's Domino's.
I was going to say, if I'm not an expert on the coffee space, Domino's Pizza is an area I can speak all too well to.
Are they on like recess? Are they going to come back, or is it like an extended recess, like days?
Analyst does initiate Domino's Pizza at overweight with a $349 price target. And that's what I'm talking about. That is a price target that would imply Domino's Pizza has somewhere to go from here, given the fact that we are trading just below $305 a share. Now, Domino's, of all of these names, is the worst performer and by a significant margin. It's down now on a year-to-date basis. It's down still over the last 12 months, and they say that for this reason, that favorable risk and reward is now showing a nice setup relative to its peers. They recommend legging in now for share outperformance in the coming 12 months. Domino's has seen some pretty broad selling following its latest earnings report.
Oh, 15 minutes.
It
Whoops.
does feel like this name at this point, just given the
They talked about a recess before, and I thought,
so
then they just kept going. I was like, what happened?
Now, the analysts that cover this name, average price targets range from 270 all the way to 415. So this name has a wide range. The average rating is still outperformed, but again, I hate to say it, Domino's Pizza on a year-to-date chart just looking completely unlike all of these other names, Alex.
It really has, but you got to look back and over time. I mean, this is a company that really transformed itself and faced a lot of risks. I mean, the kind of Uber Eats, DoorDash, Grubhub sort of revolution that really took hold in the last half decade, accelerated during COVID, put a lot of pressure on traditional delivery services like pizza companies, as at one point, pizza was sort of your best, kind of delivery option, maybe your only delivery option, depending on where you are. Of course, facing a pretty substantial heat from a competition standpoint. And
Thanks,
Barnes
Goddard.
done okay navigating that. So looking at Domino's, obviously this is a little bit more of a contrarian take from this analyst. They've seemed to kind of take a more case-by-case approach. It doesn't seem to be a one-size-fits-all. Starbucks sort of underperformed recently. It was neutral. You look at Chipotle, it's been an outperformer, neutral. Now Domino's, an underperformer with the overweight rating, leading us to our last one. And so I don't know much, I don't know, from a product standpoint, I can't say I'm a consumer much at Domino's, but I do like some Shake Shack. Haven't been there recently, but I'm a fan.
I don't think I've ever met someone that was like, oh, Shake Shack, not for me. I feel like this is one of those names that has a lot of love behind it. And actually, on a stock perspective, the chart in this name looks the strongest, and again, by a lot. Shares are up 2.5% now on the session. And this name has gotten a ton of love from analysts lately, following some really impressive margin progression. It's driven by their staffing revamp, as well as a fewer margin that is dilutive now to third-party delivery orders. They have been ongoing some of these cost structures to then make themselves operate in a more lean environment. Actually, after their first quarter results, we saw shares get a nice lift. But following this Piper Sandler note, we did see they named actually this stock their best idea in the restaurant sector. They assumed coverage with an overweight rating and an $84 price target, saying the company is still in the midst of putting some very long-standing debates officially to rest. So they only see further upside here for a name like Shake Shack, which touched 52-week highs earlier in the session today, and also holding on to the fact that it is seeing even a nice lift in today's session, Alex. But this name, I would say if you put these all up on a comparison chart, Shake Shack looking like the clear winner, at least year to date.
Yeah, and I love that you clarify the year to date, because if you zoom out, you get a very different picture, right? And I think that maybe
SPY's coming down more.
Sort of
there's a Head and Shoulders here, pretty obvious one, and then there's Empress Cup and Handle too that just broke the lip on the cup. So
but it's about half what it was
for 437.
Towards the beginning of 2021.
33.
Jenny, this is pre-inflation, but I remember going
oh, that was the pre-market high right there too.
In downtown in River North after reporting on the earnings one day, kind of gave me the craving for it. You can do some damage there, even for just yourself. I remember spending I know we did that Taco Bell conversation with the big thing. I spent nearly $40. This is pre-inflation, so I don't even want to know how much Shake Shack is costing these days. But four really, really interesting names, all unique, but having this note tie them together, and in many ways sort of trying to accomplish the same thing, which is provide efficient, kind of convenient, recurring customer bases with the products that they serve.
I respect that. A $40 Shake Shack order, and I love when you get delivery and they give you like 2 sets of utensils as if it's for 2 people and it's for
or
just
the bags, really, really big. Yeah, it really makes you feel great.
Yeah, it really does. But we'll be diving into some example trades as well as the technical levels in our upvotes today. Moving on with our winner, I would say being Shake Shack, and then naturally with the loser, at least in terms of a performance basis, with Domino's. We'll be looking at
coming down there,
as well as the trades coming up next.
Okay. I didn't catch the end there, but a couple of things I did that were interesting with that court hearing. For one, that 6th Street is an interested bidder. I guess, Cameron, you were saying that was some tinfoil that people were saying. And their attorney is the same one that IP used, which, whatever. I guess to me that doesn't matter too much. I don't know how common that is that someone that closely tied, some entity that closely tied would be an interested bidder. Seems like there's some conflict of interest in there. Not sure though. And then yeah, and then it was kind of the controversy between 6th Street and the Chase guy. That was kind of interesting because then he like had to basically get back up on the podium and try and negotiate it again. And for us, I don't know who's for us and who's against us. I think at this stage, it's none of these people. If there's a big party behind all of it that's buying it and going to give value back to shareholders by paying a premium for the stock, and maybe it's someone up there, maybe it's 6th Street, but I doubt it. And then of course I don't know where the guy was even represented from, but he said he represented the bondholders, the one with the library behind him. And he said it's interesting because retail is the largest holder of the bonds, or a very large holder of the bonds, which is pretty unusual. So as far as the bankruptcy hearing, it seems pretty normal, which isn't good. But it's not bad yet. I'm waiting for them to start saying, oh well, maybe Chapter 7 is the way to go, or that's kind of, I guess, what I'm waiting to hear for. I don't hear that, and they kind of keep going along with negotiating, and maybe there's a big interested party that we don't know about yet. Just have to keep listening out. As far as the sell-off today from it, I don't know. Down 14%. I didn't hear anything necessarily that would merit a sell-off specifically, so might not matter. The 10-day period is granted with no extension. No auction. I don't know if you're talking about well, I didn't hear the end of it, but the only extensions I heard that we're trying to get passed was from the library guy, Andrew, on behalf of the bondholders, and that was just an extension to be able to ask more questions, as he said. So I don't know if that was actually really even mattered much, but maybe you heard something else, Sean. For sure, Benedict. Yeah. I mean, shareholders, they don't owe us anything. So they're trying to do as much as they can to not pay out anybody. As you heard from 6th Street, it's like, we're interested bidders, and we want to make sure we're not overpaying 1 cent for what we're getting, of course. The money they provided was simply proxy for IP. He was missing a similar amount of filing earlier this year. Yeah, and I mean, a lot of them are under different NDAs, and some of them mentioned it today. So there is there are different conversations going on that we don't know about for sure, and that's basically the only hype that's left and the only hype that ever was conversation we don't know about, and agreements or deals. Looks like they're all back there now. I don't know when they're going to start though. It's entertaining to watch though.
like I said, we really
Shot
need to get above
master.
that trend line first before we can resume any kind of upward trajectory here in the bigger picture.
Yeah, this
So
was,
in terms of support and
Prosecutor
resistance,
Rose had
a
IEP's
couple
million
places
address.
to watch
I
here.
think I saw that
First,
10
as I
too.
said, to the downside, we've got
500 trillion a share.
21-day
No
yield,
sell, no
which comes
sell.
in near about 303 or so. That's the
Just
point
got
to
it.
hold today. Then we've got our double bottom near 291. Then we've got our lows to watch near 286 or so, just below 286.
Yeah, and I don't think that's off the
Many of
table.
important
Is it,
areas to
Cameron?
watch to the downside here.
If IEP is involved, he potentially could have.
Then we've got our orange 60.
If he's involved, he might have seniority.
312. Then the top of the range
He owns the dip. Yeah, I didn't hear anything that would refute that at this point.
So many places to watch, a lot going on with this
Hibachi
chart.
leftovers.
At the same time, kind of a simple read. It's still kind of trending down overall.
Yeah, and Rick, I mean, still, even with its move higher
This
today,
is tough. Jenny or bankruptcy court hearing?
now on the session, still not putting a dent in
Okay.
the this name is losing face on a year.
Good afternoon. We are
Watch
back at the
Jenny.
record,
Listen
on
to
the
the
record on
bankruptcy.
the Bed Bath and Beyond case. And I first have to apologize to Mr. Hillman because I've been saying Herman. And they pointed out to me that it's Hillman. Apologies.
No, all good. I appreciate that, Your Honor. David Hillman for the record, Proskauer Rose, counsel for the DIP agent and Philo agent. Appreciate the break. We used it productively. I spoke to our client. I also spoke to Mr. Glenn, and I'm pleased to report that we took your commercial practical suggestion, tweaked it a little bit, and we have a path forward that I think is agreed on all major points.
Quit hitting
and
your
there's
mic.
Probably one quasi-substantive point that I'd like to be heard on. So we're dealing with the challenge period, and as you know, the challenge period current structure is 10 days from the date the court enters the order, or July 4th, the early of those dates. And so we know that July 25th is in effect the current challenge period based on the form of the order. So first, the ad hoc group will receive a diligence package, a care package from the creditors committee within 24 hours after Mr. Glenn's clients sign an NDA with respect to the information. The creditors committee's counsel has told me during the break that they will use commercially reasonable efforts to cooperate with Mr. Glenn and his clients to give them information as it relates to understanding whether there are any potential challenges to be asserted. The ad hoc group, if they are seeking an extension of the June 25th challenge period, they can do so by filing a letter, a notice, a motion, whatever it is that Your Honor would prefer as to the vehicle for that extension, citing cause for an extension. The outside date of that extension sought or any extension granted would be July 4th. So we would have a hearing if such a request for an extension was made. We would have a hearing on that on June 27th. Obviously, they would have to seek the extension before June 25th. We would have a hearing on June 27th. If there were an extension for cause of the challenge period, there would also be an extension of the reserve release date. So for example, the reserve release date currently is set at 10 days after the court enters the order. If Your Honor grants a 2-day extension, then the reserve release date would also be extended by 2 days. The place where I think Mr. Glenn and I may have a disagreement is, what does he need to do to convince Your Honor that there is cause for an extension? We would suggest to the court that he gives some indication as to what the open issues are and the potential challenges are. Something less, admittedly, than a full-blown standing motion, but something more than we need more time. I think Mr. Glenn is fearful of tying his hands to a standard before he knows what cause is. But I would just ask Your Honor to apply what I will defer to Your Honor if I think you are ready and able and capable to determine what's cause. And so I don't know if we have to legislate what it is, but I want to make clear that it's, the reason why I say we need more time, that rings hollow to me because they appeared at the first day hearing in this case. I can remember Mr. Glenn's partner was on the Zoom, and I think he made a comment that he couldn't travel from Connecticut to New Jersey. They've been on scene. And so I know Mr. Glenn has made a point of there's only 10 days left on the clock, but I would submit, Your Honor, there's been, I don't know how many days since the case was filed, almost 60 days. There's been a lot of time that has already run off the clock. So I don't want anybody to be surprised. More time is going to be met with a vociferous objection.
How about good cause shown as determined by the court?
I can't argue with that.
Mr. Glenn?
Yeah, that's fine with me, Your Honor. I don't know the extent of the cooperation, the speed of the cooperation that I'm going to receive. I don't know what information there is. So I understand, I think we all understand what's on the table now. And I've already issued information requests to Kirkland. I've asked for the NDA from the Pacholsky firm. And so we're going to work as fast as we can. Not knowing what's out there, I'm not going to pre-agree to any specific standard for cause. I understand I have to persuade Your Honor.
Yeah, I understand all that, but on both ends, like there's right countervailing points that are being made. Number one is that the bondholders have been on the phone or have been involved since the beginning. That is true, and I'm not inclined. And well, you guys already agreed to it, so I'm not going to say anything more. No, number two is though that apparently for valid reasons that you really haven't gotten the information that you wanted to see yet, and I will, and I think with a non-disclosure you should see it, and that'll be fine. So I think this is a good way to address those issues in a very limited period of time, and allow the process to work itself through a little bit. But I'm going to consider all the factors. I have to remind everyone that this is, as I understand it, the deal is that whether the reserve date gets extended, reserve release date gets extended or not, and whether or not a challenge is filed, I guess this is to you, Mr. Hillman, and whether or not a challenge is filed, the reserve is going to be released on whatever date that is.
The ego on you.
Was I clear on that?
Thanks, Ace. Appreciate it.
Allow me just to restate what I think you've said.
Music 360,
where there's an extension of
come to chat.
The June 25th challenge date, not until after July 4th, and a challenge is met, and there are very specific rules as to what one must do to make a challenge, and we're not going anywhere near what those provisions in this final order say. They say what they say, and there's a very high standard. And if that standard is satisfied, and if there is a challenge, you are correct there that the reserves no longer are forfeited upon a challenge, but they are going to be delayed.
By whatever the extension is.
We're talking about 10 days here.
Yeah.
And I am very confident, and I'll just say this and sit down, there won't be a challenge here, and we'll see what happens in the next 10 days.
Well, you stole my thunder a little bit, because I don't think Mr. Feinstein and Mr. Sandler and their team or the debtors made what they thought was a bad or unfair deal, and I'm looking at this in a broad context. So I know, everyone will do what they have to do, but I'm considering all those things. And by the way, it doesn't have to be a motion. It can be like a 2 or 3 page letter requesting the extension and saying why. and you can submit a 2 or 3 page letter in response, or I'm not setting the limit. I'm just saying it doesn't have to be a full blown motion, or a 100-page order or anything like that. It's just I'll keep it simple, and anyone can respond. In other words, it sounds like there might be, if Mr. Glenn says, I didn't get this from the committee, then the committee might want to respond. So whoever needs to respond will respond. Or I didn't get this from the debtor. I don't know. Whatever.
Thank you, Your Honor. Appreciate your time.
All right, Mr. Glenn, are we
Thank
good?
you. Yes, Your Honor. Thank you.
We're good. All right, so then we just need a slightly revised order to reflect that small change and but nonetheless significant one, and also a slight tweak in the Texas order language.
Great. Thank you, Your Honor. I think that's it for today.
Thanks so much. I'm repeating myself, and I can't emphasize enough how much I appreciate all the effort that must go into this by the parties, and how you are achieving this in a very professional and competent, but also arm's length manner. That if I was ever convinced that parties are fully well represented and negotiating to the best of their ability to get the best deal they can for the clients, here we are. This is the case. Okay?
Thank you, Your Honor. We appreciate that.
Thank you very much.
Thank you, Your Honor.
Have a good afternoon, and we'll see you.
All right, there you had it. They took a recess just to come back and talk about that extension. Yeah, I guess that was the big deal on the whole hearing, was that rando coming in with his bookshelf trying to get more time. And then I guess the bit of that negotiation with JP Morgan and 6th Street or whatever went on there. Thanks, Goddard. Thanks, Ace, for the gifted membership. Music 360. You've been summoned out of your lurker corners and ways to the chat. Come thank Papa Ace for his kind generosity and service. Thank you guys for your 47 likes. We're at 130. Those guys wanted to wrap it up before Powell. They've got calls and they want to watch them print. So court hearing, they're like, we got to go, man. It's 1:30. I've got calls. Powell's at 2. I want to watch these things print. Gotta get home, watch on the big screen. So that's perfect timing for us. It's been pretty slow, but it's actually played out pretty nicely. Not too much chop, really, for the most part. Pretty clean patterns. So been pretty nice to trade pre-Powell. But this will all be engulfed by huge candles, I'm assuming. We've had some meetings where it hasn't been big in the last 2 years. I think there was one where it was oddly small, but typically it'll be large. So buys come down a little bit more here. It's up 0.07. The down actually at the low of the day. Yeah, it hasn't even made it to the low of the day yet, so getting there.
Servers that actually run some of those ads.
So Kevin, this is not the first time, of course, that Alphabet and Google, related to Alphabet, have faced some EU as well as FTC scrutiny, and it's not the first time we've heard antitrust thrown around when it comes to Alphabet shares. They've already faced as much as €8 billion actually in fines, which they have not paid all of. But what does this really look like for Alphabet going down the road? Because Meta is another one that I think is typically given such scrutiny right now from regulators, given antitrust concerns, but then Meta seems to always shake those off quite well. So is this going to be something that Alphabet's able to shake off? Like, do we give this a ton of credibility here? Shares are lower, but not necessarily making a huge move to the downside on this news.
Yeah, I think at this point, they're going to probably work with the regulators and see what they could do to be able to satisfy their concerns by but also trying to keep their whole overall business intact. So I think that's going to be the overall goal. They may have to pay a fine for this, but they're going to have to probably try to provide a little bit more transparency into their business, more for the consumer, in order for regulators to try to get off their back here a little bit. So I think that's probably going to happen here in the near future, and that's exactly what's happening to Meta, especially when it comes to some of the other EU countries that it's been dealing with. They've been trying to convert their business or try to provide a little bit more transparency when it comes to privacy concerns and things of that nature, in order to try to block the ability of potentially selling off a piece of their business in the
What's going on,
future. I
Mullen?
think that's going to be the same for Google.
Selling off. I think they offer shares again.
But not necessarily something that warrants a major stock move. So
And
these regulatory concerns, it's sort of ongoing until we get some final news from either Alphabet or at least the EU. But we believe they're the insight. Kevin Green.
Nothing. I mean, it had a big rip. Collaboration with Phoenix.
Alex, and it's time for FOMO. So we are looking at SoFi.
It's just back into its trend. It's a pretty awful trend, but you can see it.
41% this month and almost 20%.
I mean, it's look at that 9 moving average. Hasn't even broken that.
Companies, a lot of hype around it, has some meme stock elements at times around it. Maybe had a little bit of the stadium curse as well.
What are they talking about?
Game on the LA football team stadiums as well. Super Bowl played there, of course, but doing pretty good.
Accelerating its sell-off. So usually a reverse split is a bad sign for a stock, and they want to just up the price. They can offer more shares.
There's got to be news behind this, right?
There is news behind it. And I
Yeah,
will
that's
say I talked about an earlier note this week out of True
JH Trades. You still have shares in this thing, man?
The analyst was, and I got absolutely torn apart on the internet because this name has its strong believers, and I think for that reason, this name with so much right now and so much focus on SoFi, we are seeing
they did
a
RS.
lot more analysts come and update their coverage on this name, but nothing but positivity today out of BTIG, calling the company a top pick among their financial technology.
Throws a rock at him. But he missed because he already left. He just broke a glass.
The average price target of $8 stands around $8 right now. They said that the shares, with the fact that we have seen a nice lift, this is already on top of the.
We might get news before 10 days.
This year, but
Very, very possible.
BTIG analyst said that SoFi is cheap compared to its peers based on its price to tangible book value, which is around 2.
Bouncing back up to VWAP a little bit. I did close my shorts down there.
Its financial services products and its aim to achieve profitability, which they anticipate.
I didn't see when I grabbed my short here from Head and Shoulders, and then I actually didn't close it here. I'm like, I'm just gonna hold it. Came up here, it actually stopped me out. I wasn't even noticing this inverse cup being built. I know better than to not close a VWAP, but if I close a VWAP, it would have reopened on this cup and handle. But I did end up reopening up here on this inverse cup and handle. So made that short work. Kind of bear flagging down here, but we'll see. It's too close to Powell. I'm gonna just wait now.
This name has seen their loan origination volume fall about 47% as of last quarter. So that's another area of strength that has been overwhelmingly
Strictly's isn't forced. Strictly.
Student loan payments resume again, that this name will be a huge beneficiary of that, because that's 47% of their volume that was lost that could be expected to then be regained. So
50 likes on the day. Thanks, guys. Appreciate it. We got some bankruptcy court hearings, GME, and Powell in one day. Are they containing my excitement?
When looking at this name, there's a FOMO feeling to the upside, and you've missed the rally if you've now been a part of this name just over the last 2 weeks, with shares up now 131% off the 52-week low.
Yeah, and I'll get to a trade illustration with that in mind just a second.
All right, what's the high going to be on these candles? 441.
Perceived to be over now. At least there's a finite end
below
agreement in place to
430.
get that up and running. This is a company that would typically benefit from sort of action being taken within that, maybe refinances away from other sources, maybe into something like SoFi.
Ew, it's yellow.
So high, there may not be incentive right now to actually refinance some of those different loans that are outstanding that maybe have been sort of paused in payment. So that might be something to watch. But you mentioned about loan origination. Personal loan growth has been a huge strength for them, offsetting a lot of that weakness. But the one thing that hasn't really been stressed.
Barbecue move back up to VWAP and beyond. Only down 11% now.
The most stable highest.
Got a gap up here now at 20, 30 to fill.
Borrowers. And so if you do have substantial recessionary time frame, deterioration in the economy, potentially uptick in unemployment rate, what is that going to mean for SoFi? How stable is their, I guess, exposure?
We'll probably listen to actually
because it hasn't been tested. And so,
Stock Market Live for the breakdown of
I think there
statement.
is question marks as to how exposed is this
Keep
company
people out.
potentially in an economic downturn. But those are questions that we won't have answered until if and when that ever happens.
That's such a good point, because I think that if this company were to endure a recession, what do their credit losses look like? What do things look like when the overall market continues to go south? Because to me, to say the company is the future of U.S. banking, you need stability to then be able to say you are truly the future of U.S. banking. But again, that is a wait and see situation, Alex, just something that I'm keeping on my radar going forward. But now trading this name here, shares are getting a nice lift today. They're up about 2.6%. Like I mentioned, having a really nice couple of trading sessions. And there are, I definitely say, a choir of bullish analysts right now praising this name, just given its position.
There's a little more of a pop on barbecue, 1920,
The analysts in particular that we were
down 10%.
today,
If we get that gap filled today and bump back up above the 20-cent level for support. Nice little intraday OTC volatility.
That's possible. Maybe by the middle of August or so. I looked at a strategy that would benefit from that. July, August, 14 call calendar. This is a name that right now, I guess George would talk to us a little bit about sort of investing stocks versus
Overstock's still holding up pretty well.
Words into his mouth, but I could say that with the volatility that's surrounding this name, at least right now,
Fine sushi.
you can certainly see the attraction.
Gross, Ace. Didn't eat fish in the Rio.
Get into the specifics on whether or not it's
Nasty.
a positive or not an investment vehicle, but just from a trading standpoint, anytime a stock is moving around as much as this one has recently, it's going to garner attention. It certainly has. And so, looking at a strategy that is relatively speculative in what it was asking for the stock
What are
to
they doing?
do, but doing so in a very
All calendar.
risk way, only taking $20 in risk on this for an upside shot at around 40 or 14 rather for that strike here on the call calendar. Beauty of this is very customizable. You got a different opinion, different outlook, different price target. As long as there's strike availability, you can act on that in that way. But with this one, Jenny, I just looked at the analyst price target. Simply use that for the benchmark here on this one. But really, every time we've looked at these kind of calendar spreads, it's more about precision, more about accurately projecting the stock price and where it'll be, throughout the duration of this particular trade, as opposed to directionally being right or wrong.
Yeah, I think that's really well put, and of course considers the fact that this is a volatile name in nature. It has swung to massive heights as of late, but of course it had been down pretty significantly over the last 12 months. But we will leave it there for FOMO. Now coming up next, we'll look at
20 on barbecue. Yon's down 2%. Coins up 3.3. This is kind of selling off today. Not sure why. Down 4.3. Looking to average into the cash secured puts on Dish. Need a little more lows. See if we actually bounce on this price range. I'm not sure why the premiums are high. It's kind of scary actually. Wow, it looks like it's setting up a bear flag, but yeah, I'm gonna wait. We've got 20 minutes till Powell. I think it could go anywhere. Zero fish in the Euro Grand. Makes sense. Then you better not be eating any sushi out of there. They're just not in your town. I've seen people fishing in the Rio. Upstream. Companion down 5.8. IEP. Crushing all your hopes and dreams. It's down 4. So big sell off, but it bounced pretty good from that. It's above VWAP now. But it's still going to get an engulfing candle on the daily here. Not to say you have to exit today, but if you did want to trade it, probably consolidate here or just kind of keep selling off for a bit. But it's a divvy stock, so you can always hold it too. Not like X divvies anytime soon. When is it? It's quarterly on here. Got until 8/18. Yeah. Gas station sushi. Whew. Barbecue 1901. It's above VWAP now. He's down 4%. Thought I legged into those calls I irrationally bought into yesterday. Got an RSI divergence here on the daily. But price action's still pretty bullish. Yes, Wayfair was actually on the screener. All these have had a big rally. $2 a quarter. Yeah, it's still pretty high, huh? Still much higher than they can sustain, I think. Yeah, 27%. That's sketchy high. What about Mullen? Mullen's pretty flat on the day. Gap down and flat. Not sure if there was specific news for the gap down or if it's just continuous trend down. Lawsuit. Mullen's stock proposed state of incorporation move trigger against another lawsuit. I don't know. I don't know what the news, if there is news on it. Phoenix truck deal, which doesn't seem bearish. But that is it's just been gapping. Look at all these gaps. Another day. This is just another Wednesday for Mullen. $60 million market cap. Free revenue. They're losing $70 million a quarter. Seems legit. Buy it.
Sessions, but it is teetering. If we were to close right now, I mean, it would be a photo finish whether or not we're calling this an up or a down day at this point.
Yeah, you're right, because it's been teetering around unchanged today and has been in the red. At least I saw about 10 minutes ago it was in the red, not by a whole lot. But this has been Tesla's longest winning streak to date, and it was 13 sessions as through yesterday's close. Today, if it goes up again, it'll be 14 sessions.
Jeez, Nikola gapped and went.
Sports Model Y all-wheel drive in the United States.
Not a huge gap and go.
Now that's the third time that Tesla raised prices on the Model Y since April.
It looks good though. I like all the volume pouring in.
Cuts that it did.
Good late on this one.
And that you can thank the $7,500 tax credit for that, because it did qualify that for that as well. But Morgan Stanley has been questioning how much cash flow does Tesla really generate while it's having these steep government incentives and price cuts. But this stock is still pretty strong on the year. It's up around 40%. It's been over the past 13 sessions, it was up around 42%. And has been multiple other reasons for the bull run as well. We know that it opened up its charging network to GM and Ford. We know that the Cybertruck is well on its way, and even the Model 3 EVs got tax credits approved as well. So it has been a pretty successful run for Tesla. Only time will tell if it is over today, but so far it started to go down today because since it had been so heavily overbought, we just see a lot of profit taking today on this name. It probably hit a technical level as well.
Right, Renita, to me, it's all bets off because once we hear from the Fed at 1 and then again at 1:30 p.m., that's when I think we could really see things move, because at this point, I'm looking at Tesla saying this is a non-move because we have two huge major catalysts that are really coming up close right now. So I think we have to watch and see, because I'm still very hopeful that they can close in the green today for their 14th straight session, but we have to wait until the dust settles because we have two major announcements coming in the horizon. But we will leave it there. Appreciate the insight as always, Renita Young, Senior Markets Correspondent for the network. Now coming up next, of course, it's time to preview the Fed, as right now we are about 13 minutes away from hearing the announcement from the Fed. We'll dive more into expectations for them and Jerome Powell with George Tillis coming up next.
I've got about 13 minutes till Powell. Twitter is being evicted from its Colorado Boulder office over unpaid rent. 106 counterparties take 2.1 trillion at the Fed reverse repo. That stayed pretty lofty. In what, 2 years we've been tracking that? 3 years? Remember when we broke 2 trillion? Larry Fink says AI may be the tech that brings down inflation. Bill Gates to meet President Xi on Friday during China visit. IBM to upgrade all quantum systems to large-scale processors. IBM hails quantum computing breakthrough beyond 100 qubits. 100 plus qubits. Offices in New York City crossed the 50% threshold last week for the first time since COVID-19 pandemic. Crossed 50% threshold of like occupancy. EU plans to have ECB set limits on use of digital euro. China will lose the most amount of millionaires globally in 2023. 62% of US mortgage holders have a rate below 4%, and 92% have a rate below 6%, with current mortgage rates at close to 7%. Many existing homeowners are staying put, leading to a shortage of homes for sale. U.S. housing market is missing about 320,000 home listings under 256,000. The affordable price range for buyers who earn as much as 75,000. Britain's economy has lost nearly 4 million working days to strikes since the start of last year, with its worst strike since 1990. Barbecue moving up a little bit more there, 1930. Only down single digits now. U.S. economy to avoid recession 2023. Inflation seen falling to 3.1%. That's what the IIF says. Since Three Arrows Capital collapsed, the crypto funds founders Al Davies and Zhu have reportedly been mediating in Bali, learning to surf and taking shrooms. Three Arrows, that's right. Well, there's no problem for them. They made out all right. Meditating, learning to surf, and taking shrooms in Bali. Salesforce is developing a ton of new AI products that could lead to a massive new buying cycle. Goldman Sachs and Morgan Stanley analysts have said. A startup mass extinction event has begun. Half of the world's biggest companies are downsizing office space mid hybrid working. Current market expectations for path of the Fed funds rate. Today is a pause. July 26th, 25 basis point hike to 5.25, 5.5. September 20th, pause. November 1st, a pause. December 13th, 25 basis point cut to 5 or 5.25. And by December 2024, cuts to 3.75. I don't think we're going to be cutting that soon. Out of 469. All right, got about 7 minutes.
And I think the Fed will be, if they do tighten today, that would be a sort of a double tightening. I think there's normal tightening going on because the Treasury's going to be being shoring up its reserves, and I think that's one of the reasons why the Fed is pausing with the expectations now of an additional rate hike over close to 60%, looking at the federal funds probability of one in July. But after that, it looks like there is going to be, for the most part, a pause. These are again based on conditions we're seeing today.
Yeah, George, I think at least in terms of potential fireworks or surprises, I think we're mostly all in agreement that that will take place during the press conference, possibly question and answer period if there is any. Minimal changes to the statement expected. No action to the
GME is down 4%.
This time around expected. Listening to you, I think you follow and think about things a lot how I have, which is deflationary risks are greater than inflationary risks, and the kind of idea of a Fed pivot being positive for the market has always to me been fool's gold in this particular scenario. But with that in mind, we have seen bullish developments with some of that worst of that fear dissipating. But I'm a little worried that the Fed is going to make the mistake of its peers of the past, where they're going to point to these bank failures and say those are isolated events. They're going to say inflation is still this big issue and it's not recessionary risk. At some point, George, even if they haven't shown up in the data, we're moving towards a deteriorating economy. Whether or not it's bad or it can be as bad as some of the worst projections remains to be seen. But what do you want to hear from the Fed, kind of navigating these waters that are pretty complex?
Well, it is complex. So, everything is not all rosy. I mean, the markets have performed extremely well so far this year, particularly in the past few months, as there's been a huge buildup in momentum. I think the stock market broadening out is a healthy sign, but you have to consider.
There you go, a little pop on barbecue.
Out there. One,
leave forget a gap fill.
Say to yourself, is the Fed having the incentive
I'd like to see that 20 cents turn back into support at least.
In fact, if you look at core inflation, it's still relatively elevated, and that's not going to come down slowly because it's again not commodity centric. It's really a drop in commodities year over year, in which we've seen headline inflation go down. Owner's equivalent rent is based on a longer term average, a monthly average. It's not necessarily year over year, and that's going to trend slowly to the downside. So rates will remain elevated. With that said, that does pose risks. It poses refinancing risk. I think there's still risk in the commercial real estate market. I don't think banks are going to perform quite well in this environment because of the inverted yield curve. That's another thing you have to consider. And then you have to consider at the end of the day the affordability of average households. That's still a concern out there. So, there are risks out there, but at the end of the day, from a GDP standpoint, an economic growth standpoint, I keep it simple, guys. If you see productivity, the summation of productivity growth and labor market growth, if those two are positive in conjunction with each other, then the economy is growing. And if the economy is growing, there's really no incentive for the Fed to cut rates. I suggest if you start to see rates fall, that's when you have to be concerned in the market. Now, I can't say when that's going to be, but again, it looks like right now we're well far off. The last thing I will say here too is seasonality. Typically, the second half of June is not necessarily a good market. And again, we may end up seeing sort of a soft correction post-Fed statement if they do remain relatively hawkish and do point out some of the concerns, which have to do with banks and some of the consumer tightness in the household level.
Yeah, George, now we're seeing the CME pricing in that 90% chance of no hike today. We'll, of course, get clarity in just about 3 minutes. We're about 3 minutes away from that Fed announcement. We'll leave it there, though. George, tell us, appreciate all the insight. That does it for Alex and myself as well. Coming up next, we have a Fed special with Caroline Woods hosting the watch list today.
All right, I'm gonna put on Stock Market Live. Here's analysis on J Powell. So you can show them some of it. It's just Stock Market Live on YouTube.
What's it called? We're gonna get the press conference in 30 minutes. You now have 2 minutes until it comes out. Again, just very simply, go straight to the summary of economic projections, and you will be good.
I'm probably just gonna inverse whatever happens. If it rips, I'm probably gonna go short. If it drops, probably go long. But we'll see what we hear.
If you were Powell, no, I would hike if I was
2
Powell.
minutes.
But I would have talked the Fed futures into it earlier. So I don't know. I don't know what Powell's doing. Powell is he's a wizard. He's a weird wizard. You know that he's a witch. I don't know how to explain it to you any other
1 minute.
way. I just feel like he's a wizard. All right, Chad, 1 minute here. Get ready for it. MPW went red too. Well, there. I hope those puts come back now. That'll be it. So I'm going to keep up the dollar in the bottom right, bonds in the bottom left. That's the 10-year. And then here's the SPY. We're right below VWAP, so a little lower. And then we'll keep up NVIDIA. And then we'll see. So, Chad,
Smart kitty.
Good luck. You got about 40 seconds here right now. And get ready. They expect a pause. Just keep refreshing for the SEP. That's it. That's all you're going to need.
So it'll be the algos that catch it first.
SEP.
Just crawling the words. The statement.
All right. 20 seconds. Good luck, Chad. Let's go. Like that video, too. Let's just 10 seconds.
It's out.
Okay, 5,
Initial flush.
4, 3, 2, 1. Boop. Oh, what do we got? Big drop. Dollar with the pop. Bonds are getting clobbered. Did I get filled on that one?
I wasn't able to even open it.
Oh, that's right below my wick. Come on, come on, come on. Let's see. Come on, load. It's not up yet. There it is. Projection materials. I'm not even. Oh, 5.6? Oh, yeah. Oh, yeah. Okay, okay, okay. No.
Projecting a 5.6 increase? Or terminal?
That's not good. That's not good. All right, I canceled the 2-year order. Wait for a pop. That's not good. That's bearish. That's weird. I want to see how the market. Dude, it's 5.6. I need
Before
to
it was
check the other
5.1, I think.
I took off the open order on the bond play. But hold on. 5.6 is not good. That's 5.6 terminal. That means they're implying 2 more rate hikes. So that's a very hawkish so far. We got to see, but Powell didn't want any confusion. I don't know if you were expecting that one.
Okay.
So again, and then 4.6 is that's a little bit higher than 3.4. Unemployment rate to 4.1. So that's
okay. Grab a couple longs there. It is bad news.
I don't know.
I'll hold for a little pop here.
It's kind of push and pull. So do you guys see what they're saying? I mean, it makes sense, but they're saying off of this statement, we got to wait for Powell. But what this is telling you is 2 more rate hikes could potentially be in play. They believe unemployment
Okay, I'm closing
is
out
going to
there.
go lower by almost 10% from where it's at now. So 4.1 from 4.5. And then they believe that GDP is going to go up 1%. So that's kind of crazy. Oh my gosh.
Since it was bearish, I didn't want to hold
So
that too
they're
long.
saying the economy is going to rally.
Get a big
but
pop
then
now.
they're gonna
I'll go
keep
short.
the terminal. So it's, bro, look, it went right to where my order was on the wick, and then I bought in. I closed out the order, but I still have the other bonds. I still actually kind of like.
It's actually not a
play.
big reaction,
So
really.
far, my first read
It's
on that
pretty
is
small.
pretty
We'll get more
bearish.
with Powell.
It could be soft landing, but it's higher. That's 2 more rate hikes. That's so this. If they wanted their hawkish skip, they got it. But let's see what Powell says
Way behind,
now.
just ate dinner.
But very weird. And then unemployment. They're not even expecting unemployment to.
He was saying mostly retail holds the bonds.
2024.
I forgot we meant mostly retail.
That's very, very weird. So they don't even think 2024.
I think he was specific. I think he was specifying the bond holders are mostly retail.
It's a very weird. I think they just did that to make sure it communicated hawkishly, but they're pretty much saying very high interest rates, and or the Fed is saying
He might have
plans of slowing down.
he might have other information. Based on what he was saying, it sounds like he didn't have any other information. Like, oh, we don't know anything, but I think he could have information that we wouldn't have for the bond holders.
Yeah, because they're thinking it's going to drop to 4.1.
So it's a pause.
So they think you're
Sorry,
gonna get a
yeah,
bunch
it's a
of jobs
pause.
by the end of the
I don't know if you
year,
guys heard.
and any job losses by next year
But terminal they upped it to
take you back to the
5.6.
same place you
It
are
was going to
before you
be.
gained
I think
the
they're expecting 5.1. So 5.6 means another rate hike at some point.
Oh, there it is again. 2 years on this one, but I don't know. I think the yeah, he's keeping you away from the bonds though. I don't know. 2-year play might not be there.
A rate hike.
We're down on it. I closed the other
Another 50 basis
that
points
were very
basically.
low. I'm still in an open
More
trade
into
on
the year.
there, so we're gonna wait the first 15 minutes. But if the
There's a little
press
bigger reaction there.
conference is as hawkish as that statement, I think this is bearish. And then I think the bond play, I think they'll go. I think it doesn't matter anymore. I think it's
GME
gonna
down
be more
6% with that.
more or
This is
less.
why
I think bonds
this is one thing I
he's
love about
really
barbecue
that
is it
hawkish.
doesn't care about the SPY.
Very surprising from Powell. But only been a couple of minutes. I didn't even read this statement, actually. That's the crazy part. So they said recent economic indicators, they continue to expand. They decided to maintain.
Yeah,
the
he's going to
range.
be
They said holding
not
the
going to give
target
anything
range steady at
decisive.
this
He's going to
meeting
keep
allows
options
the
completely
committee
open and be
to
very
assess
big. And
additional of its
Exactly.
implications. That's it. That's the only thing they changed. Nothing else on the statement. No big statement change. Market is down 0.3 as a result.
yeah, so before they were going to raise rates up to 1% was terminal. 5% or 5.1, somewhere around there. And statement says terminal now is 5.6. So the market wasn't expecting more than enough rate hikes to get to 5.1. But now they're seeing that we're going to have another 50 basis point increase to get to 5.6. So you basically said another rate hike that wasn't being priced in. But today, yes, today we're pausing. No increase today, which was expected.
That's it. So Powell is either gonna come on and he's gonna sound like Jackson Hole, or he's gonna combat it and be nice. But that's
Coming down. What were the levels I said? 430. Yeah, it's not really moving that big.
It's nothing actually
It's
new.
pretty
No, it
big,
is.
but
It is. It's very
nothing
new.
crazy.
The SEP, I'm telling you. I was telling you.
That
from the
dip I got on
morning,
the
that
long
number
was.
goes above 5.5.
Thought I got out of that. That was
That's
crazy.
big. They could have taken this number to 5.4, 5.35, and that would have implied one more rate hike. By going above 5.5, you are now pricing in 2 rate hikes. That's 2 is bigger than 1. It's the difference.
There, you
from
can hear
1
him tell
quarter
you.
away or 2 quarters away. So that's kind of unique in the context of all of this, because he's not telling you. He's telling you rates are going to be high, but he's also saying the economy is going to rocket. They just lowered unemployment by again 10% from where it was at. And then even GDP was revised over 0.5% higher. Weird.
So we said better GDP numbers
So bonds are getting clobbered.
and less unemployment, it sounds like, too. Kind of interesting.
But I think we'll be able to listen during the presser.
Eyes filling this gap
Fed 2
now.
years about to hit the breakout point. That's where I put my order.
Kind of want to go
canceled that
long
one, but
again.
I like that price, so we're going to see here.
Gotta find a spot to go long.
Futures. No, they went higher. They went down a little bit, but no, I think crazy. Still going lower. It's been about, what, 7 minutes? So, and then it was another unanimous vote. That's weird. Not one dissent. So Fed swaps no
Barbecue
longer
moving up a
consider
little bit.
2023 rate cut likely. So yeah, give
GME
it 2
down
weeks and
6.5.
nobody pricing that in, and then it'll come back in. It's at 102.01.
Could have just grabbed a short anywhere here. It just keeps flushing. You don't know though. I mean, sometimes it doesn't last this long. It flushes for a bit. Get a rip, even with bad news. Bearish news. The gap is now filled.
And then SPY still going. See, that's what I'm saying. This time it's all bonds and stocks correlated. So it's not like stocks went up, bonds went with it, but now bonds are going down. They're like, oh shit, and then so is the market. But markets are reacting way bigger than bonds for now. So again,
Barbecue just filled that gap. 20. It's over 20 cents
they're bleeding
now.
very heavy.
I don't want to say inverse beta, but sometimes it looks like it. Oh,
Treasury
MVIS,
selling
they had a
off
share
recently,
offering. That's
two-year yields,
why they sold off.
11
I think.
basis points
Yeah,
being up,
makes sense. That's good for
being
them.
down 4. That's a notable
Need to
move,
raise
but not
capital.
a huge one. There it is. Bonds are breaking below. Let's see.
We get an epic bounce from this at some point. Maybe not till Powell, but
101.38. What time? It's only been 8 minutes. You got a little bit of time. Why? Oh, it's in thirds.
barbecue 2037.
Wrong time. That was the FOMC. Again, very hawkish SEP right now.
Down
But also
4.6.
bullish by saying the economy is going to do very good. So that's it. But Powell and the Fed, they're saying 2 more rate hikes right now. I don't think anybody had that in mind, especially compared to the beginning of the year. Let's grab one. All right, I grabbed one more ZT. I'm down on it for
Look at
now.
that volume
but
on
I'm
barbecue.
see on this move. I'm gonna change
2040.
this play. I just want to go.
Might
for
just
one
put a
more
stop
pop
and
lock
leave
on
this
here.
long.
I do, but now you're pricing out rate cuts. It's working, but this is more like
Not trying even.
this is more like 2001.
Take profits. Wait for
2000. The
wait for us to
market,
retrace all the
we
way
have
back up
to
here.
see what Powell says, but
Barbecue
he's
moving
not.
up.
That one was it's interesting. Powell he's pausing today, but to bring in 2 more rate hikes is wicked. So hopefully we see his personality, because how he his attitude towards this will tell us a lot. Almost negative 100. Employed but broke as fuck is not a good economy. 1%. I mean, we're comparing it to here. You know what I'm saying? That's all. Because up in last March, it was at 0.4. So take whatever you said and now apply it to what it just was. So if you think 1% wasn't good, last time they said 0.4. So if you think 4.1 employment's
Barbecue rip
not
in there.
good, last time they said 4.5. What I'm saying
2090
is that the scale
down 2.2.
of how much they just changed their economic outlook.
Thanks to see that 20
is
cents
massive.
if that holds for
So
support.
everything I told you would happen happened.
I want to close
but
the
it
long
did
here,
it
but
bigger. So we were saying,
I'd be
like,
patient
I was
with it.
telling, remember I said 0.5, 0.6 maybe. All of these numbers were supposed to
gonna
go
put a
up 1 or
stop.
2. They all just shot up, and then even the terminal, which is quite wicked with all of it. and
got
the dot
J
plot got
Powell in,
higher.
20
that
minutes.
was supposed to happen, but I didn't. Like I said, unless Powell wants to beat you with this is a stick. 5.6 ain't that's not. I was making the angel number joke, but I'm surprised. That was a surpriser. I didn't think they would run it like that. I thought Powell would try to toe the line closer. It will be Jackson Hole 2.0 if he comes on and starts. If he
Kind of a little
says we're
inverse
not
head
at
and shoulders.
restrictive, that's going to be
On
negative.
the
If
1
he
minute,
start,
on the 5 minute.
he has to be aggressive. If he sounds like the
That's
last
gonna be a
every
bear flag,
Powell this
too.
year, you're gonna rock it up. If he sounds like last year, we're going down. But you need him to just be careful. If he because now he did what they wanted. On paper, it's very hawkish. So if he comes in on this press conference and starts, talking nice, he's gonna balance it out.
Coming down a little bit,
But
I might get
let's
stopped
see
out.
what he's gonna try to drive home. But so far, you're already getting a surpriser. We're starting off.
Could have taken
Powell,
profits, but at some point the
FOMC
volatility is
right
going to slow
now
down, and we're going to
with
start
huge changes
trending in a
to
direction towards Powell.
unemployment,
And
GDP,
yeah, I got
and
stopped
now
out.
ultimately, based on the Fed's terminal
It'll probably
rate,
be up.
you still have 2 more rate hikes priced in, even though you did not get a rate hike today. That is very, very crazy. I thought he was going to leave 1 more hike on the table. That's like, okay, 1 more. He said 2. He said, just in case one, just in case you guys were confused about 1 more rate hike, he said, I'm doing 2. 2 is what we have planned.
A lot of volume there on barbecue.
MP dub, the puts are down still. That's it. We need those to really run up. I got $2. And there's dollar again. The little bond thing helped for a little bit, but still down on them. I'm waiting for this post move, but if it can't get above here, that's it. Bank run? No, it's not going to cause a bank run. And he's not. Jerome Powell's not worried about the economy anymore. It's very weird. The dude flip-flopped it's insane. So again, based on I'm going off the SEP. I've not listened to the guy. Neither have you. We'll have to see what he says. But I hope you see how I'm reacting. But that's just a shift, even from 3 months ago. Powell
I'm not.
and the
I don't
Fed
know, Sean.
Seems like they are
retract one of the leases that they were letting go.
They're not
I
worried
don't
about the
know.
economy as much, and they're just like, we're wait and see, and then let's just keep raising.
I should
That's
take
crazy.
profits.
Remember, someone asked today, from November, we were saying there was going to be only 3 rate hikes at the beginning or throughout 2023. And then guess what happened? We had 3 rate hikes. And today, now we're pricing in 2 more. It's crazy. More increases might not come
That's the high
fast.
of the day
They
on
could just be
barbecue.
saying that
Fill
to
the
price
gap
out
and
the
it's
rate
above
hikes,
where
and
it
then
opened.
maybe whatever's going to happen
It's a bullish
happens
day
in
on the
3-6 months or
on the
whatever.
barbecue stock.
But at the same time, it's
Green candle.
signaling is not. It's very different than even 3 months ago, and for the Fed, that's pretty wild. And we're rallying. We're not rallying anymore off of that. So the bonds are. This is what I was expecting. That's why.
Yeah, it's kind of bear flagging. I have to wait for Powell to get a pump.
Yeah, they could just be saying that, but I don't. Dude, it's crazy. It's crazy, bro. It's crazy. These guys. So see what the market does.
Yeah, we'll get back to stock market live in a little bit. We'll probably just listen to Powell. There you go, barbecue. This is the way. I kind of hanging out at the lows here.
Investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader?
Alright, we got Powell in 5 minutes. I'm gonna take the long here. Lagging. The heck, man. Freaking Chrome, dude. Got a little double bottom there, we'll see. Powell might make it flush more, but I think we'll see a bounce before then at least. Yeah, it's like this about this time of day my just browser starts lagging. Gotta be from heat. Well, they could bring it back to 431 just for liquidity, Al, where they rally it. But I think with that news, I don't think the rally's going to keep going.
I'm going to do this today.
Oh. Mm-hmm. How's he looking? It's looking sprightly. That's bullish.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone.
Hey, trader.
In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time.
This is all pre-written. This is what was on the statement.
Monetary policy
Nothing's new here.
After briefly reviewing economic developments.
But yet the market still always moves as if no one read it.
The U.S. economy slowed significantly last year, and recent indicators suggest that economic activity has continued to expand at a modest pace. Although growth in consumer spending has picked up this year, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. In our summary of economic projections, the median projection has real GDP growth at 1.0% this year and 1.1% next year, well below the median estimate of the longer run normal growth rate. The labor market remains very tight. Over the past 3 months, payroll job gains averaged a robust 283,000 jobs per month. The unemployment rate moved up but remained low in May at 3.7%.
Starting to get a little pump.
There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has declined, labor demand still substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises to 4.1% at the end of this year and 4.5% at the end of next year. Inflation remains well above our longer-run 2% goal. Over the 12 months ending in April, total PCE prices rose 4.4%, excluding the volatile food and energy
Not as dovish if he's clearing his throat that like
PCE
that.
prices rose 4.7%. In May, the 12-month change in the consumer price index came in at 4%, and the change in the core CPI was 5.3%. Inflation has moderated somewhat since the middle of last year. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.2% this year, 2.5% next year, and 2.1%.
Yeah, I saw it. We listened to it live. Cool. It's not good news. It doesn't matter for
PCE
shareholders.
inflation, which excludes
Great.
volatile
Good.
food and energy prices, is projected to run higher than total inflation, and the median projection has been revised in the SEP up to 3.9% this year. Despite elevated
Apologies,
inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by
Oh, no,
our
man.
mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5 percentage points. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, especially housing and investment. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. The economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, the committee
moving back
decided at
up.
today's meeting to maintain the target range for the federal funds rate at 5 to 5.25% and to continue the process of significantly reducing our securities holdings. As I noted earlier, nearly all committee participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at this meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its
BBBYQ moving back down to
implications for
VWAP.
monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In our SEP, participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 4.6% at the end of 2024, and 3.4% at the end of 2025. For the end of this year, the median projection is a 0.5 percentage point higher than in our March projections. I hasten to add, as always, that these projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do at the Fed is in service to our public mission. We will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you. Colby Smith with the Financial Times. I'm curious what gives you and the committee the confidence that waiting will not be counterproductive at a time when the monthly pace of core inflation is still so elevated. Interest rate sensitive sectors like housing, while they felt the drag of the past Fed actions, have started to recover in some regions, and financial conditions, most recently were easing.
So I guess I would go back to the beginning of this tightening cycle to address that. So as we started our rate hikes early last year, we said there were 3 issues that would need to be addressed kind of in sequence. And that of the speed of tightening, the level to which rates would need to go, and then the period of time over which we'd need to keep policy restrictive. So at the outset, going back 15 months, the key issue was how fast to move rates up, and we moved very quickly. by historical standards. Then last December, after 4 consecutive 75 basis point hikes, we moderated to a pace of a 50 basis point hike, and then this year to 3 25 basis point hikes at sequential meetings. So it seemed to us to make obvious sense to moderate our rate hikes as we got closer to our destination. So the decision to consider not hiking at every meeting and ultimately to hold rates steady at this meeting, I would just say it's a continuation of that process. The main issue that we're focused on now is determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. So the pace of the increases and the ultimate level of increases are separate variables. Given how far we have come, it may make sense for rates to move higher, but at a more moderate pace. I want to stress one more thing, and that is that the committee decision made today was only about this meeting. We didn't make any decision about going forward, including what would happen at the next meeting, including we did not decide or really discuss anything about going to an every other meeting kind of an approach or really any other approach. We really were focused on what to do at this meeting.
So there was no kind of initial debate about the possibility of July, any sense of the initial support at this stage for that move?
So again, we didn't make a decision about July. I mean, of course, it came up in the meeting from time to time, but really the focus was on what to do today. I would say about July 2 things. 1, decision hasn't been made. 2, I do expect that it will be a live meeting.
Thanks, Howard Schneider with Reuters. I was just wondering if you could help us understand the narrative here, because it feels like there's been a level shift in the dots, stronger GDP, less of a hit to unemployment, slower progress on inflation, and I'm wondering in this sort of where's the disinflation coming from?
Sure.
The labor market's going to be stronger, it looks like. It's not coming from there. Demand's not coming down all that fast according to GDP. You've doubled your estimate of GDP. So what's the narrative here? It seems like it's getting more immaculate rather than more messy.
So you're right that the data came in, I would say, consistent with, but on the high side of expectations. So, and if you go back to the former SEP, the last SEP in March, you will see that growth moved up. These are not huge moves, but growth estimates moved up a bit. Unemployment estimates moved down a bit. Inflation estimates moved up a bit. And, all three of those kind of point in the same direction, which is, that perhaps more restraint will be necessary than we had thought at the last meeting. So although the level, frankly, is pretty, the level of 5.6 is pretty consistent if you think about it, where the federal funds rate was trading before the bank incidents of early March. So we've kind of gone back to that. So your question is, where's the disinflation going to come from? And I don't think the story has really changed. The committee has consistently said and believed that the process of getting inflation down is going to be a gradual one. It's going to take some time. And I think you go back to the three-part framework for core PCE inflation.
Eyes pumping up to be up there.
We think as good an indicator as you can have for where inflation is going forward. You start with goods. With goods, we need to see continued healing in supply side conditions. They've definitely improved a substantial amount, but if you talk to people in business, they will say it's not back to where it was. So that's one thing, and that should enable goods prices to continue, goods inflation to continue to come down over time. In terms of housing services inflation, that's another big piece, and you are seeing there that new rents, new leases are coming in at low levels, and it's really a matter of time as that goes through the pipeline. In fact, I think any forecast that people are making right now about inflation coming down this year will contain a big dose of this year and next year will contain a good amount of disinflation from that source, and that's again probably going to come slower than we would expect. That leaves the big sector, which is a little more than half, pardon me, of core PCE inflation. That's non-housing services, and we see only the earliest signs of disinflation there. It's a sector, it's a very broad and diverse sector. I would say in a number of the parts of that sector, the largest cost would be wage costs. It's the service sector, so it's heavily labor intensive. And I think many analysts would say that the key to getting inflation down there is to have a continuing loosening in labor market conditions, which we have seen. We have actually seen, I go through a number of indicators suggesting there's been some loosening in labor market conditions. We need to see that continue. I would almost say that the the conditions that we need to see in place to get inflation down are coming into place, and that would be growth meaningfully below trend. It would be a labor market that's loosening. It would be goods pipelines getting healthier and healthier and that kind of thing. The things are in place that we need to see, but the process of that actually working on inflation is going to take some time.
Nick Timmeros of the Wall Street Journal. Chair Powell, what's the value in pausing and signaling future hikes versus just hiking now? I mean, not to be flippant, but I don't lose weight just by buying a gym membership. I have to actually go to the gym. 16 of your colleagues put down a higher year-end 23 rate today. A majority of you think you're going to have to go up by 50 basis points this year. So why not just rip off the Band-Aid and raise rates today?
So first I would say that the question of speed is a separate question from the question from that of level. Okay, so and I think if you look at the SEP, that is our estimate, our individual. It's really accumulation of our individual estimates of how far to go. I mentioned how we got to those numbers. In terms of speed, it's what I said at the beginning, which is speed was very important last year. As we get closer and closer to the destination, and according to the SEP, we're not so far away from the destination in most people's accounting. It's reasonable, it's common sense to go a little slower, just as it was reasonable to go from 75 basis points to 50 to 25 at every meeting. And so the committee thought overall that it was appropriate to moderate the pace, if only slightly. And there are benefits to that. So that gives us more information to make decisions. We may try to make better decisions. I think it allows the economy a little more time to adapt as we make our decisions going forward, and we'll get to see. We don't know the full extent of the consequences of the banking turmoil that we've seen. It would be early to see those, but we don't know what the extent is. We'll have some more time to see that unfold. I mean, it's just the idea that we're trying to get this right, and this is if you think of the two things as separate variables, then I think that the skip, I shouldn't call it a skip, the decision makes sense.
I know you said July is live with only one June employment, with only the June employment and the CPI report for June due to be released before the July meeting. You get the ECI after, you get the senior loan officer survey after, you get some bank earnings at the end of next month. What incremental information will the committee be using to inform their judgment on whether this is in fact a skip or a longer pause?
Well, I think you're adding that to the data that we've seen since the last meeting too. Since we chose to maintain rates at this meeting, it'll really be a 3-month period of data that we can look at. And I think that's a full quarter, and I think you can draw more conclusions from that than you come from any 6-week period. We'll look at those things. We'll also look at the evolving risk picture. We'll look at what's happening in the financial sector. We'll look at all the data, the evolving outlook, and we'll make a decision.
Thanks for taking our questions. Gina Smilek, New York Times. You obviously, in your forecast, marked up the sort of path for growth, marked down the path for unemployment, and marked up the path for inflation pretty notably. I wonder, since March, what has changed to make you think that the economy is a lot more resilient?
I took close some of those longs.
Stubborn. And
I'd be up there.
That, why do you feel confident that this is as high as
10 minutes to Power Hour.
the federal funds rate, or do you think it's possible we could have even a higher
They'll
than
have
5.6%
one contract
by the end of this cycle?
I mean, on the first part, I just think we're following the data and also the outlook. The economy the labor market, I think, has surprised many, if not all, analysts over the last couple of years with its extraordinary resilience, really.
Well done, Sterling.
It's just remarkable, and that's really, if you think about it, that's what's driving. It's job creation, it's wages moving up, it's supporting spending, which in turn is supporting hiring, and it's really the engine, it seems, that is driving the economy. So it's really the data. In terms of, we always write down at these meetings what we think the appropriate terminal rate will be at the end of this year. That's how we do it. It's based on our own individual assessments of what the most likely path of the economy is. It can actually in reality wind up being lower or higher, and there's really no way to know. But it is it's what people think as of today, and as the data come in, it can move around during the intermeeting period. It could wind up back in the same place, but it really will be data driven. I can't tell you that I ever have a lot of confidence that we can see where the federal funds rate will be that far in advance.
Mr. Chairman, thanks for taking my question. You had said back at the end of May that you thought risks were getting closer to being into balance. Is that still the case, or has your mind changed about the balance of risks out there? And also, could you give us an idea of what would be a sufficiently restrictive funds rate? Obviously the current rate, according to the committee, is not sufficiently restrictive. Is it 5.6? Is it 6? Where's sufficiently restrictive? Thank you.
I would say again that I think that over time, the balance of risks, as we've moved from from interest rates at effectively 0 now to 5 percentage points with an SEP calling for additional hikes, I think we've moved much closer to our destination, which is that sufficiently restrictive rate. And I think that means, almost by definition, that the risks of sort of overdoing it and underdoing it are getting closer to being in balance. I still think, and my colleagues agree, that the risks to inflation are to the upside still. So we don't think we're there with inflation yet, because we're just looking at the data. And if you look at the full range of inflation data, particularly the core data, you just aren't seeing a lot of progress over the last year. Headline, of course, inflation has come down materially, but as you know, we look at core as a better indicator of where inflation overall is going. So I think what we'd like to see is credible evidence that inflation is topping out and then beginning to come down. That's what we want to see. Of course, that's what we want to see. And I think it's also, we understand that there are lags, but remember that it's more than a year since financial conditions began tightening. I think the reason we're comfortable pausing is that we are still, much of the tightening took place over last summer and later into the year, and I think it's reasonable to think that some of that may come into effect. So we're, I think stretching out into a more moderate pace is appropriate to allow you to make that judgment of sufficiency, with more data over time.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. I wanted to ask further on the lag effects. When you're considering when you would hike again
coming down now.
throughout the course of the year, are there things that you would expect to kick
I'll wait
in
till Powell's done.
as those lag effects come
I joined you
into
there,
effect that would inform
Archer.
your decisions? Have you learned things over the past year that give you some sense of
Interact.
timeline for when to expect those lags to come into effect?
Yeah. So it's a challenging thing in economics. It's sort of standard thinking that monetary policy affects economic activity with long and variable lags. Of course, these days, financial conditions begin to tighten well in advance of actual rate hikes. So if you look back when we were lifting off, we started talking about lifting off. By the time we had lifted off, the 2-year, which is a pretty good estimate of where policy is going, had gone from 20 basis points to 200 basis points. So in that sense, tightening happens much sooner than it used to in a world where news was in newspapers and not on the wire. So that's different, but it's still the case that what you see is interest-sensitive spending is affected very, very quickly. So housing and durable goods and things like that. But broader demand and spending and asset values and things like that, they just take longer. And you can pretty much find research to support whatever answer you would like on that. So there's not any certainty or agreement in the profession on how long it takes. So, and that makes it challenging, of course. So we're looking at the calendar, we're looking at what's happening in the economy, we're having to make these judgments. And again, it's one of the main reasons why it makes sense to go at a slightly more moderate pace now as we seek that ultimate. I can't point to that ultimate endpoint. I can't point to a specific data point. I think we'll see it when we see inflation, really, really flattening out reliably and then starting to soften. I think we'll know that it's working. And ideally, by taking a little more time, we won't go well past the level where we need to go.
I was curious if you could give us an update on what you're seeing on credit tightening since the bank incidents from March and how you're teasing that out apart from these lag effects.
So it's too early still to try to assess the full extent of what that might mean. And, you know, that's something we're going to be watching, of course. And, you know, if we were to see what we would view as significant tightening beyond what would normally be expected because of this channel, then, you know, we would factor that into account in making rate decisions. So that's how we think about it.
Let's go to Chris.
Thanks. Chris Rugaber at Associated Press. You mentioned that many of the trends are in place that you want to see. Core services ex housing has come in pretty low in the past couple of months. And as you noted, a significant portion of core inflation is now housing prices. And then we've had some quirks in used car prices. So given that these trends are in place, I guess I'm sort of asking the flip side of Nick's question, why signal additional rate hikes? Aren't things headed in the direction you need? Why not simply give it even more time? Or I mean, it's surprising to see so much hawkishness in the dots given what we're seeing recently.
Yeah, so, you know, remember, we're 2.5 years into this, or 2.25 years into this, and forecasters, including Fed forecasters, have consistently thought that inflation was about to turn down, and you know, traditionally, typically forecasted that it would, and been wrong. So I think if you look at core PCE inflation overall, look at it over the last 6 months, you're just not seeing a lot of progress. It's running at a level, you know, over 4.5%, far above our target, and not really, you know, moving down. We want to see it moving down decisively. That's all. You know, of course, we are going to get inflation down to 2% over time. We don't want to do. We want to do that with the minimum damage we can to the economy, of course, but we have to get inflation down to 2%, and we will. And we just don't see that yet. So, hence you see today's policy decision, both to write down further rate hikes by the end of this year, but also to, you know, to moderate somewhat the pace with which we're moving.
Quick follow-up. I mean, the last press conference you mentioned you didn't see wages driving inflation, and, you know, there was some research from the San Francisco Fed suggesting wages aren't necessarily a key driver, but you've talked about the labor market today and the need for softening. Can you give us a little more specifically of how you see the tight labor market driving inflation at this point? Thank you.
Right. So I'm not going to comment on any particular paper, but I would say that I think the overall picture is that at the beginning, in, you know, early 2021, inflation was really coming from very strong demand largely for goods. People were still at home. They had money in the bank, and they wanted to spend, and they spent a lot on goods. And of course, at the same time, and because of that high demand to some extent, supply chains got all snarled up. So prices went way up, inflation went way up. That was the origin, and it wasn't really particularly about the labor market or wages. But as you move through 21 into 22 and now in 23, I think many analysts believe that it will be important, an important part of getting inflation down, especially in the non-housing services sector, to getting wage inflation back to a level that is sustainable, that is consistent with 2% inflation. We actually have seen wages broadly move down, but just at a quite gradual pace. So, and that's, you know, that's a little bit of the finding of the Bernanke paper with Blanchard of a few weeks ago, which is very consistent with what I would think.
Michael McKee from Bloomberg Radio and Television. You've said in the past that you don't like to surprise markets. It's kind of been the Fed's view. Markets should have an idea of what you're going to do before you go in. You also said a number of times that it would take a while to bring inflation down. You reiterated that again today, and that we would get to a point where inflation could be sticky. So I'm wondering, as we go into the next meetings, how Wall Street or others should look at your reaction function. What will you be reacting to? Time or data? In other words, if nothing much changes, if we're looking at the same sort of labor market, the same sort of inflation levels in July or in September or November, Will you move because you've said you feel you need to? Is it time that's going to require additional movement, or would it be a reversal in inflation?
So I don't want to deal with hypotheticals about different ways data might move on. So we of course we don't go out of our way to surprise markets or the public. At the same time, our main focus has to be on getting the policy right, and that's what we're doing here, and that's what we'll do for the upcoming meetings. I will say the July meeting will be live, and we'll just have to see. I think you'll see the data, you'll hear Fed people talking about it, and
Yeah, Archer bought the dip with their own SPY.
Well, do you think inflation is likely to continue coming down based on the lags and based on your threat of additional movement, or are we going to be in a period where we're not going to know what's happening?
I think if you look at if you just look at, I'll just point you to the forecast. So inflation is running, core PCE inflation is running at about 4.5%, a little higher than 4.5%, and the median FOMC participant thinks it'll go down to 3.9 on a 12-month basis. This is by the end of this year. So that's expecting pretty substantial progress. That's a pretty significant decline for half a year. So that's the forecast. We do try to be transparent in our reaction function. We're committed to getting inflation down, and that's the number one thing. So that's how I think about it.
Let's go to Victoria. Victoria Guido with Politico. Could you talk about the balance sheet and how you're thinking about it? What are you looking for to judge whether we're approaching reserve scarcity, and is Treasury issuance going to affect that? Also, are you considering lowering the RRP rate in order to take some pressure off banks?
So let me say, first of all, on the Treasury part of it, if I can talk about that, and then go back to the balance sheet. So on that, of course, we've been very focused on that for a couple of months, as everyone has. Treasury has laid out its borrowing plans publicly. I think I saw the Secretary's comments yesterday to the effect that Treasury has consulted widely with market participants about how to avoid market disruption, and that they're going to watch carefully for that. So that's from the Treasury, which actually sets the borrowings. At the Fed, we'll be monitoring market conditions carefully as the Treasury refills the TGA. The adjustment process is very likely to involve both a reduction in the RRP facility and also in reserves. It's really hard to say at the beginning of this which will be greater. We are starting at a very high level of reserves and still elevated RRP to take up, for that matter. So we don't think reserves are likely to become scarce in the near term or even over the course of the year. So that's the Treasury part of the answer. We will, of course, continue to monitor conditions in money markets, and we're prepared to make adjustments to make sure that monetary policy transmission works. Was there another part of your question?
Yeah. What are you considering lowering the RRP rate to help take some pressure off banks?
So we have a number of. I would say the RRP doesn't look like it's pulling money out of the banking system. It's actually been shrinking here lately. So I don't think that's not something we've thought about a lot over time. It doesn't really look like that's something that we would do. I think it's a tool that we have. If we want to use it, we can. There are other tools we can use to address money market issues, but I wouldn't say that that's something that's likely that we would do in the near term.
Janelle Marte with Bloomberg. Have you seen sufficient cooling in the housing market to bring inflation down? For example, how does the recent rebound affect your forecast, and how does it factor into monetary policy?
So certainly housing, very interest sensitive, and it's the first place really, or one of the first places that's either helped by low rates or that is held back by higher rates. And we certainly saw that over the course of the last year. We now see housing putting in a bottom and maybe even moving up a little bit. We're watching that situation carefully. I do think we will see rents and house prices filtering into housing services inflation, and I don't see them coming up quickly. I do see them kind of wandering around at a relatively low level now, and that's appropriate.
Do you think you'll have to target that with further rate increases?
Well, I think we look at everything. We don't just look at housing. So I think, the way it works is individual participants sit in their offices all over the country and they write down their forecast, and including their most likely forecast, including their rate forecast, and then they send it in on Friday afternoon, and we accumulate it, and then we publish it for you. So that's how they do that. Well, I don't know that housing is itself going to be driving the rates picture, but it's part of it.
Thank you for taking the question, Mr. Chairman. Edward Lawrence with Fox Business. So I want to go back to comments you made about, in the past, about unsustainable fiscal path. The CBO projects the federal deficit to be $2.8 trillion in 10 years. The CBO also says that federal debt will be $52 trillion by 2033. At what point do you talk more firmly with lawmakers about fiscal responsibility? Because I'm assuming monetary policy cannot handle alone the inflation or keep that inflation in check with the higher level of spending.
I don't do that. That's really not my job. We hope and expect that other policymakers will respect our independence on monetary policy, and we don't see ourselves as the judges of appropriate fiscal policy. I will say, and many of my predecessors have said, that we are on an unsustainable fiscal path, and that needs to be addressed over time. But I think trying to get into that with lawmakers would be kind of
Spy rallying up there more.
Independence and our need to stick to our knitting.
Is there any conversation then about the Federal Reserve financing some of that debt that we're seeing coming down the pike?
No, under no circumstances.
Thanks for taking our questions, Chair Powell. So looking at the SEP, it looks like GDP for this year was raised significantly, your forecast for GDP this year. The unemployment rate, meanwhile, was pulled downward. And so should we take that as a sign that the committee is more confident about the prospects of a soft landing, at least as it relates to what you were expecting in March?
I thought he was going to be done before now. It seemed like he was winding down like two questions ago.
I would just say it this way.
Got those contracts a little early.
I continue to think, and this really hasn't changed, that there is a path to getting inflation back down to 2% without having to see the kind of sharp downturn and large losses of employment that we've seen in so many past instances. It's possible. In a way, a strong labor market that gradually cools could aid that along. It could aid that along. But I guess I want to come back to the main thing, which is, though, simply this. We see the committee, as you can see from the SEP, the committee is completely unified in the need to get inflation down to 2%, and will do whatever it takes to get it down to 2% over time. That is our plan. And we understand that allowing inflation to get entrenched in the U.S. economy is the thing that we cannot allow to happen for the benefit of today's workers and families and businesses, but also for the future. Getting price stability back and restored will benefit generations of people as long as it's sustained, and it really is the bedrock of the economy, and you should understand that that is our top priority.
Just a quick follow-up on that. I'm just a little confused because you said the committee will do whatever it takes to get inflation down over time, but when I look at the SEP, inflation is still projected to be elevated next year, but the Fed funds rate is lower than where it is now. Can you help me understand that?
Sure. So, if you look 2 and 3 years out with the forecast, first of all, I wouldn't put too much weight on forecasts even 1 year out because they're so highly uncertain. But what they're showing is that as inflation comes down in the forecast, if you don't lower interest rates, then real rates are actually going up, right? So just to maintain a real rate, the nominal rate at that point 2 years out, let's say, should come down just to maintain real rates. And actually, since we're probably going to we're having real rates that are going to have to be meaningfully positive and significantly so for us to get inflation down. That probably means that certainly means that it will be appropriate to cut rates at such time as inflation is coming down really significantly. And again, we're talking about a couple years out. I think,
IDX
as
looks
anyone
nice.
can see, not a single person on the committee wrote down a rate cut this year. nor do I think it is at all likely to be appropriate if you think about it. Inflation has not really moved down. It has not so far reacted much to our existing rate hikes, and so we're going to have to keep at it.
Sorry, thank you. Hi, Chapel. Julie Chabanas, AFP News Agency. The May job report showed a rebound in May in black workers' unemployment. Is it consistent with the Fed's maximum employment mandate? Are you worried about that, about this rebound?
So we are, of course, worried about. There are long-standing differences in racial and ethnic groups across our labor market. That's a factor that we can't really address with our tools, but we do consider that when we're thinking about what constitutes maximum employment. It is for us a broad and inclusive goal. So we do watch that. But remember, all unemployment, including black unemployment, has been bouncing around right near historic lows, historic modern lows here. So we're still talking about, I mean, what is a strong labor market as we've seen in a half century here in the United States. So overall unemployment of 3.7% is 0.3 higher than it was measured to be at the last a month ago, but still it's extraordinarily low. And so it's a very, very tight labor market.
Thank you. I want to follow up first a little bit just on the rent question on housing. We heard Governor Waller talk about how, I'll back up, we haven't quite seen the slowdown in rents show up in CPI yet, and we did hear Governor Waller talk about how an uptick in housing might mean that there's not going to be
I don't have the retest on that breakout, maybe.
A shorter bit of relief than we thought. Can you talk about how you're thinking about that and how that played into today's outcome?
I wouldn't say so. That's as a
barbecue moving up a little bit.
Correct.
Some volume.
We do need to see rents bottom out here, or at least stay quite low in terms of their increases, because we want inflation to come down, and rental is a very large part of the CPI, about a third, and it's about half of that for the PCE. So it's important, and so it's something that we're watching very carefully. It's part of the overall picture. I wouldn't say it's the decisive part, but take a step back. What you see is look at core inflation over the past 6 months, year. You're just not seeing a lot of progress, not the kind of progress we want to see, and it's hard to avoid that. And the committee, people in the committee, the median went up significantly.
SPY
so
back down to VWAP.
The median participant now thinks that core PCE inflation on a 12-month basis will be 3.9% this year. So once again, every year for the past 3 years, it's gone up over the course of the year, and it's doing that again. So we see that, and we see that inflation forecasts are coming in low again, and we see that tells us that we need to do more. And so that's why you see the SEP with where it is.
Could you also talk briefly about your outlook for wages, and given the recent slowdown in
Nicholas strong
services,
today.
including housing, how far you think wages might need to fall in order to get inflation back in line?
So wages will continue to increase. So what we're talking about is having wage increases still at a very strong level, but at a level that's consistent with 2% inflation over time.
Biofuel nickel is
And so
106%.
I think we've seen some progress. All of the major measures of wages have moved down from extremely elevated, not extremely, but highly elevated levels a year or so ago, and they're moving back down, but quite gradually. And we would want to see that process continue gradually. Of course, it's great to see wage increases, particularly for people at the lower end of the income spectrum. But we want that as part of the process of getting inflation back down to 2%, which benefits everyone. I mean, inflation hurts those same people more than anyone else. People on a fixed income are hurt the worst and the fastest by high inflation.
Thank you so much, Chair Powell. Greg Robb from MarketWatch. I just wondered if the committee has talked at all about the labor market, and there's strikes now in Hollywood, and now the United Auto Workers are talking about a possible strike. I mean, aren't workers...
Coming down a little bit.
We have some workers have power now and are going to be seeking higher wages. Does that come up in your discussions? Thanks.
So the topic of wages in the labor market and dynamics in the labor market is about as central a topic to our discussions as anything. I mean, it's very labor economics, and the labor market are utterly central. It's half of our mandate, so we spend a lot of time talking about that. I think there are structural issues that are really not for the Fed. And so we don't spend a lot of time, although we take notice of what's going on. But we're not involved in discussions or debates over strikes and things like that. But we look and we see what's going on, and we're making judgments about what it will take to get inflation down to 2% in the aggregate. And as I said, don't think that was about. Most folks would say now it wasn't really about wages at the beginning. And it's becoming more about that as we get into really service sector inflation, which is the part of the economy where we have seen the least progress.
Let's go to Mark for the last question.
Thank you, Mr. Chairman. Mark Hamrick with Bankrate. Wondering what your thoughts are now about systemic risk now that we're about 3 months past the failure of Silicon Valley Bank, and also specifically, what are the risks associated with commercial real estate as well as non-bank financials, and could you further elevate those risks with higher still rates, possibly for longer?
So we're trying to think where to start. I'll start with commercial real estate. Of course, we're watching that situation very carefully. There's a substantial amount of commercial real estate in the banking system. A large part of it is in smaller banks. It's well distributed. To the extent it's well distributed, then the system could take losses. We do expect that there'll be losses, but there'll be banks that have concentrations, and those banks will experience larger losses. So we're well aware of that. We're monitoring it carefully. It feels like something that will be around for some time, as opposed to something that will suddenly hit and work its way into systemic risk. In terms of non-bank financial sector, there's been a ton of work, and clearly in the pandemic, it really was it was the non-bank financial sector where issues really arose, and there's a lot of work going on with the administration, in particular, leading that to try to address issues in the Treasury market and in all kinds of areas in the non-bank financial market. But our jurisdiction at the Fed is over banks, actually bank holding companies and some banks. So that's really our main focus. In terms of the events of March, as I mentioned earlier, we will be carefully monitoring that situation. Our job generally involves worrying about a lot of things that may go wrong, and that would include the banks. It might be hard for me to identify something that we don't worry about rather than that we do worry about. So we're watching those things very carefully. And as we see things unfold, as we see what's happening with credit conditions and also all the individual banks that are out there, we'll be able to take, to the extent it's appropriate, we can take, if there are macroeconomic implications, we can take that into account in our rate setting. And so I guess that's what I would say.
Can I just follow up on the last part? That's do you risk further exacerbating those issues if you get up to another 50 basis points?
So that's, and I guess I meant to address that by saying, as we watch, we'll see what's happening, and if we're seeing the kind of tightening of conditions that you could be referring to, then we can factor that, because really we use our rate tool it really has macroeconomic purposes, so we'll take that into account. Of course, we have responsibility for financial stability as well, and that also is a factor that we're always going to be considering. Thank you very much.
I don't know if there's like a shot clock, or how do you know it's just to cut it over. Shot clock. Meh. He does cut it pretty quick though. All right, that was Jay Powell. Jay Powell. Interesting. So kind of a curveball. Met expectations, but then also surprised with the terminal coming up another 0.5%. So based on what he said, I don't know how to perceive it. I'll look back and review. Don't know if market will rally on that or not, really. Because the only surprise was hawkish. So we do still have data tomorrow, actually. We have jobless claims tomorrow at 8:30. Import price index, manufacturing, Philly Fed manufacturing. So yeah, different data tomorrow that could move it some too. Kind of wondering if that's marking somewhat of the top though. Very curious. Barbecue made it up pretty good. It's up 5%. Green candle. Got a green candle after that bankruptcy hearing. Or it's down 5% still. But so far we're closing higher than we opened. Is good. Now that Powell's done, we'll see where the market goes. It is power hour. We've got about 35 minutes left. Microvision. They offered shares. Yeah, share offering. Visa is up 27 still. Nicola's chart looks very nice. I want to chase, so I didn't get into it yesterday, and here we are today, 25 more %. You guys mentioned finger motion, 2%. Pretty big volume today on it too. Aero is up 12%. Overstocked, still taking market capitalization. That should be going to barbecue. Up 7%. Buys basically back to where it opened.
Until I get burned, stick with it, and that seems to be what's happening. I mean, a name like Tesla's up, I think, 14 days in a row. It just seems like those animal spirits are there, and volatility is low. And I actually think, like, as far as like risk management, if you want to be long, like, buy calls. Don't buy, you know what I mean? Like relative to stocks, relative to futures, options are not expensive, and owning calls has worked. That's what I would be doing now. If I owned a lot of SPY, I owned a lot of Qs, I just swap into calls. And, you know, if there's a banana peel, fine. You gave up you still own some calls, you lose a little bit of premium, but you're not giving up 40% of gains. Like that to me is the right trade for the next month or so.
All right, there it is. Okay. Always like the specific strategy sharing. Danny, head of options at Piper Sandler, always good to have you.
Thank you.
Thank you, sir. All right, coming up, let's talk with another portfolio manager here about how to stay focused in the sectors and themes that you're attracted to and that you think will work. If Powell's not going to get in the way of the economy, then maybe we get another chance to buy down some of the growth themes that last year got hit hard.
Did open up some plays, not sure if you guys saw those. I got a GNRC call and my Joby puts filled. I've got till January on the Joby puts. My GNRCs I have next month's July's monthlies. Wow, look at that volume on Logitech today. Head and shoulders being formed here on the SPY. Back to our algos now that Powell's done. These could be a little cup and handle. We'll see. Gets to the high of the day, I'll just short it up there. Make it easy. Barbecue, what the heck? A big flush. Big old volume flush down at 1850. Bounce back up to VWAP at 1930. Starting to see some intraday OTC volatility.
Joins us, portfolio manager at EcoFin. Michael, how does any of the language from the Fed chair or their plan over the next rest of this year, second half, affect what you do?
Well, it's very important for a capital-intensive business like renewables to have good visibility and predictability of interest rates. So as much as we can anticipate interest rates peaking, that will be a signal for the sector to really have faster, easier, and cheaper access to capital. And that's going to be very important for the sector. So whether it happens at the next Fed meeting that we have confirmation of peaking or the following one, I think it's important to start positioning ourselves for the after peak. And the sector has massively underperformed recently. Just if you look at the utility index in the US market is down about 5% this year, compared to a market up 13%. So, all of that really because of the headwind of the macro and the interest rates. And I think there are fundamental reasons for that to change substantially as we move forward with interest rates.
The outlook right now, if inflation remains elevated, I know that you specifically look for trades in renewables and in the energy sector. Is there an element to that there where there is kind of a secular trend to try and bring prices down that you can capitalize on?
Yeah, so look, if you look at the cost of equipment has gone up substantially over the past 2 years, driven by equipment inflation and logistics inflation, but a lot of that is rolling over. Take the example of solar panels. The key component is polysilicon, which is today primarily coming from China. This is down over 50% since the beginning of this year, and we expect that to continue coming down. Wind equipment in China also is the cost is coming down. More localization of that manufacturing supply chain is also going to help bring costs down. And so all of that's going to make renewable even more attractive and spur much more investment and growth.
Right now, what's the best way to capitalize on that? I mean, I know you would probably argue a fund like your own, but how concentrated is it? Are there particular players that are really leading this? We've got a couple stock picks I know that you like on the screen here, but for the everyday investor, should we be getting sort of a broad exposure to this? And should it replace our old energy portfolio of oil and such?
Well, I think the easy way is to play the utility sector. It's trading at a discount to its 5-year average, discount to the market, despite the fact that the EPS growth of the sector is going to go 3 times faster over the next 3 years than it has been over the past 5 years. So you're paying less for something that's going to grow much faster. And if history is a good guide, when a sector or stock moves from being value to being growth, you can make tremendous amount of money. So I think we should start to position ourselves within the broader utility sector and the renewable space for that transition to happen. And this growth that I mentioned, it's just going to keep accelerating on the back of further adoption of electric vehicles, heat pumps, replacement of coal, in the US, but around the world by renewables. So that's going to create substantial acceleration in growth for all these companies that are on the screen and that I mentioned. And so you
Stream didn't freeze. Oh yeah, TD stream froze. What happened? You mean today? Get JPAL, baby. Mullins down 20. Yeah, what was the news on Mullins? Gotta be something. Lawsuit? I don't see anything bearish. Push the stream. Okay, I need to pull my CPU out. I underclocked my CPU more.
Over the last year,
I underclocked like
to now, the average
50
VIX
or
was
whatever.
about 22 and a half, 23.
Like
So
50.
to see it down at 14 after this massive rally that we've seen in the NASDAQ 100 and the S&P 500, not surprising here. You've seen equities rebound here a little bit. So the uncertainty is kind of off the table at this point. I don't think it's going to last. due to the fact that, the rallies that we've seen have been pretty parabolic at this point. But expect some additional choppiness as we dig through maybe some of the commentary from the Fed. I just think some of the decisions made, and the unanimous decision at that, pretty substantial at this point because
Still see Head and Shoulders there.
All right, yeah, I mean, this is kind of what we're discussing. There's a lot of ways, that the decision itself might turn out to be the right decision, but the way it's framed and the doubt that it casts onto what's important to the Fed is, to me, what's particularly hard to
That was me, sorry.
wrap my head around. Either maybe they don't think their stuff, their tool really works, or they don't really prioritize inflation at 2%. They're not willing to push the economy to strenuous limits. Maybe
Right, if you opt, though.
the economy's about to roll off a cliff. There's just something doesn't add up, especially when he's told us before that we can effectively ignore the dots, and then today he's like, dots, 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 dots.
Right, yeah. I think the lag effects, I think, is what they're more concerned about with anything, and you mentioned it. They think that maybe we're going to see some weakening in the overall economy.
Yeah, not enough time.
At 1% as far as a growth rate by the end of 2020.
I want to give back my gains to the stupid trade now.
Because that could be one reason, but then he says he's data dependent. Nothing's showing that in credit spreads. Nothing's showing that in financial conditions. Stock market's going berserk again. So what's he looking at that says the economy's going to roll over?
I think that you look at tightening credit conditions. I think that's going to be really important. He did kind of mention and kind of expand a little bit on the commercial real estate side of it. That's going to hurt some more regional banks.
Speculation.
That are focused on
Total speculation,
that.
though.
But even if even with the pause, the tightening conditions after 10 rate hikes in a row are still taking effect in the overall economy. And I believe that the Fed members, and even though it was a unanimous decision, there are people that wanted to hike in here. He just kind of probably addressed it and let's pause. The market expects it. We don't want to disrupt the equity market at this point and wait and see what the lag effects do playing catch up. We've already seen the consumer trends are starting to slow. We're going to talk about some unusual option activity in Target.
All right, what you got? Target, people are buying it though. But here's
Barbecue flush.
None of it adds up because everybody's Target.
Intraday volatility is big on stock today.
I mean,
1825, 1830.
Target especially, there was some chatter released by an insight report, activist insight report, that stated that, hey, Target might be ripe for some activist investor intervention here. Look at that move that we've seen. Still down 10% on the year. They guided a little bit lower. Foot traffic still starting to decelerate. Just remember, on the 9th of this month, the stock got downgraded. Price target got cut down to 130 from 177 at Citi, based on weakening trends and consumer demand starting to wane. So that plays into our discussion about maybe the economy really will start to roll over. Maybe people will still take those trips, but if you've seen receipts from the government that says revenue the receipts from taxes are starting to pull back pretty significantly at this point, that might be that warning sign that the consumer is really pulling back, and maybe the economy does roll over at this point because of that uncertainty out there. And Target's been in the crosshairs, but this stock is up purely on the speculation that an activist investor might get involved here. Bill Ackman's name was raised in this report. Maybe he'll get back into this because he did it once in Target.
You got your bounce on Target.
But it's definitely lagging.
Those of you that were selling premium on it.
July 135 strike calls. Saw a trade buyer of over 6,000 of those for an average debit of 350. So over the next 37 days, that break even 138.50. It's only about 3% above the current share price. Call volume pretty substantial in Target today. 4 times normal daily average volume on a typically lower volume day going into this Fed announcement today. But this is all based on the fact that there's some news. There's rumors out there that an activist investor might get involved because this stock is severely underperformed in the retail space when they probably should be doing well. But if discretionary items aren't selling, maybe there's some substantial credit to the fact that maybe the consumer is pulling back.
Okay. Target finally bouncing off the lows. How come the Nike move you see in options is fading it despite a 6% pop.
I think maybe they're taking advantage of this move. Now, Nike has earnings on the 29th of this month. I think this is going to be a big report because they've seen softening demand in China.
Right.
We keep talking ad
That's why it's off the highs, right?
Yeah.
People think China's slow. Nike's not going to do well over there. They love Nike.
Yeah, that rebound in China is not taking place. But the bounce back is being attributed today to Google Trends data and mall traffic numbers that came in slightly better than anticipated because the expectations are so low. So you're seeing that pop of over 5% in those shares today. Fell 17% in May. Remember that. Nike got hit pretty hard. But they've got earnings on the 29th, and I think this unusual option activity sets up for maybe some disappointment during that because they did the June 30th weekly option series. We saw some unusual option activity. Trader bought 5,000 of the 105 strike puts for a debit of 235. So that break even at 102.65 over the next 16 days where you'll capture that earnings event. That's 9% below the current share price. That's about what the one standard deviation move is going into that earnings report. So getting a nice pop here, but what that allows is somebody that thinks that these earnings aren't going to be that good, it allows them to buy these puts at a cheaper price because of the pop today.
Okay. Interesting. All right. So a couple interesting moves here in the retail world. The fact that stocks can move on their own stories on a day like today. We talked United Health earlier. Nvidia's having a good day. Some are up, some are down. There's a lot of stock specifics. It kind of feels like some of the water underneath the boat, got a little bit wavy, but there's no major tide going in or out because of the Fed today. And that to me probably means, as Danny and I were talking, path of least resistance holds. VIX sub 14 now. Bulls in control. Thank you, Tom. All right. Coming up, let's talk some more about some of the news of the day outside of the Fed, and then we'll get right back to the Fed.
Price coming down a little bit. 15 minutes to go. And head and shoulders here on the hourly too. We'll see though if we're just still in a buying channel. Might take the short after the futures market opens back up at like 6. It's at 6. It's not like 6. See if the market makes a move back down into some of this liquidity zone at least. Yeah, I checked out Finger after you mentioned it. A nice little rally today. Gundlach says the S&P 500 is really overvalued. Stock market showing signs of mania. The Fed follows its started path. May break something. All bears on TV. Bad sign for bears. What? Fed is overstating inflation risk at this time. Real economic indicators look really bad. Don't think the Fed will continue to hike. You got it wrong there, Gundlach. Calls Fed's decision a hawkish pause. Powell says, I do expect there will be loss in commercial real estate. Did he say that? If we see kind of tightening conditions, we can take that into account in financial stability. Lots of review from Powell. Well, I won't read those. He did seem like he answered a lot of questions. I don't know how they figures out how long he stays and how many questions get answered. Coming down a little bit here. Missed that part. Intraday moves on barbecue is crazy.
I mean, that continues to invert even further now. We're looking at 94 basis points of inversion between the 2 and the 10-year. So again, you know, this announcement today with the possibility of 2 more hikes by the end of the year has impacted the yield curve quite significantly today, and that extreme continues to be, you know, somewhat indicative that, you know, we're going to see some significant slowing here at some point. But you know, the time frame continues to shift around on the yield curve. But nonetheless, looking at the price action today, the selling pressure on the short end of the curve pushing those yields up, and back end of the curve actually rallying, indicates to me that you know, the market's adjusting now for the higher probability that rates are going to stay here through the rest of the year and potentially even move higher.
So the potential then for bond yields to follow, do you think that that's kind of what we should prepare for here, even as bonds are kind of unched today? We had that move yesterday on inflation, which was kind of reminiscent to some of the type of action we were getting before bonds really went wild, 2021 to 2022. Yes. You know, you get an inflation print that looks kind of innocuous and just yields rip anyway.
Exactly. Yeah, Oliver. Yeah, it is. You know, the extremes in the inversion, I think, are going to continue to create some volatility in the market moving forward. There's so many uncertainties. I mean, you and Tom were talking about a couple of things before I came on. You know, the one thing that the Fed did kind of briefly mention that kind of got brushed away, I was surprised that they didn't get more questions about it, was the regional bank issue and the possibility that there's still some more further fallout. And that's one of the things I think that they're watching very closely as to why they chose to pause at this point, even though they expect a hike in the future. But that's still dependent, I think, moving forward. And there's still some uncertainty surrounding that they're still trying to evaluate before they, you know, maybe probably take their next steps. And that's one thing that, you know, from, you know, underneath the surface, that was so heavily influential just a few weeks ago that could flare up again. I think that's one possibility here, Oliver. And also, you know, the Fed also indicated...
There's a SPY. 10 minutes to go. 10 minutes of Fugazi
or I should say press
to the downside.
You know, they're still kind of evaluating the incremental shift as far as, you know, the impact of the rates to this point, the rate hikes. So I think there's a lot of variables before the July meeting. The one thing he did say, it's live, so that would lead you to believe that at least to this point, we could see another quarter point hike in the July meeting.
Dan, I mean, should we take it seriously at this point? Because he multiple times today he said inflation's not going their way. He said that they need to get inflation down. I just had it, pulling up the
Head and shoulders playing out.
where he specifically talks about how it's maybe even not responding to their tools. That's it. That's really what stood out. He says that it has not so far reacted much to our existing rate hikes, and we're going to have to keep at it. And then he skips. So why do you suddenly think something's going to change in 2 months?
I concur. I agree. It is a very mixed message. I think that, they enunciated a few weeks ago, coming off of the disruption from the regional banks issues, that they were most likely going to be on hold. The inflation data was enough at this point to allow them to do so, even though I think a few of the members didn't want to. But I think they boxed themselves in this time. And we'll see how July plays out. But you're right, not a lot's going to change between now and July. The only thing that potentially could change would be further damage in the regional banks. The tightness in the credit markets continues to persist. Are we going to finally see maybe some of the fallout from the commercial real estate market that, a lot of people continue to beat those drums? And certainly it appears that that's a very possible scenario as we move to the second half of the year. So I think that's why, Oliver. But at the same time, they did, again, point to the labor markets, and it's a conundrum for them. He even said that in his press conference, that the strength of the labor markets is something that they're going to continue to raise, probably based on that alone, particularly, if they just don't see any slack in the labor markets here over the next month.
All right. Good interpretation. I think that's very fair. Thanks, Dan Deming.
All right, Oliver.
Good to have you today. Managing partner at KKM Financial. Let's get straight into our Schwab panel with less than 10 minutes left, less than 9 in the session. Nate Peterson and Cooper Howard are with me. Nate's the Director of Derivatives Analysis at Schwab Center for Financial Research, and Cooper's a Director and Fixed Income Strategist at the Schwab
There's
Center
the
for Financial
Fugazi.
Research. What's up? We got a couple days
Just a
before the
wick
Fed.
down.
Cooper, get us started here. What'd you think about Powell today?
I thought it was a relatively mixed message. It was a little bit confusing. Obviously, there's been the case for a lot of people to come out and be critical of what the Fed has done. But really, Oliver, our job isn't to suggest what the Fed should do or shouldn't do. It's to look at what the Fed says they're going to do, try to anticipate what they're going to do, and then try to anticipate, what will the markets do based off of that information. And if we take
This
two
guy,
data points,
Clay.
we look at what Powell has said that they're going to do.
That was his
or
nickname in high
said
school.
intend to do, either via the dots or the statement, it does appear that they're going to continue to hike interest rates, even though this was a pause. You can also look at what the market is expecting. There's over a 60% probability of an additional rate hike coming next year, or coming in the July meeting. So I do think that indications point to an additional rate hike. They did leave the door open, obviously, to two potential rate hikes, or at least one 50 basis point rate hike. I think it'd be interesting to see a 50 basis point rate hike. I don't necessarily anticipate that at this point, but I think in terms of what it means for the market, so long as the Fed continues down this path of hiking interest rates and keeping them at an elevated level, which that's what they have indicated that they're going to do via the dots, then we should continue to see the yield curve be deeply inverted. It moved even further into an inversion today. So I think that that's one of the things that we're looking at going forward. In terms of what does that mean for investors, it tends to be that when the yield curve is deeply inverted, growth tends to slow. So we do suggest staying up in credit quality and focusing on higher rated issuers rather than trying to swing for the fences in this environment now.
Okay. The reaction here in stocks, what do you make of it? Nate, well said, Cooper, I think here on
Up on 5 minutes.
interpretation for it. What about the way stocks have interpreted the message so far, Nate? Any clarity that you see in the equity market?
Well, I mean, near term, we are overbought. If you look at the RSIs, I mean, that's one thing to at least take into consideration if you're a trader. Number two, I think coming into the meeting, I think the expectation was that basically, okay, the Fed's done, or they're going to give us one more. Now we might get two more. And if you're bullish, you might be thinking, well, look, the Fed's dropped 500 basis points on us in the past 15 months, and the economy has taken it just fine. What's an extra 25 basis points to that? If you're bearish, I think that you're still thinking that potentially there's this lag effect that hasn't fully baked into the economy yet. We're still in that marination process. It's likely the reason while the Fed is trying to slow down that aggressiveness. But right now, I think the market's kind of contending with, look, how was the economy able to take on these 500 basis points and still be as resilient as it has? Well, you go back to the pandemic. You look at the $5 trillion cash bomb that was dropped on it. You look at the Fed at the same time, the Fed funds going to zero at the same time, housing market going to all-time highs at the same time, stock market going to all-time highs. So what a unique environment here that you have this Fed that's coming this aggressive, and it's trying to thread the needle a little
See
bit.
that barbecue didn't hold up above 20 cents.
And make sure that inflation is actually
I'm
coming
pretty
down.
excited about that.
Because I think the reason that that Chairman Powell was a little bit more aggressive this time versus the expectations is they don't want to let their foot off the gas too soon, and then inflation comes back up, and then they have to change their narrative again.
Didn't they just let their foot off the gas, though? I mean, didn't they, or the brake, whatever, I guess whichever side of the, the image, but when he says that inflation hasn't come down the way they want, and he goes, we're going to keep fighting it, but not today.
I think they're respecting 500 basis points in 15 months, and they're saying there is a marination process, and we don't want to break the economy. We just want to kind of shake it up a little bit.
Does Powell have the data to support that, Cooper? Because this is where I keep running into walls. I think that's a good explanation. I think that's probably what's going through Powell's mind. He's probably going, yeah, let's let these hikes marinate. But he didn't get the fallout from the regional banks that he thought we were going to get. I mean, aren't credit spreads basically right where we were at SVB, Cooper? Or am I wrong?
I'm back up to VWAP.
Out too high right now, and I think if you do look at the data, obviously the Fed's two mandates. The Fed's two mandates are unemployment, stable employment, stable prices. And so if you look at the price side of things and inflation side of things, it is moving in the right direction, albeit it's a slow process to get down to the 2%. We saw the PPI numbers come out today. They declined again for the 11th straight month. That's positive news, or I guess I should say the pace of increase was lower for 11 straight months. So that is positive news. It is.
Yeah, I think I'm gonna start doing the, not start, but look for some overnight exposure on the futures.
So that's not indicative.
Probably open up one at 6 o'clock. Check it again at like 8.
Correct measure to look at. So
before bed, probably add.
That they're looking at, but
add a 2 or 3 contract.
Probably going to continue this path to try to fight interest or try to fight
inflation. 1860.
And to Nate's point, we have hiked by 500 basis points in a very short period of time. This has been the fastest
10,000,
hike since
40,000, 50,000.
1980s. It is going to take some time to say, well, let's sit back, see how that affects things, and take a step back and kind of go forward from there. So I think that the whole message that the Fed has been doing.
Okay, I don't want the bell today.
Hold, recalibrate.
You've been spared, but I will give you the ding. Sorry. Yeah, so there you have it. SPY, almost unchanged, 0.04%. Nice intraday volatility for some trading. I did take some trades today. What did I do? Oh, short here. Head and shoulders. Stopped out. Shorted here on this head and shoulders. And didn't take profits here. Stopped out at the handle. That's inverse cup and handle. Got back in it, seeing that that's a cup and handle. Could have closed, reopened. Oh well. Took this short down to here somewhere and closed it. So closed it before the Fed. No reason to hold that risk, because this could have very easily gone the other way. It sold off. Buy's ripping now. Last second. Wow, look at that buy on close. That's the bell. The silent bell. Sometimes when it starts going a certain direction, I just jump on it for the FOMC. I didn't, I just chilled and actually bought, went long on a couple of these dips and sold out here and here. Actually did well on those. And then eventually bought in some down here and held up till VWAP. So that was a nice bounce trade. And that was it on the futures. Trades today, options trades. I shared them on Discord if you're not on there. And in chat. I will review them here. BBBYQ, down 14.3%. Pretty big down day actually. At the bankruptcy hearing. Nothing that I noticed that would be necessarily bearish for us, but yeah. Still upset I didn't close at the, that was my last good exit, the fail of that bull flag, the easy indicator. We just hit a high, it was looking nice, and then failed it. Well, here we are, 1831 down 14.3. We've got some deadlines still. It'll probably be a couple more weeks till we hear anything. Yeah, I'll review the different write-ups, see what people extract bullish from the filings. TA wise, it's not the greatest, but it doesn't really matter a whole lot. Final support would be 15 or so. 16, let's see, yeah. You don't want to break this level here. You don't want that MACD to flip bearish. I like to keep that green. But it's gonna have to start climbing for that to stay green, because even just tomorrow that might be red. Yeah, it's not looking great. Have that head and shoulders back here. Right here, let's see, where was it? Here, shoulder, shoulder, head. Another one, head and shoulders. Never know when that's going to end though. Bottom of that, that's the thing. So, this could have been the bottom of it. This could be the bottom of it. Maybe it's further. Still no reversal patterns though. Could be setting up an inverse head and shoulders here though. Head, shoulder. See if we make a 20-cent support sometime this week for the other shoulder. So you can do some TA on it. Momentum's down though. Momentum still sucks. Bad. So it closed when it was still good. Oh, need a shoulder up here, breaking outside this channel. Firm and uptrend back intact. True, tomorrow's GME shareholder meeting. So I guess I do have long exposure for that. Only $14 worth of risk. See what that entails. Ryan Cohen. Yeah. Stick around on stream for that tomorrow. We'll be streaming it, I think. Maybe. GME does have an RSI divergence, which is bearish. However, price action still pretty bullish. It's still in this pretty clear uptrend. Almost can't even see this ridiculous drop and rip. There's a gap to fill here. Maybe it'll fill his gap first. Yeah, I have higher highs here, lower highs in the RSI. The shareholder meetings haven't typically brought volatility, but potentially, maybe it will. I really need to be reviewing my trades. I was thinking about yesterday. Like yesterday I traded all right, but somehow I lost a good amount of money in futures. I'm like, I need to review those. Need to be more thorough about reviewing them. This is lagging right now. Can't click it. Watch. I moved it. See? Big lag spikes. Yeah, sucks. Here's the futures trades today, so not what I said. Just look at it at the same time. But today, The heck did I do that? Looks like I went short at 954. Closed out at 958. Oh, for high of the day, maybe? Yeah, went short here, closed it out here. Went long here. Break. Never good. Closed here. Failed. Short. Golfing candle, head and shoulders. Closed here when it failed. Went short here. Or no, here, somewhere in between here, 1133. Added to it at 1210. Oh yeah, because I didn't think I had enough margin. I tried to add and I could. So I added here. Not at a good time. No, I added here. Yeah, that's right. That's why I got stopped out. I was just like testing it. It let me open it. So it didn't wait. Anyways, added here. Stop back out up here. So, good close on VWAP. Anyways, that was just a, yeah. I liked this entry though, and I liked what I was thinking about for the exit. If I didn't add there, I wouldn't have been stopped out. That's the thing. Since I added, it brought my average way down, so it stopped me out. Otherwise, I was planning on just holding through whatever. But I hadn't seen this inverted cup. I wasn't looking for that even until after I added, and I'm like, oh, this inverted cup is gonna get a handle, potentially. So, want to cover, right? Wait, what? Oh, added back in short here, so I stopped out and then added back in for this handle. Yeah, 1222. 108, bought to cover. Oh, on VWAP, that time I played it better. I closed on VWAP. And then 110 I actually reopened. I was breaking VWAP. Which maybe isn't the best. Bought to cover that one at 24, so down here. It worked out, but maybe not a great trade. Then 2 o'clock. Yeah, on this candle I bought. Yeah, 201 bought. Closed out. It was literally 30 seconds. Held it for 30 seconds. Did well. It was a just somewhat lucky, I guess, but it was basically full-bodied candle, just bought, and it just, you know, with amongst all that volatility. Sold, bought at 209. Oh, I did it again. That time I didn't close it. I decided to set a stop in case I did get close to the bottom. Let it rally. But if I closed it, I think I was up like 150 bucks on those futures at one point, but it's okay. So stopped out on that one. But my stops are with a tiny bit of profit. It's not like a big loss stop. That's 209 and 212. 212 bought. No, sold at 212. Oh, that was the stop out. Bought at 226. So yeah, on this candle. Bought. Sold at 47. So at VWAP. That was probably the best trade I had today. And I scaled out. I sold one at a time around VWAP. I didn't get this move up here, but sold around VWAP. Then sold short at the end of the day, and then bought to cover for a tiny gain right in this chop. So pretty good. This was kind of a technical lag. All the apps indeed. This one here is kind of a technical failure. Otherwise, I would have had that would have been a nice trade. If I'd seen the inverse cup sooner, would have closed that potentially and then reopened. Instead, I added it at a stupid spot, which then ended up stopping me out. That was that mistake. In the morning, it wasn't too bad. I had good reason to enter those plays, and then I just stopped out because they failed. This one at VWAP, it worked, but it maybe wasn't a great trade. And the FOMC, those worked really well actually. I only have, let's see, I have Streamlabs, Discord, Webull, and Chrome open, so not many programs. I do have about 40 tabs on Chrome open, so, but the point is it used to not give me any issues, so, and I haven't like added a bunch of tabs. And my CPU has never been, it still runs low, but the temperature spikes on it. And it also spikes my usage from like 45% to 90%, I think. Yeah. Anyways, thank you guys so much for the support. Thank you for the tip today. LL, he said, great job. I appreciate the hard work and keeping the volume up. Love the channel. That was during bankruptcy hearing. And thank you, Ace, for the gifted memberships today. And thank you guys for your new subscriptions. If you have recently joined, make sure to jump on our Discord. It's free, pinned in the chat. And if you are now a member, send me a DM on there. I'll give you the Happy Crew roll. Did get 65 likes. Someone retracted their like right after you messaged that, Christopher. Don't say another word. Thank you guys for 65 likes. Say thank you to GME. Move on to the next one. Amen. Thanks, Jay in the Bay. Thanks, Christopher. Thanks for sticking around, guys. Thanks, Jack, Ace, Poison, Tony. Thanks, Tony. Thanks, Sterling. I didn't show you guys. Let me show you guys my option plays real quick. You guys like that? You guys like me reviewing my futures trades? Pretty embarrassing because they're usually pretty awful. So, like, I should probably review them. So I might as well review them on stream and just let it all hang out there. Thanks, trader. The options we did. Put these on, thanks, Kitty. Put these on Discord also. So, oh yeah, I guess I got closed out of that SPY put. I forgot about that. Bought 23 Joby January 19, 2024, $3 puts. Oh, I guess I got 29 of them. And then bought one Generac July 130 call for your boy Sterling Archer, aka Owl Boy, aka Woohoo. Who are you? Thanks for your support, guys. We'll see you on Discord. Out.